indicators, okay? So we got a candlestick chart here, all right? Let me just go ahead and draw it in a line format, okay? You have squiggly lines going through a vertical chart. You have to understand that it was not designed that way. And if you continue to rely on said squiggly lines, such as EMAs, MACD, SMA, if you continue to rely on these things, you will not be successful. You will not be successful on the charts. You have to understand that the charts can only go one of two ways, up or down, okay? The candlestick, I want you guys to understand that these candlesticks can only move in two directions, up or down. And everything is based off of levels. Why do you think you see price reacting at the same area? For example, say you have market going in an uptrend, okay? And market found an area of resistance, okay? So an area of resistance is going to be an area where people decide to sell at, okay? So you're going to have sellers here. If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance, you know? Very common. You have setups like this for a downtrend type of setup. And then for an uptrend type of setup, could definitely look like this. Price might bounce here. And then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again. Boom. This area of support made this area of resistance created here. Okay, so I make it simple for you guys, man. I do not want you guys to be struggling. Okay, there's going to be times life is going to be hard. The charts are going to be hard. People are going to be doubting you. People are going to be hating you. And there's going to be times you might not even believe in yourself. And all that doubt has to be killed. Okay, and indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, no indicators. Okay, no indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay, that's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. Very, very passionate about teaching this, and if you want to learn more about it, And if you want to get a free stock watch list, should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace. Thank God. Let's go and let's talk about what this means for the future of trading and how new traders can go ahead and jump into the market a lot easier now. So let's understand what the PDT rule even is. The pattern day trading rule, as defined by the Financial Industry Regulatory Authority, the FINRA, it was a crucial regulation that governed day trading in the United States. Instituted in 2001, it was created to protect inexperienced investors from the substantial risk of frequent leverage trading during the dot-com bubble. So they didn't want people just throwing in all their bread and losing it all for no reason. Okay, when a bunch of new companies were hitting the stock market. Okay, so the pattern day trading rule was pretty much created in order to protect people. So the $25,000 equity requirement. So to be classified as a pattern day trader, okay, PDT, you need to execute 4 or more day trades in a margin account within a 5 business day period. Nowadays, there's 2 types of accounts. You have cash accounts, okay, which lets you trade strictly with your own money. And then there's margin accounts, okay, which lets you trade with some borrowed funds when it comes to the broker. Okay. And once flagged, your account was required to maintain a minimum equity of at least $25,000. And if the balance dropped below this, day trading was then restricted. And what's a day trade in the first place? A day trade was defined as the purchase and sale, or sale and purchase, of the same security within the same trading day. So let's say, for instance, I purchased Stackmode stock for $30 a share, and I sold it for $34 a share within the same day. Let's say I did that all on Monday. Okay, that is a day trade. If I bought Stackmode stock for $60 a share and sold it for $80 a share, okay, and I bought $60 a share on Monday and I sold $80 a share on Friday, okay, then that's not going to be a day trade, because that was days later I sold. I bought on Monday, sold on Friday, not a day trade. But if I buy on Monday, sell on Monday, that's a day trade, okay? So if you buy and sell within the same trading day, that's a day trade. And this rule applies to stocks, options, and ETFs. And the purpose of this rule: the primary goal was investor protection, and the rule ensured that traders engaging in high-risk strategies had sufficient capital to absorb potential losses, thereby protecting both the individual and their brokerage firm from financial instability. So the historic regulatory shift of 2025. So as of September 2025, FINRA's Board of Governors has officially approved amendments to replace the pattern day trading rule. Exciting. This is one of the most significant changes to day trading regulations in over 2 decades. And the move comes as a response to the rapid advancements in trading technology and real-time risk management capabilities of modern brokerage firms. So the fixed threshold is now gone. The rigid $25,000 equity requirement for day traders has been completely eliminated. This removes a major barrier for entry for retail traders. And retail traders, if you ever hear that term, it's just people who just want to get into the market. Okay, not like hedge funds, banks, or anything like that. Just individual investors a lot of the time is what retail means. So individual investors and individual traders with smaller accounts who were previously unable to engage in frequent trading can now do it. So replaced by intraday margin framework. So the old rule is replaced by a more dynamic and flexible intraday margin framework. This new system applies existing maintenance margin rules to a trader's real-time intraday exposure, making it a risk-based approach rather than a capital-based one. And pending SEC approval. While FINRA has approved the change and must still be filed with and formally approved by the U.S. Securities and Exchange Commission, SEC, before it can fully be implemented. So traders should continue to operate under the existing PDT rule until a final effective date is announced. Okay. So FINRA approved the change, and we're still waiting for it to get approved. Implications for traders: a new era. The removal of the PDT rule represents a seismic shift for retail traders, particularly those with smaller capital bases. It promises a more accessible, albeit more complex trading environment. So lower barriers for new traders. So the most immediate and profound impact is the ability for new traders with accounts under $25,000 to execute frequent day trades without restrictions. This democratizes active day trading and opens the door for a new generation of market participants. More dynamic buying power. Under the new framework, buying power will be directly tied to the risk of positions a trader takes, and highly volatile securities or concentrated positions will consume more margin quickly, while stable assets will allow for more leverage. This requires traders to have a better understanding of margin mechanics before you lose all your money and blow your account. An increased importance of risk management. Since the fixed capital floor is now removed, risk management becomes paramount. If you don't follow your rules, if you're not disciplined, if you don't humble yourself, okay, if you don't wake up, pray to God, study the charts, work out, have a strict routine, journal all your trades, you won't be successful. Okay, you have to be extremely disciplined when it comes to this game. And it's about keeping up this bread, keeping up getting this money year after year after year. It's not about just making 7 figures in 1 year. It's about doing it again the next year, maybe scaling to 8 figures, 9 figures, and pushing yourself further based off the discipline consistency. Risk management is going to become paramount. Okay, the more power that you have, the more power you're going to have to control. And traders need to be vigilant about their intraday exposure to avoid margin calls or forced liquidations. Forced liquidations is where the market is going to pretty much automatically close your position for you. And if you don't pay the money back that you owe the broker because you're paying with leverage, which means they're giving you capital, then you could be subject to court fees and they could owe you money, or you have to owe them money. Okay. So diving deeper into the intraday margin rule. The intraday margin framework is a sophisticated replacement for the outdated PDT rule. Instead of a blanket restriction, it uses real-time metrics to determine a trader's capacity for risk. And here's how it works. So real-time calculations. Brokerage firms will now calculate and enforce maintenance margin requires throughout the day. This provides a more accurate and responsive measure of a trader's risk level. So position-driven leverage. Your trading leverage will no longer be static. It will fluctuate based on the specific positions you hold, their volatility, and the concentration of your portfolio. So for example, a highly volatile tech stock will consume more margin than a blue chip utility stock. And the impact on different strategies. This can make strategies like scalping or fast-paced equity trading more viable for smaller accounts. However, it also introduces a new layer of complexity, requiring traders to understand the specific margin impact of each security they trade. So here's an example scenario, trading under the new rules. So let's consider a practical example of how the new intraday margin framework might work for a trader with a small account. So let's say, for example, Alex, okay, let's use that name for example. Let's say Alex has a trading account with a balance of $5,000. He wants to execute more than 3 day trades in a week, which was previously impossible under the PDT rule. So in the old rule, Alex would only be restricted to 3 day trades. He could not execute a 4th one, regardless of the quality of the signal or his risk management, okay? Because it's 3 trades in a week. Now with this new rule, Alex can now make a 4th, 5th, or even 10th day trade, and his ability is no longer limited by a number of trades, but by the intraday margin available in his account. And his broker monitors his risk in real time. And if he takes a position that's too large or too volatile for his account size, the broker system will simply prevent the trade. So risk and key considerations for traders. While the new framework offers unprecedented freedom, it's not without its own set of risk. Traders must be prepared to adapt their strategies and mindset. You can be subject to intraday margin calls, where unlike the old rule where you were protected by a fixed floor, you may now face intraday margin calls. If your positions move against you, this requires immediate action and could lead to forced liquidations. And education is going to be paramount. Understanding concepts like maintenance, margin, concentration limits, and intraday exposure is now a non-negotiable part of a day trader's playbook, and a lack of knowledge could lead to significant losses. And firm-specific rules. While FINRA sets the regulatory minimums, individual brokerage firms are free to impose stricter rules, and traders must be aware of their broker's specific policies, as these can vary significantly. And the removal of the 25,000 PDT rule, it's really just a monumental step towards monetizing day trading for brokers so they can make more money. And it's a monumental step towards modernizing day trade regulations, making it more accessible for everybody. Okay, so God is good. It's an opportunity for you to come on the charts and make some money just by being disciplined. Make sure you get informed. Head over to Stackmode Network for all trading education. And this rule is going to make trading more accessible. Okay, it's going to bring more volume to the market. More people are going to start trading, inshallah. Okay, and it's also going to come with the increased amount of responsibility. With more power comes more responsibility. Okay, love you guys so much. Stay prayed up for God. I'll catch you in the next one. Keep grinding. Peace. All right, Stackmode Chris here, and this is going to be everything that I wish I knew when I started buying and selling stocks within the stock market. So it can seem daunting, but it's definitely a powerful way to build wealth over the long term, and it requires a lot of patience, humbling yourself, being close to God so you don't lose yourself or your sanity, and just being disciplined. So what exactly is a stock? A stock is also known as an equity, and it's a security that represents an ownership stake in a company. And when you buy a company's stock, you become a shareholder, and you own a tiny fraction of that business. And as a shareholder, you're going to be entitled to the portion of the company's earnings, okay, so the company's money they make, and assets, proportional to the number of shares that you own, okay? So the more shares that you own of the company, the more piece of the pie you'll have. The primary goal of most stock investors is to profit from the appreciation of their shares over time as the company grows and becomes more valuable. So imagine this, for example. So if I have a pie, okay, let's say the pie is called Stackmode pies, okay? So Stackmode pies, the name is going to be the stock, okay? Whatever the name is the stock, okay? So stock is essentially the name, okay? Say I own 50% of Stackmode pies and I own 5 million shares, okay? So shares are going to be the percentage ownership, okay? And then there's going to go ahead and be directional bias. So if I said I was going to hand out 4 slices of pie today and I was correct, then that's going to pretty much be an options contract, okay? A stock options contract. So options contract, you're getting paid to pretty much predict price within a good time manner, okay? So that's the difference between all of them. So for example, imagine a company, okay, Stackmode Network. Let's say we decide to sell 100,000 shares to the public, for example. And if you buy 100 of those shares, okay, you'll then own 0.1% of the company. And if the company's value grows from 10 million to 20 million, your shares value will likely double as well. So having an investor's mindset is going to be extremely important. Don't hop on the market thinking that it's a quick money grab, thinking that it's a quick get rich scheme. No, it's going to require discipline, day after day after day after day after day after day after day, repetition, not giving up, feeling like a failure. Okay, so many times where I just felt like I just wasn't for me, felt like I wanted to stop and was just feeling unmotivated, but I kept pushing through. I knew there was an end goal to it. And now, alhamdulillah, we're seeing green profits. Okay, so having an investor's mindset, having a resilient mindset is going to be extremely, extremely important. You've got to be patient. Okay, always be working on some other business or something like that while you're in a trade. Okay, you can't sit there having anxiety about the trade all day. You can't put yourself in lock. Okay, you got to keep going, keep flowing, keep building the wealth. Okay, inshallah. So investing is not about getting rich quick at all. It's about building wealth patiently and systematically and logically. And the biggest enemy to a new investor is often just their own emotions. Okay. So key principles of the mindset, long-term perspective. And think of terms and years, not days or weeks. Short-term market fluctuations are normal and often unpredictable. And true, wealth is truly built over decades, not quarters. Even if you run up $8 million, for example, in 2 years, okay, if you're not disciplined, if you're not structured, you don't know how to continuously win trades. Let's say you hit a couple meme coin plays, right? If you don't know how to continuously win trades, put the money away for taxes, budget, reinvest, you could end up definitely destroying that. Okay, you could destroy any amount of money by being undisciplined. Okay, so have a long-term perspective on it and avoid emotional decisions. Do not panic sell when the market drops. So the left to right chart. Okay, if the stock market or crypto market goes down, understand that inshallah, especially if it has value or something called market cap. Okay, market cap is going to show you the number of how valuable a company is. Okay, so if something has a high market cap, okay, and certain things occur on all of them, then you know it's also going to be something that you want to be looking at too. Okay, so a lot of the high market cap stuff can have decent volatility, okay, and embrace that. Okay, the market's going to go up and down, and volatility is a natural part of the investing landscape. And you can view market downturns as potential opportunities to buy quality assets at a discount, also known as the dip. Okay, so if the dip is happening fast, people think price action is just willy-willy. Okay, so if you see your 4-hour candlesticks curling upward, daily candlesticks curling upward with closes, you know that you might be able to find the low. Make your take profit an area of resistance or support above current price. Okay, and just take your time. Okay, so taking my take profit is something that I wish I stuck to. I would hit take profit, but sometimes I would get greedy, hold past it, okay, or try and make 10 bands in a day instead of being happy with the 900 that I just made. Okay, I've had instances like that too. Okay, so it's about instances of being grateful, and this is why just reading the wisdom that God has left here for us, Quran, etc. So it's really just gonna help us put everything together and lock it all down. Understand, like, okay, I can't just be playing with my money emotionally. I actually got real people to protect and provide for. I gotta be serious with my trading. I gotta be serious with my money. Okay, and trade with this mindset. Never trade with the mindset of, oh, I'm trying to make some money. Not trade with the mindset of, I'm not gonna lose money on this trade. Okay, and do your own research. Okay, never blindly follow a stock tip from a friend. Instagram. Okay, there was times where I traded in a group of friends. That was before I even started mentoring on YouTube. Okay, I started off mentoring a group of friends, okay, and then they told me that I should start taking it on the internet. Okay, but that's how it started at first. Okay, started helping people get funded. Okay, after I figured out how to get funded and stuff like that. Okay, but trading with friends sometimes can lead to bad decisions if you don't do your own research. Okay, because no one is perfect, only God is perfect. So sometimes, like, especially if they're not studying more than you, okay, just try and stay in your own lane and your bag and your investor. Okay, study from your mentor, okay, and just stay locked in with your mentor and focus on the charts. Okay, so God got you. Okay, find yourself a good mentor that you can trust. Okay, and just trust your vision and your view. Okay, don't be arguing with anybody who doesn't believe in your view. So understand what you're investing in. So fundamental investing concepts. So to navigate the market, let's understand the language of it before we're just on here lost. Here's some of the most critical terms and concepts you'll encounter on your journey here a lot. So stocks, once again, stocks represent ownership in a company. They're higher risk but higher potential return, and you can participate in the company's growth. So if you catch a good company at the low, let's say you catch it at $32 a share or something like that, okay, and then price decides to go to $100 a share, okay, you would make a large percentage gain on your money. Okay. Why? Because $32 a share went to $100 a share. Okay. That's a 68-point jump, if I'm not mistaken. Okay. So it's a lot of points, a lot of percentage gains to go ahead and be paid off of. So with stocks, you get paid as price decides to go in whatever favorite direction you purchased it in. Okay. Whether be it you're wanting it to go up or down with the options contract, for example. So bonds are debt and stocks are equity. So bonds, they represent a loan to a company or government, and they're lower risk but lower potential return. And you receive fixed interest payments over time. And think of it as being a bank for the company. So let's talk about market capitalization, a very, 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 very popular term. Market cap is the total value of a company's outstanding shares, and it's a simple way to gauge a company's size. So a large cap is going to be anything over 10 billion. Mid cap is 2 billion to 10 billion, and small cap is generally considered below 2 billion. Okay, so small caps can be high risk, high reward because no one's really found them yet. But if you catch a small cap and it turns into a large cap, you'll be rolling in some dough, inshallah. Okay, mid caps, they have some higher growth potential. Okay, but they can also be more volatile since it doesn't have the most value. Okay, and large caps generally more stable. They do have a lot of volume though, so if price wants to correct, it'll definitely correct. So if it wants to dip down hard, it'll do that. So the art of research, okay, fundamental research versus technical analysis research. There was times where I only traded earnings, for example, okay, and I would just do research on the company, on the earnings, and that's fundamental analysis, okay, and then I started just trading with the charts, okay, and that's technical analysis, okay, and both are going to be needed to mesh together the ultimate plan, trust me. So fundamental analysis, let's talk about what it is. So this approach is a company's intrinsic value, and you'll analyze its financial health, management, market share, and competitive landscape. Okay. And you're looking for a stock whose price is below its true value, believing that it's going to rise over time by helping people in the future. Okay, and putting smile on people's faces, inshallah. So some key metrics: the price to earnings ratio, also known as the PE ratio. Okay, earnings per share, and return on equity, also known as ROE. These numbers tell a story about a company's profitability and their valuation. So for a PE ratio example, if a company's stock is trading at $50 per share and its EPS is $2.50, the PE ratio is $50 divided by $2.50, and that equals 20. And a low PE might suggest a stock that is undervalued, but it could also signal poor growth prospects, and it's a key piece of a larger puzzle. Put together what you wish. In technical analysis, this approach ignores a company's fundamentals and instead focuses on chart patterns, such as waiting for support to be broken, turn into resistance, or resistance being broken, turn into support. Okay. So instead of focusing on chart patterns, fundamentally, you could focus on chart patterns technically. Okay, and that's technical analysis. Okay, so technical analysis involves chart patterns, trading volume, studying the market momentum, and how the candles are moving. And technical analysis believe that all relevant information is already reflected in the stock's price. Okay. And the golden rule, diversification. Okay. And I also wish I was just saving way more money too. I would buy a bunch of Bitcoin, but then I would always just sell it. And I was like, dang, okay, everything that I've been buying and selling for the past 3 years, if I would have just held it, okay, then I'd be very, very up. But I'm glad I didn't do that because I get to teach this lesson here today. Okay, so the golden rule, diversification. So one of the most important lessons is to never put all your eggs in one basket. Okay, so don't just put all your P&L into just one share play. Okay, diversify a little bit, maybe like 1, 2, 3 plays at max. That's crypto and stocks included. Okay, 1 to 3 digital plays max. And diversification is the strategy of spreading your investments across different assets to mitigate risk. And when one investment performs poorly, another may be doing well, helping to balance your portfolio's overall return. So I hope you invest across industries. Don't just invest in tech, consider healthcare, consumer goods, energy, and finance. Different sectors react differently to economic cycles. Okay, so as of 2025, when this is coming out, we're in like the AI cycle. Okay, so AI stocks, for example, are super popular. Okay, or crypto brokers. Okay, anything allowing people to trade cryptocurrency, it's going to be popular too. So invest globally. Okay, the US stock market is not the only one. Consider international stocks to capitalize on global growth and reduce country-specific risk if you want. And use ETFs and mutual funds. Okay, these are powerful tools for instant diversification. An exchange traded fund, an ETF, that's a basket of securities you can buy and sell or in exchange, just like a regular stock. An S&P 500 ETF, for example, gives you an instant ownership in the 500 largest US companies. Okay. And mutual funds, a fund managed by a professional, which pools money from many different investors in a variety of assets. So here's some common mistakes I knew. So chasing hot stocks, okay? So especially after I made my first couple bands with like C3 AI, say seeing that, okay, making my first like flip like that, okay, I was just like, okay, whoa, trading can be super duper popular. But then after that, I ended up losing profit just buying some stupid stocks that didn't end up going anywhere. So be careful chasing hot stocks. So stocks that are currently making headlines or being heavily promoted are often already way overpriced, and the smart money has already made their move to go ahead and exit. Because remember, it's a left to right chart. So it's about who sees it first. And inshallah, I want you guys to see it instantly. And market timing. It's nearly impossible to consistently predict the market's short-term movements. And trying to buy at the absolute bottom and sell at the absolute top is a fool's errand. And time in the market is far more important than timing in the market. So ignoring your plan can sabotage you too. Many investors or traders have a solid plan. You know what you want to do. You know what your criteria consists of, but are you following it? Okay. Panic and greed could really lead you to abandon your trade, okay, or even frustration. Just why am I not winning the trade? Not accepting the fact that you lost instead of sticking to your clean setup criteria, okay? If you're struggling, head over to Stackmode.net, but I really do assure you play break and retest, okay? You can wait for support to be broken, turn into resistance, or you can wait for resistance to be broken, turn into support, okay? And that's it. Just keep it simple, okay? Don't destroy yourself over the charts. Please keep it simple. Set a strategy, okay, stick to it, regardless of the market noise or whatever's happening. And investing when you can't afford to lose. Never invest your emergency fund or money you need in the next few years. The stock market is for long-term capital that you're comfortable seeing fluctuate. Okay. So opening a brokerage account. A brokerage account is a financial account where you can buy and sell stocks and other securities. Okay, you can't just go to the company and buy shares. You got to go to the broker to facilitate the transaction for you. Okay, so brokers, you can check about their fees, see about their rules, see how their support is. Okay, and then you're going to be able to get a card. Okay, certain of them, like Robinhood, for example, offer a card where you can go ahead and use your day trading profits or whatever profits that you make from the market and withdraw straight on the card. So whatever broker that you want to use, go ahead and use that. Okay. So open your broker. You can start small. Okay. Don't just dump all your money. Okay. Take your time. Make sure you know what trades you want to invest in and do your research. Okay. Even if it's worth it to spend your money on education, mentorship first, and then come into the market. Okay. This way you're not going to have to get your education by just losing over and over again. Okay. So in dollar cost averaging, okay, so the most powerful strategy for beginners. And instead of trying to time the market, you just invest a fixed amount of money at regular intervals. Okay, and this ensures you buy more shares when prices are low and fewer when they're high, averaging out your costs over time. Okay, so make sure you guys know where you're purchasing. Okay, if you're not purchasing at the right time, that could really jurisdict your trade and really just sabotage certain things that you need. Okay, so focus on ETFs and mutual funds. So for your first few years, you can focus on a core portfolio of low-cost index funds or ETFs. Okay, that's going to be something to diversify too, especially as you're learning the market. So if you're new into the market, you still don't understand certain day trading while you're getting educated and stuff like that, ETFs can be something that you can look into as well too. Okay, so I wish I looked into more long-term stuff when I first started trading instead of just worrying about the instantaneous profit of like 0 DTE options. Okay, so look at long-term stuff because a lot of the time while you're learning the markets, you can still make money in these long-term plays, and your money a lot of the times is going to be a lot safer versus you just trying to throw yourself head into 0 DTE or something like that, or futures, and then losing everything. Okay, so that's where I wish I corrected myself. Okay, so start now. Okay, there's going to be no time limit, okay, to when you can start or end trading. Okay, you can trade until you pass away. Okay, and you can start trading right now, any age, any time, just start now. Okay, know yourself. Okay, this is why being with God is going to be really important. Already becoming humbled is going to be really important. Okay, you can't be coming with ego. Can't be coming with thinking that you're bigger than the charts. You can't be thinking that you're right and the charts is wrong. Okay, and use the right tools. Okay, TradingView, big tool. Come for mentorship. Okay, I offer a free call where you guys can learn how to trade as well too. And then I'll put a trading plan together. Okay. And patience. Okay. Be patient. Even if you're making $10 from the market. Okay. Stack that up. Okay. And after you withdraw, so whatever amount of money that you withdraw, let's say you make $10. Okay. I like to leave 50% in my account of whatever I made. So I would only put $5 in my account. After that, 30% of whatever I withdrew needs to go to taxes. And that's how I break down my money. So I hope this presentation helped. Stay prayed to God. Keep learning. I'll catch you guys in the next one. Let's go and let's jump straight into the lesson. This is going to be the differences between stocks, shares, and options. Let's go. And at their core, stocks and shares refer to the same thing, a unit of ownership in a corporation or a company. And the terms are often used interchangeably, and though shares typically refers to the number of individual units held by an investor, and while stock is more of a general term used for the entire collection of shares. Okay, so for example, I own 10 shares. 10 shares is going to be the amount, the percentage of the company that you want to be a hold of. Okay, the amount of shares equals the amount of percentage ownership that you have in the company. Okay, so if you want to own 10 shares of Apple stock, okay, and Apple is going to be the primary stock. Okay, shares is the percentage amount that you own, and the stock is going to be the name. And here's what they represent. Owning a share means that you're a partial owner of a company. And as an owner, you have to represent, okay? And you also have a claim on a portion of the company's assets and earnings. And this ownership gives you a right to the company's profits. And it's distributed as what's called dividends, okay? And dividends, especially if you have enough shares invested into, then dividends will go ahead and be paid out to you. And this way you can be able to make money just by being an investor. And say in the corporate matters though, It's also going to give you some voting rights depending on the amount of share that you have. And for every share that you own, you typically get one vote. Okay, so the more shares that you have, the more votes that you're going to have. Okay, so you're going to have one vote per share, for example. Okay, and that allows you to influence key decisions like electing the board of directors and who's going to be controlling the future of the company's growth. And why do companies issue them in the first place? Companies sell shares to the public to raise capital, and this money can be used for expansion. So whenever you guys see millionaires, billionaires, stuff like that, and they're company owners, a lot of the time it's not in raw dollar currency, okay, sitting in a bank account. A lot of the time they're rich through the company they own, and a lot of times it's on the stock market, okay, and then that company generates money. And since they're associated with it, or the leader, they get the money associated with the tag, so then they get to be a billionaire. For example, any creator of, like, say, company.com, okay, say they have $500 a share worth, okay, the owner of it, let's say the company does $10 million a year, okay, the owner of it would be classified as a billionaire because he's the owner of it. So that's normally how that works. So they sell shares to the public to raise capital and raise money. And this money can be used for future building expansion of the company, research, paying off your debt, and other business goals. And this process is known as an initial public offering, also known as an IPO. And this transforms a private company into a public one. And this is when shareholders, okay, can invest like me and you if we wanted to. And for a company like Google, for example, a public offering allows them to raise billions of dollars to fund new ventures. And when you buy shares directly from a company during an IPO, you're participating in a primary market. And after the IPO, shares are bought and sold among investors on exchanges like the New York Stock Exchange or NASDAQ, then that's going to be the secondary market, okay? So when you're buying shares directly from the company from IPO, okay, that's a primary market. And after the IPO shares are bought and sold among the investors, okay, on exchanges like your New York Stock Exchange, that is the secondary market. So let's talk about equities. The broader view is ownership. So the term equities is a broader financial concept, and it encompasses all ownership interests in a business, which includes common stock, preferred stock, and retained earnings. And it represents the value that would be returned to a company's shareholders if all assets were liquidated and all debts were paid off. And on a company's balance sheet, it's often referred to as shareholders' equity or owner's equity. Let's talk about shareholders' equity. This is a fundamental metric used by analysts to assess a company's financial health, okay? So, and it calculates it by calculating the assets minus the liabilities. Okay, so what assets are things that a company needs. Let's say like the light bill. Okay, a company might need a light bill in order to run a factory, for example. That's assets, something that's needed. And a liability is something that's not needed. Okay, any business expenses that's just going to be extra. Okay, like giving all your employees a vacation or something like that, for example. Okay, and then that's going to equal shareholders' equity. Okay, so common versus preferred stock. Common stock. This is what most people mean by stock, and it comes with voting rights in corporate matters, but it's secondary to preferred stock in claims on a company's assets during liquidation. When you're a true owner, sharing in both the upsides and the risk. And let's talk about preferred stock. These shares typically do not come with voting rights, but have a higher claim on a company's assets and earnings than a common stock. And holders of preferred stock receive dividends before common shareholders, and this makes them a hybrid security. And it's often seen as less risky than common stock, but without the same growth potential. Okay. So, stock options, my favorite. Okay. One of my favorite things I like to trade, and it's pretty much when you get paid based off of the direction of a stock. Okay. If you think the stock is going to go up, then ideally you would purchase what's called a call contract, which we'll talk about here. Okay. And if you think the stock is going to go in a downwards direction, okay, then you would buy a puts contract. You can also have expiration dates on your contracts too, to choose how long you want to hold the trade for. And when the contract expires, it's going to automatically close on its own. So you either sell the contract before it expires, or it'll go ahead and just close on its own. Yeah. So Stock option is a contract that gives the holders the right, but not the obligation, to buy or sell an underlying stock at a predetermined price. Okay, and that's also going to be known as the strike price. So let's say a stock is at $32 a share currently. Okay, let's say a stock is at $32 a share. You think it's going to go to $34 a share. Okay, then you could buy a strike price contract of $34. Okay, or even $33, since that's above $32. Okay, so you can buy any number above your prediction but below your take profit. Okay, and that's going to be a good strike price in order to purchase, inshallah. Okay, so when you do that, you're going to go ahead and get paid based off of your prediction. Okay, say for a put example, let's say share price is going to be at 20, for example, right? And you think price is going to go down to 15. Okay, so if price goes down to 15, you could buy a 19, 18, 16, or $15 strike price contract. Okay, because you're going to get paid based off of your prediction. So just focus on what you're doing. All right, just focus on what you're doing. You're going to get paid based off your prediction. Okay, and it's also going to be within a specified time frame that you purchase. Okay, and the higher the expiration date that you go, the more expensive that it's going to be. And it's a derivative instrument, meaning that its value is derived from the performance of the underlying asset, and they're a popular form of compensation for employees and a powerful tool for investors to leverage their positions. So a call option, it's the right to buy stock at the strike price, okay, which is going to be the pretty much price that you're wanting price to go to. And an investor would buy a call option if they believe the stock price is going to rise above the strike price, and you're betting on the stock's upward movement. Let's talk about a put option. And it's the right to sell a stock at the strike price, and an investor would buy a put option if they believe the stock's price will fall below the strike price. And this is betting on the stock's downward movement, often used for hedging. Yeah. And also sometimes companies often grant stock options to employees as a form of non-cash compensation. Okay. So incentivizing them to work towards the company's increasing value, because as the company keeps innovating, putting smiles on people's faces, okay, creating more product, generating more revenue, then inshallah the share price is going to increase, making their options worth more. And most of the time, inshallah, they're going to be getting paid in like some long-term cost contracts, I assume. So risk, reward, or purpose. So while all these terms are related to company ownership, they serve different purposes. Okay, so stocks. Okay, stocks are going to be the name. Okay, stocks are going to equal the name. Okay, stocks are the name. So let's say I open Stackmode. Okay, let's say I open Stackmode on the market. Okay, if I put Stackmode Network on the market, okay, inshallah will happen one day. If I put Stackmode Network on the stock market, that's going to be the name. So if you just hear the term stocks, that's going to be talking about the name. Shares, the term shares is going to be talking about the percentage ownership that you're trying to purchase within the company. So you can own 1 share, okay, or you can own 50 shares. And the share price is going to be determined on the current price. So if the current price of a stock, okay, remember the stock is the name. So if the current price of Stackmode is $32 a share, for example, okay, and I think it's going to go to $600 a share, okay, or $700 a share, okay, then whatever the current price is going to determine what the share cost is. So if price is at $32 a share, 1 share will cost $32. If price is at $700 a share, 1 share will cost $700. Okay, so inshallah, try your best to get in at a dip or a low and then catch the sweep up. And that's how money is made. Okay, that's how growth equity is created, by trading shares. Okay, and stocks and equities. Okay, the primary goal of these are going to be long investment. Okay, there's going to be also a lot of tax benefits when you hold your trades for over a year. And the primary goal is going to be long-term investments when it comes to shares and equities as well too. And the reward comes from dividends as well too, which is going to be quarterly money that's going to be spread out to everyone who has a decent amount of shares. Okay, so you'll get paid by dividends and capital appreciation. And the risk is that the company's value could decline, leading to a loss of your initial investment. But no risk, no reward. We're only here one life. Okay, just trust God, take a risk, keep going. Let's talk about some options. The primary purpose is speculation or compensation, and the reward can be much higher due to the leverage they provide, and it makes you control a large number of shares for a small upfront cost. And this risk is that if the stock price does not move in your direction that you purchase, then the stock price could tank on the contract. Okay, but it's going to be fine. If it expires worthless, you just try again. Don't lose hope. Trust God. Keep going. Okay, and you could potentially lose your entire investment, but you could also play into that. Okay, whatever your stock option cost is, you could use that as your stop loss. So if it costs you $70 to open a contract, that could be your stop loss. Okay, instead of buying a $500 contract trying to play with a $70 stop loss, that might not always work in stock options as cleanly as you might want. Let's explain leverage. And with the call option, you might only pay a few dollars for the right to control 100 shares with leverage and the time expiration. And if the stock price goes up by just $1, you've made a significant percentage gain on your small initial investment, far greater than you would have buying the shares outright. Okay, but it also has time expirations on it. Okay, so this is why the longer the time you're going to buy on a certain play, it's going to be the better. Okay, give your trade time to work out. Okay, but the longer that you go trying to buy out, the more expensive that the contract is going to be. Okay, so for practicality, for example, if an investor wants to build a retirement portfolio, okay, you could buy stocks. Okay, so you'd be buying shares of those stocks for long-term growth, for long-term tax benefits, and just holding trades year after year, keeping money in the stash, keeping stack mode, okay, implemented into your portfolio. Staying down, not touching the bread, okay, staying down. And if a trader is looking to profit from a short-term market movement, then stock options would be able to amplify your return. So you can use the stock options profit to buy some more shares, but stock options in general is just going to be better to go ahead and generate some more income. Okay, so it's going to be time to just start going harder, get more education, and really understand what we're doing before we put money into the market. All right. Market capitalization, valuation, how a company's priced in general. So understanding that a company's market cap, okay, also known as the market capitalization, is pretty much how much a company is worth. And the valuation is crucial for making informed investment decisions. Now, market cap's not going to be everything. You could do your research and catch a good trade at the low, and then the market cap turns huge later. Okay, but market cap is just going to be a good decision to see if something's going to be a strong value play. And market cap is going to be the total value of all the company's shares, and it's a key metric used to determine a company's size. So here's the market cap formula. The calculation is pretty simple, but does a lot, and it's quite advanced. So market cap, okay, the calculation concurs of, it's the current stock price, okay, so Stackmode is worth $700 a share, okay, then it's worth $700 a share. Okay, so you take the current stock price, $700 a share, times the number of total outstanding shares, so whatever that would be, and that's going to give you the market capitalization. Okay, so this tells you what the market currently values the entire company, and it changes every minute as the stock price fluctuates. People are always going to be putting in orders, selling and buying, and especially something that has a high market cap, there's always going to be more orders flowing in due to the fact that it's popular. So there's some different market cap categories. Companies are often categorized by the market cap, which influences their risk growth and their potential. Once again, it's not going to be everything, but something to look for. So a mega cap, it's going to be something worth over 200 billion in market cap. So for example, big giants at the time, like Apple, Microsoft, for example, they're generally seen as stable, mature companies. And let's talk about large caps. It's going to be 10 billion to 200 billion. Okay, and they're established leaders in their industries. You got mid caps, 2 billion to 10 billion. That's companies with solid growth prospects. And small caps, 300 million to 200 billion market cap. They could be a bit higher risk if they don't decide to grow and have some future innovation, but with the potential, they have a bunch of high expectations, certain companies, and they could explode super duper hard. Okay, like for example, Palantir. And microcap and nanocap, and below $300 million. And they're the riskiest category once again, because it's fresh, new startups, new ventures. Sometimes it could be people with a bunch of money investing into it, and then it doesn't go anywhere. So make sure it has some future value. So let's talk about valuation versus price. So it's important to distinguish between a company's price and its market cap and its intrinsic valuation. Valuation is a more complex process that attempts to determine a company's true worth based on its assets, earnings, future cash flows, and growth prospects. And a savvy investor is going to be looking for stocks where the price is lower than the company's estimated intrinsic value in the first place. So we'll talk about valuation methods. There are many methods for valuation, including the discounted cash flow, the DCF model. And a company's price to earnings ratio, comparing that to its others ratios of other companies, is going to be a good way to determine and what company is making more money than others. Okay. And these are essential tools for a fundamental analyst if you want to be an investor. So let's say, for example, let's say company A has 10 million shares outstanding. Okay. Let's say Stackmode has 10 million shares outstanding. Okay. And its stock is trading at $50 a share. Okay. And its market cap is going to be $50. Okay. Because that would be the current price. Okay. You're going to be multiplying the current price times the number of outstanding shares. So let's say Stackmode has 10 million outstanding shares. You're going to multiply that by the amount of outstanding shares. So 10 million. So $50, the current share price times the number of outstanding shares, 10 million. And that's going to equal 500 million. Okay. And that's how the math is done. That's how you find out market cap. Let's say company B, for example, let's say it has 5 million shares outstanding and its stock is trading at $150 a share and its market cap is 750 million. And even though company B's stock price is higher, company A might have a higher intrinsic valuation based on future growth projections and its expectations. So the differences at a glance. So to summarize, it's essential to recognize the distinct roles of each of them. So shares and stocks. Stocks represent actual ownership in a company and they're tangible assets that can be fractional and traded on exchanges. Okay. Any stock exchange is going to be a broker where you can put in your bank account, your card, and buy some stock for yourself. Okay. That's what an exchange is, also known as a broker. So let's talk about equities. Equities are a broad term for the total ownership of a value of a company. It's an accounting term that includes all forms of ownership interest, and equities is the larger category, which includes stocks and stock options. They're a contract and a right to buy and sell shares, not the shares themselves. Okay, and you get paid based off of the direction that you think price is going to go into. And they're a tool for speculation or compensation and are not an ownership stake until they are exercised, until someone's to fill in the contract. So think of the company as a pie, okay, also known as the stock. A fraction of the pie, okay, is going to be known as a share. And let's say you're about to deliver pie. Let's say you project to sell 4 slices of pie. If you think that, you could buy an option based off of that. Okay. So put all of that into retrospective and understand. Okay. So if you think you're about to sell 4 slices of pie, then you buy an options. Okay. But the pie in and itself is going to be the shares. Okay. And the store name, let's say it's Stackmode Pies, is the stock. Okay. So that's how it all works. So by understanding these core concepts, you're just not a spectator anymore. You're getting informed, understanding the market, not a gambler, and you're becoming an active participant with the knowledge to navigate the complex world of finance. Alhamdulillah. So while the terms may seem confusing initially, their distinct definitions and functions are critical to building a robust financial vocabulary. And remember, stocks and shares equal ownership. Okay, they equal ownership. You can hold them for however long that you want. So use that money. Don't go buy clothes, stay down. Don't go buy drip. Don't go buy the best whip right now of paying the high monthly payments. Stay down, invest, and go ball out later. Let your money make infinite money and then go buy what you want. And equities are going to be a broad ownership value. And stock options are going to be the directional bias that you can get paid based off of. You can use all of these to create future value, provide for your family, and provide for yourself. Stay prayed to God. Head over to stackmode.net for all trading education and business education. Love you so much. I'll catch you in the next one. So a single rate hike doesn't just cool the economy. It changes the math for every crypto asset in your portfolio. And here's the reality. When borrowing money gets expensive, the big whales pull out of risk and run to safety, leaving retail investors holding the bag. And we're talking about a liquidity drain that can wipe out months of gains in minutes. If you want to survive the next FOMC meeting without ever getting wrecked, you need to understand exactly how this mechanism works right now. Let's go and let's talk about rate hikes, inshallah. So let's understand when the Federal Reserve moves, global markets shake. And we have to understand the mechanisms of how traditional monetary policy dictates the fate of digital assets. And in this case, we're going to be talking about crypto. Let's continue on. So what is a rate hike in the first place? So it's the Fed's primary tool to fight inflation. Okay. And it's pretty much a tightening. And it's when they raise the federal funds rate, which is the baseline interest rate for the economy. And borrowing costs end up rising due to this fact. It becomes more expensive for banks, businesses, and consumers to borrow money. So it's going to be more expensive in order to get loans, certain private equity, and just borrow money in general. And spending slows. Higher loan costs mean fewer mortgages, fewer car loans, and less business investments, which means the economy would slow down. So less people being able to get large sums of money. Okay, it's not a lot of people walking around with over 5, 6 figures. So less loans logically would mean less cars being bought, less mortgages equals less houses being bought, which would then cause the people who own the houses to lower the cost of the houses to try to get rid of it and make some profit. So whenever rate hikes come into place, it really just throws off the whole balance. And the goal of the rate hike is to reduce demand to lower inflation prices. Once again, this often causes pain in asset markets because since people have less money, less free cash, people are going to then have less money to flow into assets. So imagine if the economy is a speeding car, okay? Imagine that as inflation. And a rate hike is going to be the Fed slamming on the brakes. And the goal is to slow down without crashing the car, which causes a recession. Now, there is going to be repercussions for this, upsides and downsides. So keeping everything in mind is going to be extremely, extremely important. But when a rate hike comes into place, it means that banks, businesses, and consumers are going to have a harder time borrowing money. And the seesaw, so the dollar index, the DXY, you might have heard of it. So there's a strong inverse relationship between the strength of the US dollar and the price of Bitcoin. This is also because Bitcoin is used as an inflationary hedge since the US dollar is going to be a infinite currency. Okay, it can continuously just be printed, and owned by everybody. Bitcoin is going to be a finite currency. Okay, so only a certain amount of people will be able to own Bitcoin. Once it's gone, then it's going to be completely gone. So rates up equals the DXY would be up, which is letting us know that this is strong US dollar and that the economy is trying to progress. And crypto down, okay, would be in relative relation to this, okay, equaling weak asset prices. So when the Fed rates hike, global investors buy dollars to access those higher yields. And a stronger dollar makes it more expensive to then buy certain Bitcoin assets, other cryptocurrency assets, and stocks, which suppresses the price. Okay, so while crypto is going down, though, gives you a really, really good opportunity in order to save your cash and buy assets at a low. Okay, try and capitalize and always buy assets at a low. If you analyze that the setup or whatever you're looking at is meant to go up year after year after year after year after year after year, if it's hitting a low point, invest at the low points. Stop buying at all-time highs. Okay, and don't just look at when something is going down as a negative thing. Price has to pull back in order to go up. So if price pulls back, see that as an opportunity. Ask yourself, is that going to be a good buy? And if you're struggling to identify a setup, head over to Stackmode.net or just watch my videos. Okay. Take advantage of the economy. Okay. When economy or when assets are down, take advantage of that. I don't care if it's real estate, Bitcoin, stocks, whatever. When assets are down, you have to take advantage of that low because just like everything else, price, inshallah, will sweep back up. And you don't want to be in a position to where like, oh man, I wish I invested at X, Y, and Z time when you could have. So take your action, do what you need to do, and make your decisions today. Okay, catch your assets when assets are at a low. When the economy is in shambles and everyone's panicking, that's the time you need to be buying. It's really important to try and have some cash on hand. This way you're going to be able to make some good decisions and invest into these investments when you need. So while rate hikes hurt crypto in the short term, the reason for the hikes might fuel the long-term bull case. Okay, and the long-term counter narrative. If inflation wins, then the Fed raises rates, but inflation could still stay in a high stagflation point, and fiat currency loses purchasing power rapidly. And the hard money hedge, and that's why a lot of people look to and run towards Bitcoin, for example. Okay, Bitcoin, yes, is good for profit, but you can make a lot of money quicker playing options or futures, for example. But just the fact that Bitcoin has a fixed supply, it gives you a sense of asset superiority. So once it's gone and somebody has it, all right, and if you weren't to have it, then they would have an advantage. Okay, so Bitcoin's fixed supply, it's 21 million, and it's designed as an escape valve from failing fiat monetary policy, since we know that over time, the US dollar is meant to cost, or it's meant to give us less and less and less purchasing power year after year after year after year, since more dollars will just be printed. And the pivot hope. So the market's always trying to predict when the Fed will stop hiking and start cutting. And that's going to be the pivot. So the moment they pivot, crypto usually rallies super duper hard, because once they start pivoting, people are going to be like, all right, you know what, economy's safe. And then people are going to go ahead and start taking advantage of the buys. So mix in the economy news with the charts, and you guys are going to be able to make some really, really great decisions and some great choices. Use your higher time frames as well too. So you can check out the FOMC meetings on forexfactory.com. And the days the Fed announces rate decisions are historically the most volatile days of the year for crypto. So FOMC, a lot of times, is when they release a bunch of really important rate decisions and reports. And cash, understand that cash is going to be a position. You don't always got to be in the setup all the time. Cash is a position. So in a high rate environment, holding stable coins, right, the earning yield, is often better than forcing bad trades in a bear market. You just don't need to do that. Don't do that, actually. Okay, don't force trades in a bear market. Just wait for price to pull back, wait for buyers to step in, and then go ahead and catch the low. Catch the low. Once again, if you're struggling with finding the right setup, head over to stackmode.net and look for decoupling. It's the ultimate bullish signal, and it'll let us know when it's time to buy. So when tech stops drop on Fed news, but Bitcoin holds steady or rises, a lot of things are going to let us know when it's time to buy. Okay, so if you see tech stops dropping really, really hard, and then the Fed announces some certain news, you start seeing rallying, put that together with your higher time frame analysis and put it together with the charts, and you can start seeing like, okay, price is ready to buy. Or after big events like CPI and stuff like that, etc. A lot of people hold their cash until these big news events come out, and then you'll start seeing market make its move that it needs to be making. And sometimes you'll even see market, let's say, for example, trending in a downwards direction weeks or days before this news event comes out. Then when the news event comes out, price will go ahead and blast in an upwards direction. Okay, so make your decisions patient ones. Okay, make sure they're extremely patient decisions, because the more patient you are, the better setups that you plan, the more money you're going to be able to make, inshallah. All right, I'm going to catch you guys in the next one. Stay praying to God. Keep grinding. Head over to stackmode.net for all trading education. Peace. So this is going to be the full guide on how to trade options leaps, how to pretty much make options income so you can make a living off of it and just make some great extra income. I'm going to talk about from A to Z, what we need to do, the contracts we need to buy, and the type of setups we got to be taking. Okay, so let's go and let's jump into it. So one, okay, we're on the stock market. Okay, so options give you access to pretty much 100 shares. Okay, so once again, options give you access to about 100 shares. So that means that it's a leveraged product, kind of. Okay, and the only thing that we fight against is time. Okay, so pretty much gives you 100 shares per one contract to play with. So 100 shares with time added to it equals one option. Okay, so a contract is going to give you 100 shares, and it's going to have time added to it. Okay, so now that we know this, okay, we're going to go ahead and put everything into perspective. So time is going to be really important. Okay, so let's talk about how we can outplay the time and how we can pretty much progress with options. Let's jump into it. So once again, we're going to be playing the stock market. Options gives you access to play 100 shares worth of value, okay, bundled up in one. Okay, but the only thing you're fighting against is time. So I'm going to talk to you guys about how to outplay that. But let's understand the logical process of what we're playing first. So we're playing the stock market. Okay, the goal of the stock market is to go in an upwards direction. And let's talk about why. Okay, why is it going in an upwards direction in the first place? What's the point of buying options, and why do we think price is going to go in an upwards direction? One, okay, I can get on my weekly time frame here and zoom out, and I can see this company, for example. Okay, it's a profitable company since the shares go up year after year after year after year after year after year. Okay. So whenever you see year after year after year after year after year progress and chart going in an upwards direction, that generally means that that's a good buy. That's a profitable company and they're doing their thing. Okay. So that's going to be a company that we would ideally want to pay attention to. So after I see market trending like this in an upwards line, I can put into conclusion, okay, why is it going in an upwards direction? One, these stocks aren't just stocks on the internet. Okay, these stocks are real jobs. Okay, real jobs that you might have even worked at in real life. Okay, so these jobs employ people. Okay, so these stocks aren't just random stocks trying to go up for no reason. They employ people. Okay, which helps the economy. Okay, companies like Microsoft, Google, definitely Amazon. Okay, creating jobs for people so people can protect and provide for their families. So these stocks, they're doing something big. Okay, they have a big, 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 big weight attached to them. They help out the economy. They employ people. Okay, and the company investors are competitive. Okay, they're in competition. So if this is a bank stock, they want to outperform every other bank stock by having the highest share value to prove to investors that whatever they're investing in, and that if they invest in their company, they're going to have the most profitable stock, pretty much. Okay, so there's going to be incentives behind it too. It's going to be really competitive. So the competitiveness behind it makes investors invest into certain companies. Okay. A bank wants to be the best bank. A broker wants to be the best broker. Tech company wants to be the best tech company. Okay. And the best way to compete or show competition and show value is going to be via the stock market share price. If one share price is higher than another company's, that just means that one company is just more valuable than the other. That's just flat out what it means. Okay. So companies are trying to compete. Okay. Because the share value being in an upwards direction shows how much it's actually affecting the economy. Okay. So that's going to go ahead and be that. So let's jump into it. Okay. So options in stocks have a reason to go in an upwards direction. And the reason why I'm focusing on an upwards direction is because that's the goal of it. Okay. Once again, more jobs are going to be created. And the whole reason stocks put themselves on the stock market in general is so they can raise money. Okay. They want our money to put into their company so then they can turn our money into more money by investing into business manufacturers, getting better or more employees, etc., doing whatever they need to do with our money invested into it. Then that's why companies that are profitable pay what's called dividends out. Okay, they pay dividends out since the company's making so much money. Anybody who's holding shares, they're like, you know what, here's some money back. Thank you for participating and helping us grow. So dividends, they're pretty much going to be a big thank you. Okay. So dividends are a thank you. If you see a company paying out dividends and not splitting them, not reducing the dividends, so you can see this dividend amount was 0.30 back here in 2023, and now it's about 0.40. Okay, that means that they increase the amount of money that they're paying out to people. If they can increase the amount of money that they're paying out to people, they're not struggling. Okay. But when you're penny pinching, okay, I'm sure we've all had times where we're penny pinching down bad. Okay. When we're doing that, then you don't have no money to pay people. Okay. But when you have surplus to pay people out extras more than normal, then you know you're in a good position. Okay. So that's what's going to determine if a company's in a good position or not. If their dividends are increasing and what their earnings is going to be looking like. Okay. So keep those two things in mind before we invest into anything. Now, let's talk about the actual chart itself, how we find it set up, and some stuff we need to do. So the time frames we got to focus on, okay, is our higher time frames. So you can look at your weekly time frame. Your weekly time frame, that's really going to help you put everything into perspective. Okay, a weekly time frame is going to help you see absolutely everything. Okay, it's going to be your eyes. It's going to help you see everything you need to see. Okay, and you're going to get all of your price action viewed. Then after the weekly, you can scale down to your daily. And then after the daily, go down to your 4 hour. Okay, when you're on the 4-hour time frame, let's go to the bottom right and make sure extended trading hours is going to be on. Okay, because what you're going to notice when you're on the daily and the weekly, and then you go to something like the 4-hour, which has extended trading hours, you're going to notice a little bit of differences in candles. So to see the exact candlestick wicks you need to see, do all of your higher time frame analysis, and then go down to the 4-hour time frame lastly. Okay, so once again, I'm gonna go for my weekly, see the whole overall price action view, and then I'm gonna go to my daily, and then I'm gonna go to my 4-hour time frame. So let's talk about two things here. So this is gonna be current price. Wherever I see the dotted line at is gonna be where current price is. Right now, current price is at all-time highs. Okay, so if I'm playing a market that I'm expecting it to go up and it's already at max height, I don't want to buy there. Okay, I don't want to buy at max height. Okay, I can't go any higher than that. Okay, I don't know how high price wants to go up. I want to take a trade where I have resistance above current price, so price has something to travel to, or support needs to be above current price, so price has something to travel to. Okay, so what resistance is, it's an area where price decides to fall in a downwards direction. And this is a left to right chart. Okay, so resistance happens because if people bought way down, of course you have to sell. So whenever and people bought way back here. So of course we're gonna have sharp areas of correction. Okay, whenever we see market, big sharp points, and then falling in a downwards direction, that's gonna signify an area of resistance. Okay, even right here. We're gonna see price decide to create this top, and then it fell in a downwards direction. Okay, downwards direction. Same thing up here. Price creating resistance here, and then price fell in a downwards direction. Okay, very simple. Okay, and it's just not making it hard, making it very, very, very simple. So whenever you see market making downwards corrections, that's going to signify resistance. And once again, we want to be looking at resistance, etc., and stuff on our higher time frames. That's all we want to be looking at: our weekly, daily, and 4-hour. Okay, we don't care about 15-minute resistance, none of that. We're looking at our higher time frames. The higher time frames are the levels that the institutions are playing with. Okay, so whether it be at hedge funds, banks, institutions, okay, everyone is looking at the higher time frames. And trading is not like business where you want to be unique. Okay, in trading, you want to be a sheep. Okay, whatever everyone else is doing, that's what you want to be doing too. That's going to be the right thing. If price is going in upwards direction and blasting, you don't want to be the one selling. Okay. Now, if price made a low and found support, which let's talk about that. If price makes support, which is going to be a low, and then price bounces in an upwards direction, then you can go ahead and purchase there too. So even if price is going down, if you see price make a low and then start bouncing in an upwards direction, you can go ahead and purchase that too. Okay. So support, once again, it's going to be an area where people are going to be buying at. Okay, it's going to signify demand. So buyers are at the areas of support. And then the opposite of that is going to be resistance. Resistance means there's too much supply. And that's going to signify that sellers are stepping in. Okay, so that's the difference between the two. So we have support, price bouncing in an upwards direction, resistance, price bouncing in a downwards direction. They both correlate with each other. Price can only go two ways, up or down. Okay, so they both work together. Okay, so check it. And this is going to be an area of resistance over here as well too. Okay, and then something like this over here would be an area of support. Okay, see price making this low and then bouncing in a upwards direction. I'm looking at this on my weekly time frame first. Okay, just so I go ahead and see absolutely everything. Now, for this trade, for example, Wells Fargo, okay, I wouldn't not take this trade because one, we are at all-time highs, okay? And just like I spoke about right here, okay, I like to either have resistance above current price, because price always wants to meet up with an area of resistance. So this brings me back to the competitive logic. Okay, so bringing back the market logic into the charts. If the company is trying to be the most competitive and show that they're the best, which is one of the ways they can do that is by having one of the highest share prices compared to the competitors, then price has to break resistances then. Price can't stay at all-time highs. They can't keep dumping down. That means it has to break resistances. So price is always going to be chasing all-time highs. No matter how low we dip down, okay, I don't care if price dips down all the way down here. As you can see, price still broke this area of resistance right here and then bounced in an upwards direction, okay? Price is bouncing up, going up, okay? So it's going in an upwards direction, okay? No matter how low price dips, it always wants to break all-time highs. Not saying it always will, depending on some companies, but it wants to. It wants to go back up. Okay, there's people behind these companies. There's people working behind these companies. They don't just want to be working for a failing company that's not paying any out good dividends. That's not logical. Okay, so that's why I'm going to personally ignore things at all-time highs, because if something's at all-time highs, yes, it could burst a little bit higher up, but for the most part, all it can do is fall down. Okay, so what I like to do is wait for good opportunities. So take this Amazon opportunity here, for example. All right, let's say Amazon wants to actually bounce up this area here, right? Okay. So we have this area here on Amazon, okay? So I have this area of support being reacted off of. We got one candle, two candles here, and then I have one candle here. Okay, let me go to my daily time frame here. Okay, I got a double bottom here at this blue line. Okay, and I can see over here, price made resistance over here too. So I might want to break it and retest off of this area here. And then right here too, the support decided to work. Okay, so let's say price decided to bounce up this blue line, right, and go in an upwards direction. So if price wants to find a specific low here, okay, and one thing I like to go do is get on my daily time frame. Okay, look at the low zone. Okay, price is either going to bounce two ways, and we only want to be purchasing call options. Okay, we're going to be purchasing call options only due to the fact that it's a stock market. Okay, there's people working behind these companies. They're way more likely to go up than down. There's also laws in place, such as the short share restriction, to prevent things from dumping to zero. These companies employ people and run the entire economy. They're not just stocks on the internet. So call options are going to be all that we're purchasing. And we want to be purchasing any contract between, honestly, 1 month is too short for certain take profits. So you want to be purchasing a contract between, I'll say 3 months to 2 years out. So you want to buy at least 3 months to 2 years out. Okay, so what that means is on the Amazon contract dates, for example, here, if I wanted to trade this is October, as of when I'm recording this, October 2025. So it's going to show me the most recent options contracts here. Okay, what I'm going to do is go all the way over to the right. Okay, and let's say it's 2025. So let's say I want to buy 2027. Okay, I'm going to buy a whole year out. And the reason why I'm buying so far out is because I'm using my higher time frames. I'm using my daily and my weekly. Okay, I know price wants to hunt these areas in Shillong, but we have to give time for a trade to cook. So, and the contract that you're going to buy is really easy. So if current price, like we can see here in the middle for Amazon, is at 215, okay, all you're going to do, the contract that you want to be the one above wherever the current price is. All right, so if your contract is at 215.57 and you buy a year out, whatever the option above the current price number is, okay, the first option above the current price is going to be the best contract to buy. So in this instance, it would be this call 220s, since that's the first option above this 215 here. And I would buy a year out, okay, and then let the whole thing work. And this is also going to be a really good indicator to let me know the trade's going to be good too. So I can see here all the price action here on the Amazon price chart, okay? So this is where it was up here at January 2025. Okay, I can see price made this ultimate low here. Okay, and now it's trying to make some progress. Okay, so price is trying to mirror this low over here. Okay, and go in an upwards direction. So we have this support low over here for price bounced, and then we have price trying to mirror it again. Okay, price potentially, especially if I get one more daily close, if I get one more daily candle above the zone. I like to wait for a daily close above the zone too. I never buy whenever price is in the zone. So right now the wick is still in the zone. This candlestick is in the zone. Now if I get another candlestick up here above the zone, I'm buying that. Okay, that's something I want to buy because it shows that the zone is holding. So I never buy the first wick in the zone. I never do that. Okay, I just want to see if the zone wants to work out. And how I'm going to do that is get on my daily time frame, and I'm going to look for a candlestick outside of the zone. I should see a candlestick above the zone. If I see a candlestick above the zone, I'm good. Okay. If I see a candlestick above the zone, I'm going to be good. I'm never going to want to buy in the zone. Why? Because price, if it wants to, could dump further. Okay. But if I see price give me another candlestick, it's going to show me that that area of support was valid like I thought. And instead of me getting burned and just losing, okay, by buying at the zone, trying to buy too fast, I'm going to wait for price to confirm itself. Okay, so waiting for confirmation can be really strong. Okay, waiting for confirmation is something that more people just need to do. Okay, so when you wait for confirmation, you can sense out your setup. Okay, you know what type of setup you want to take. Okay, you're like, okay, hold on, this is working out because of X, Y, and Z. Price is holding this area of support here. Okay, so keep that all in mind. All right, keep it all in mind. All of it's going to be very, 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 very useful to keep in mind when it comes to taking your trades. Now, just like I spoke about again too, I like to play trades when there's resistances above current price, just like I talked about. Okay, so I have this area of resistance up here above current price. Okay, so I know price is something to travel to. I can see price reverse here once, reverse here twice. Okay, so price wants to come up here and try and break it. Okay, it doesn't want to keep reversing at the same area over and over again. And if it does reverse at this area 60 times, just the fact that it's trying to break this area, we use that as our profit window. Okay, so the whole gap until the area of the resistance is the money that we're trying to make. Okay, that's a whole bunch of money that we can make right there. So once we see the support being confirmed, we take it up to the heaviest area of resistance. Gotcha, my bad. So yeah, we'll take it up to the next heavy area of resistance. Okay. So it's gonna go ahead and be that. All right. And then from there, let's go and let's jump into another setup here. Okay. So that'll be that. Price doesn't want to keep reversing at this area here over and over and over and over and over and over again. Eventually, it's going to want to try and break this area here. Okay. So keeping that in mind at all times, it's going to be really, really, really important and imperative. Okay. So if I go ahead and I pull up another stock, for example, okay, let's say Apple. Okay. Actually, yeah, you know, let's say Apple. Okay. Even Apple right here. Okay. I can see Apple created this area of support down here. Okay. This area of support looks like it wants to be held due to the fact that on my daily time frame, I have some candlesticks that decide to push an upwards direction from there. Okay. So I can assume that price wants to at least fill in this gap up here. So I know price wants to fill in the rest of this gap for resistance here. Okay, since we're going upwards direction, it's not going up for no reason. It wants to go to a certain place. Up. Okay, so we have about 10 points left and it's heading to the resistance. And they'll try and reverse here or break it and maybe retest, continue. So once you see a support area confirmed, I look at it, be like, okay, why does price want to bounce at this area here? Once you see why price is bouncing in a certain place, it's going to be a lot easier to go ahead and take the setup from there. Okay. So let me pull up something like a Google, for example. Okay. Same thing with Google here. I could see price decided to meet up with this area of support once. Okay. And then I also have the area of support being reacted off of twice. So I got two areas of support here being reacted off of. And I can see here, day after day after day after day, price is filling in this gap here to the area of resistance up here. Okay, price is trying to fill up the area of resistance up here. So even if I wanted to get in right here, I'd still have about 5 points of price action left until I hit the resistance. Okay, so even if price were to whiplash all the way down, okay, up here still might take profit. Okay, so this is why on options 2, our contract is going to be our stop loss. So if the contract costs $200, we're okay with losing $200. Okay, so your options is your contract that you purchase is going to be your stop loss. So you can start off by playing cheaper stocks too if your portfolio isn't just booted up enough to play certain contracts that are just too short. Okay, so even on a cheaper stock like this, right, I can see price making this ultimate low on this base down here, right? So you have this heavy area of support down here. Price decided to make this area of support start going in an upwards direction. Okay, we can clearly see price curling up. Okay, and I know we're curling up to a certain place. We're not just curling up for no reason. We're trying to break these areas of resistance. It's resistance for a reason, okay, because price is trying to break the last point of fill out. So we could see we got this area 1 here, and then we have this area right here. So we got 2 areas where price decided to fall in a downwards direction at, okay, 2 places. So we know price wants to at least try and touch this area of resistance. So this is all I would do. Okay, I can see that the support area already got confirmed. And even if I just wanted to buy right here, this would still be a good buy. Okay, I can get on my ruler here, and when I close, it's just going to be important. And how much time I have too. Okay, so there's about 6.56 points left. Okay, so from there, I would be able to click on options in the top left. And I could buy a year out or 2 years out if I wanted to. Okay, and my take profit is going to be 17.43. But to make the most money, I'm just going to go ahead and buy the contract 1 above the current price. So if current price is at 10.85 and I want to buy two years out, for example, then I'm going to go ahead and just buy the contract 1 above, and I'm going to go ahead and buy that. Okay, and then from there, I can go ahead and just hold the trade for just an extremely long time and just sit on it and set alerts and wait for take profit to get hit. Okay, and we're going to just repeat until we find good trades. So this is going to be a trade that I marked out here too for students. So I could see here, price decided to do something what's called break retest. So after areas of resistances are broken, they can sometimes turn into support. And that's going to be called break and retest. Whenever you see price doing that, it's also a high conviction that price wants to continue in an upwards direction. So I could see price made this extremely heavy area of resistance right here. Fell down, okay, and then price decided to make this ultimate low. Okay, so there's going to be 2 setups you're always going to be playing. You're either going to wait for resistance to be broken and wait for price to come down and turn it into support, just like this. You're going to wait for the resistance to be created and then wait for the resistance to be broken and then wait for price to turn the resistance into support. And then if you start seeing bounce rate action out the zone, you're going to be good. So you're either going to wait for resistance to turn into support, or you're going to wait for an area right here to be reacted off of. You're just going to wait for an area of support to be bounced off. Okay. Even if price doesn't cleanly mirror the supports like this, okay, one level after the other. Okay, just like right here. One level of support immediately right after the other. Okay. Sometimes you're going to have an instance like this, though, that still works. Sometimes you're going to have an instance of support like this. Price might break down below the support, and then it might come back above it, and then it might bounce again. Okay, so you could just ignore this, but just the fact that it wants to mirror the original bounce and try it again, okay, is a really, really, really strong and good sign. Okay. So that's what you're going to be looking for, okay? Either support bounces or prices bouncing in the same area of support, giving you daily closes outside of the zone, okay? So I would never trade in this gray box, okay? Because I can see prices wicking here. I would wait for a candlestick to get on the daily above the gray box. And then I'm going to go ahead and take the candlesticks above the gray box, okay? I want to just use my low as confirmation, okay? And then even right here, price broke above this area of resistance, turned into support, and then went up to the next area of resistance all the way up here. And guess what? Resistance got broken again and turned into support. So resistance got broken and turned into support again. Okay. Keeping markets simple, playing trendy. Okay. We're just going to be trading with the trend is all we're doing. Focusing on lows and focusing on where we need to close. Okay. So I'm going to always start off on my weekly time frame. It's just personally what I like to do. Let's say this instance here, I'm going to go ahead and put a zone at this all-time highs. Start off on my weekly. Let me go to my daily. Okay. We could see price trying to make a lower here. Okay. And then I'm going to my 4 hour. And this is why we go to our 4 hour time frame, because you can see here on the daily time frame, this is the bottom of the wick. But then I go to my 4 hour time frame, the bottom of the wick is going to be down below down here. Ooh, guess what? Extremely, extremely nice. So I have area support over here being reacted off of with this area of support over here. I love it. Price came all the way back down to this area of support, which I assume came from this area of resistance right here. So break and retest will a lot of the time it'll happen once real quick, create the strong area of resistance, and then price has a chance again to come back all the way down, turn into support and bounce again. And we can see the support areas are mirroring each other. Okay, one area of support, two areas of support. The support areas here are once again mirroring each other. Okay, so if the support areas are mirroring each other, that means that it's a significant place that we want to just be purchasing at. Okay, they're mirroring each other at these places, but price isn't just doing anything, it's playing logically. Okay, so if I see price bouncing at the same place, I would assume that price wants to fill in the rest of this area of resistance up here. Okay, and price will either try and reverse at the resistance, break above it, I don't care. All I know is even if price wants to reverse at the resistance, it wants to at least touch it. It wants to at least touch it. So we'll go to my options, and I would go ahead and be able to buy. Let me see, if my take profit was about 2 months ago or about a month ago, then I could easily buy 3 months to 2 years out. The further out, the better. The further out, the better, just because you want to give your trade the most time. So take profit up here is 50. Okay, take profit was there about a month ago. So if I wanted to, I could do like January 2027. Okay, and then I'll be able to purchase this contract very cheap for $240. I could buy a contract that lasts me about a year. Okay, so I have a whole year to go up 3 points. That's extremely likely. It's extremely likely. So what you're doing is you're outplaying the options formula. Okay, you're taking the perspective of option sellers where they're like, you know what, people are going to purchase this contract because they're going to want to be cheap. They're going to not have enough time on this, and price most likely will not do it in a short amount of time. Okay, so when you buy time on your contracts, you give yourself time. Okay, give your contracts time to breathe and do its thing. It's going to be big. Okay, and you can stack up on what's called leaps too. Okay, you can just buy a bunch of good setups that have like 1 to 2 years out and just sit on them. Sit on them. Wait for take profit to get hit. Find your take profit on your weekly and your daily and wait for them to get hit. A lot of the time too on your price chart, this is not going to be the definitive every time, but a lot of the time on your price chart, if you have resistance above current price, you're in a good area. Okay, resistance above current price is going to be a really, really, really good, a really good sign. Okay. Once again, resistance above current price on your price chart too is going to be a good sign. You can see the price chart has a place to travel to. Okay. It's about taking our time. Okay. So the weekly here, I would start off, I just go through my pairs. I can see this is at all-time highs. I'm cool off this. Okay, but if I wanted to trade this, I would need price to pull back to a certain level. Okay, I could see price here decide to turn this area of resistance into support. Okay, and then it took off. Now, if price decides to come back, hold this area again, and bounce, I'm cool. I'll take that. Okay, all the way up here, I'm not going to do that. That's not something that I'm going to do. Okay, so let's take this stock for example here. Okay, even right here on this stock, okay, I can see price trying to make a certain low here. Okay, I always just pay attention. Is price bouncing an area? If so, I'm going to check it out. Okay, I can see price made this area of resistance over here. This area of resistance into support. And this area of support is now being bounced at again. Okay, and I also have a daily candlestick above the zone. All parameters I like personally. Okay, price bouncing in the same zone. I see some breaker retest over there. So if I wanted to, I could easily take my take profit to the area of resistance up here and then all the way up here. And then you wait for price to fill in. Yep, it might fall down here and come up, maybe retest, and then back through here. Okay, so I can see the support here being confirmed. Okay, price really likes the support here. So I'm gonna take my chances here, and you can see the rest of the bars is about 20 points worth of price action. Okay, take profit was hit about a couple months ago. So I would do the same thing on this. I would go options. Okay, I would go like a year out. Okay, I would just make it easy for myself. Buy the one right above. I can see on my price chart here, I have resistance above current price. And this is just simple, okay? And I can see price even on the price chart here kind of wants to confirm. When my price chart reflects my actual chart, that's going to be a really good sign, okay? So you want the price chart reflecting kind of the actual chart, okay? So I can see price bouncing in that same low here, and it looks like it wants to trickle up and fill the rest of this area up here. Okay, so we have about $1,900 worth of profit up here to be in between here. Okay. In options, it can be kind of hard to calculate every single thing. It's not an indicator, it's just a price chart. So every option contract has its own chart. Even here too, take this stock here. Okay, once again, all I do is just eyeball, okay? I just eyeball. I can see price made a low, and I see a green candle after price after price dumped, I see green candles looking like it wants to triple up, okay? So you could just eyeball, and it's all, we just buy time. There's millionaires who don't even look at the chart, okay? People who forgot about the plays they've been in and open their broker one day and just close the position and enjoy their life. So that just shows that buying and holding is what we're going to be doing. Okay, so even right here, you can see price bouncing at that certain low over here. Okay, price decides to make this low right here, based off of the resistance right here. So resistance got broken, and price decided to turn it into support, and then price decided to bounce at the same area of support again. Okay, and once again, I have a daily candlestick outside of the zone. I have a daily candlestick way above the zone. So I'm good. I'm never going to buy a candlestick in the zone. I like to see if my zone is created though. Okay. Then from there, I can go ahead and see price wants to try and meet up with this area of resistance. Okay. It'll try and either reverse at this area or break above it, or both. Okay. So we'll go ahead and go to options. Go a year out. Buy the one right above, and guess what? Price chart has resistance above current price. So when your price chart looks like your setup, that's a really good sign. Okay, this is going to be some secret sauce right here. So when your price chart looks like your setup, that's really, 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 really secret sauce. Okay, and then personally, I would just be waiting for market to go ahead and do its thing up there. Okay, I would wait for price to curl up and meet up with the area of resistance up here. Okay, and catch the whole remainder of this price action up here. Yeah. So it's about taking our time making sure we're finding good profitable setups. Okay, even right here, take Hewlett Packard, right? We have this area of resistance here. Okay, price decided to just meet up with this area of resistance. Okay. And price decided to make a low. Okay, made a low off of this support right here. And decided to bounce an upwards direction. Now price is meeting up this area of resistance, and we're going to try and break this area of resistance. Now if this area of resistance gets broken out of, then I know we want to try and meet up with this area of resistance up here. Okay, go to my daily time frame. Okay, I can see this area of resistance created up here. So price decides to run past this area of resistance, maybe turn to support. I know we want to go ahead and try and trickle up here. Okay. Or even, if I just delete everything, marked off this area of resistance up here. Okay, I can see price hit this area of resistance this year. I can see price decides to make this recent low. Okay, and I can just wait for price to fill in this gap up here. And I could go ahead and go to my option contracts, buy a year out, and I can see resistance above current price on the price chart. So if I see price already made a certain low on the price chart, that's going to let me know that that's really good. Price already dipped this zone multiple times, even on the price chart. Okay, so price looks like it just wants to curl in upward direction now, inshallah. Okay, their setups look like your price chart, and the whole remainder of this gap here is going to be all just money we can get, all money we can make. Just buy a year out, and just set my alerts at the take profit all the way up here, and I'm going to let the whole trade just ride out. Okay, I'm going to let the trade just do its thing, collect my profit, and just ride it out. And I'm just going to ride out the trade, okay, and just make it as easy as possible for us. Okay, same thing with Kroger here. Okay, I can see price confirm this low down here already. Okay, I can see price confirm the low down here. Okay, it likes this area, and I can see price wants to potentially try and meet up with this area up here. Let me go to my daily. Okay, and I see this whole area of resistance clearly wants to be filled. Okay, filling this whole gap of the area here. Okay, even if I got on my 4 hour here, even if I closed up here. Okay, boom, can go a year out, go one above, and I can see resistance above current price on the price chart. Price decided to make a low already on the price chart, and price looks like it wants to fill in the gap to the area of resistance and curl within a upwards manner. Okay, so that's going to be how to trade leaps, how to make income from options, and how to trade. So if you don't know, what controls the price of your rent, your groceries, the gas prices, as well as the crypto and stock market is going to be something called the Consumer Price Index, also known as the CPI. CPI is basically a giant shopping list that the government tracks every single month. They track food, housing, transportation, medical care, all of the essentials. And when the total price of that basket goes up, inflation goes up. When it goes down, inflation eases. And it sounds simple, but here's the catch. Even a small change can shift interest rates dramatically, which can impact your investments and even move the entire economy. Let's almost jump into what CPI is and how we can understand what the report is, inshallah. So let's understand the Consumer Price Index, also known as the CPI. It's going to be extremely simple, and I want to break it down. I want you guys to understand. Let's go. So what is the CPI in the first place? So the CPI, think of it as a basket of goods. So imagine a giant shopping cart that represents what the average American buys. This is going to go ahead and represent gas prices, grocery prices, food prices, the price of the current rent, housing, etc. Okay, all of this is going to be compiled into a big list, and the government tracks everything. And depending on how much this stuff costs, is going to give us a certain result based on the CPI report. So the Bureau of Labor Statistics, also known as the BLS, tracks the price of the specific gas every single month to measure inflation. Okay, so they measure housing, food and beverages, car prices, okay, and things related to cars as well too. Cars themselves, gas prices, and even ticket prices for planes and stuff, etc. Okay, and as well as the medical care prices, prices of certain pills, prices of certain procedures, etc. All of that gets tracked by the Bureau of Labor Statistics and gets put into a big report, and that lets us know how well the economy is doing. Okay, so let's continue on, and breaking it down and understanding this is really going to help us know, okay, is the market in a desperate period right now? Are people saving right now? Are people selling their houses right now? Okay, you really got to ask yourself a couple of questions and put things into perspective. Okay, so let's continue on and let's understand what the CPI is. So let's talk about measuring the inflation. Okay, measuring inflation. It's a year-over-year review. Why? Oh, why? Okay, when you hear inflation is 5%, it means that the basket of goods cost 5% more today than it did 12 months ago. So that means that the price of a hot dog, let's say in 2015, let's say the price $2. If in 2025, the price of the hot dog is now $6, okay, inflation occurred. The price went up. The price of the dog got more expensive year after year after year. So within a 10-year span, hot dog went from $2 to $6. So that means that it got $4 more expensive just because time occurred. So that's what inflation is, when stuff is getting more expensive over time. And the reason why that's occurring is because more dollars are getting printed. The more dollars that get printed, then the more prices have to equate for that. Prices are going to equate with how many dollars are available. If there's a lot more dollars getting printed year after year after year after year, then logically things have to result and coincide with that and get more expensive. Why investors even care in the first place? So if inflation is 5% and your portfolio grew 4%, then you actually lost purchasing power. Okay. And the core versus the headline. So stripping the noise. So there's going to be two main types of CPI numbers that are going to be released. So there's going to be the headline CPI. The headline CPI is everything in the basket. It's what's calculating the food, rent, gas prices, okay, price of certain waters, whether that be for water in our houses, for shower, toilets, etc., or the price of bottled water. Okay, price of ice cream. All of that is going to be calculated inside of the basket, and the actual raw number is going to let us know how much Americans are spending on consumerism. That's why it's called the CPI, Consumer Price Index, letting us know how much the economy has consumed. And the core CPI, okay, it removes the food and energy prices from the equation. So the core CPI removes food and energy prices because food and gas prices are going to be volatile. They change every single week, okay, and they change a lot quicker than other things as well too. Okay, food can be thrown on sale one day. A box of macaroni could be $5. Okay, you come back to the store next week and it's back again at $15. Same thing with gas. Could go to one gas station, they might be charging you $3 a gallon for some 87, and then another gas station for some 87 it might cost you 2.79. So it's really going to go ahead and differentiate. And food and energy are going to be a lot more volatile than other things related into the basket. So the Fed prefers there's just the core CPI, and the core CPI is the number calculated in the basket of the stuff that Americans are consuming. Okay, and other countries have CPI too, but in this case, we'll talk about U.S. But it takes the amount of resources that a country is consuming, and the core CPI report is just going to go ahead and remove food and gas prices since they're volatile and could hedge the numbers and make them spike up higher than they maybe should be. So the federal connection. So we'll talk about the policy tool. The Federal Reserve has a mandate to keep inflation at around 2%. 2% is going to be a pretty stable rate, and that's letting us know if the economy is not going in haywire. So a high CPI, the the Fed will raise interest rates to cool the economy. It's going to be really bad for stocks and bonds. If people are paying money and percentage yields on interest, then that's going to go ahead and leave them less money to invest. Or what people would go ahead and do is take out their investments in order to make up for certain interest rates getting more expensive, etc. And we'll talk about a low CPI rate. So when the economy is in a good position, it's very stable, and it's in a cool position, the Fed may lower the interest rates to stimulate growth because people are going to be paying back less in loans, paying back less in debt, etc., leaving a lot more supplemental income to invest into stocks. So CPI report is low. A lot of the times you start seeing market burst up in an upward trend because it's letting us know that everyone else has money, and the stock market and crypto market, we move as whales and sheeps. Everyone has to be doing the same thing in order for the market to move. Everyone has to be buying at once in order for it to go up, and everyone has to be selling in order for it to go down. So that's why it's really imperative to make sure you're trading with the trend. If you're not trading with the trend, you're just going to be losing money for no reason. And that's why Wall Street really holds its breath on CPI release date. It's really a big report that predicts what the Fed will do next, and a big predictor on how the market will move. A lot of times right after the CPI report drops, especially if you're a futures or forex trader, you get on your 1 minute and you can see the actual candle of CPI. So seeing that and watching those month after month after month of CPIs really taught me and let me know how the market decides to trend after the CPI report hits the market. And market volatility, so the tantrum that it throws. So algorithms read the CPI report in milliseconds, and the reaction can be extremely violent. In a second, CPI could make the market zip down or burst in an upwards direction. And once again, if you're on your futures 1 minute, you can see it and see the news directly. And CPI coming in hot is going to mean that stocks have a higher chance to drop in a downwards direction due to the fact that interest rates are going to be higher. So interest is going to be bad. There's a reason why God talks about it in a negative manner. Interest does not benefit anything. Interest only hurts. It hurts the people, hurts the stock market, and it just leaves us less money in order for actually building our actual assets, whether it be real estate, building your stock folio, etc. And if the CPI report comes in cool and lower, a lot of the time stock has a good chance to rally in an upwards direction. Same thing with the indexes, known as the NQ, which is going to represent for the NASDAQ 100. You're going to have the ES, which is going to represent the S&P 500. You're going to have the Dow Jones, which is going to represent the YM, also known as US 30. Okay, so each one of these things are going to be affected by the CPI. So CPI is an extremely important report. And what you might see actually a lot of the times is price action slowing down, getting a little choppy, getting a little slow before the CPI report comes out, because people are holding their tongue, freezing their water. Before I blow this bread, let me make sure market's doing what it actually needs to be doing. And then boom, they're going to go ahead and put that money down. So watch the trend. One bad month is not a crisis, but trend is. Watch how the trend shifts after CPI. Does market want to head in an upwards direction? Does market want to go in a negative direction? Okay, and for how long? Make sure you're trading with the trend. Trading with the trend is going to be the separation tool between being profitable and unprofitable. Okay, you have to make the decision that the market is making. Otherwise, you will lose money. If market's going in an upwards direction, that is the direction that you're playing in. And it's not at all-time highs, then that's how you should be playing. Okay? If you're on a forex trade for something like that, for example, and the CPI report comes out and the currency pair starts going downwards, okay, then that's going to go ahead and let you know the trend. I don't care if you're on stocks, forex, futures, wherever. Be wary of the CPI report, especially before you put in the trade. Okay, keeping an eye on news, and a lot of times you'll notice too, news is going to be baked into the price action too. So try not to fight the Fed. If CPI is high and rates stay high, try to adjust your portfolio. Okay. Stay prayed to God. Keep growing. If you want to learn more about investing, head over to Stackmode.net. I'm here for you guys. Any type of situation, whether you guys are struggling with unprofitability, whether you're profitable right now, but you just want to be a little more consistent, you want to see how you can funnel more of your income, just come a free call. I'm here for you guys. Catch you. That's the next one. Peace. Welcome to the beginner-friendly guide to trading futures. I'm going to make it extremely simple for you guys. Futures might sound intimidating. They're just contracts that you trade the future price of things like oil, gold, and even like the S&P 500 or NASDAQ 100 without ever actually physically. And the best part, you can start small, control big positions, react fast to the market. And here's how it works. You pick an asset, whether an index, currency, or commodity, decide whether you think the price will rise or fall, and place your trade and let the market move. If you're right, you win, profit. And if you're wrong, then you lose, but only what you put at risk. And it's that simple. And when you understand the rules, it all comes together over time. But here's the real secret. New traders really fail because they treat it simply. Successful traders treat it like a business and a skill. They use levels, trends, risk management, and most importantly, have a trading plan every single time. Because the thing about futures compared to any other asset, you know exactly how much you're going to make and exactly how much you're going to lose per trade. So in this video, I'm going to break down the basics in the clearest way possible, showing you exactly how futures work, how to manage your risk, and how to avoid the biggest beginner mistakes so you can trade confidently. Let's jump into it, inshallah. All right, let's talk about trading futures. I'm going to make this guide extremely simple, okay? I'm not going to make it difficult. I'm going to keep it simple. I'm going to keep it easy. I don't want you guys to be struggling. I don't want you guys to be going through hardship, okay? Futures is a way different game, okay? The discipline required to trade futures is night and day compared to anything else, okay? Futures, you need that real hardcore discipline. High risk involved into it, but you get disciplined, you learn how to control your flesh. There's a high reward involved into it, okay? You can make money very, very quickly, okay? So let's go and jump into futures. So what is a futures contract in the first place? How about locking in the price? So a futures contract is simply an agreement to buy or sell something at a specific price on a specific date in the future. So let's say, for example, let's say a farmer grows corn, okay? And he's afraid that the price would drop before harvest. So he signs a contract today to sell his corn for $5 in December, okay? And no matter what happens, he gets $5, okay? He just traded a future, okay? Or a lot of people have been able to make money just like this. Say a price of something like eggs, okay, were to be increasing, okay? Some people were to buy futures and prepare to increase in the cost of eggs, okay? So if you think the NASDAQ 100 is going to go up, the NQ, then you would go ahead and buy a long, okay? So a futures contract is being able to speculatively buy a directional bias and get paid based off of it. So you're buying whether or not, if you want to buy a contract for buys, okay? Or you can buy if you think something's going to go down, okay? So it's going to be two ways you can be able to trade futures. You can buy contracts, or you can sell contracts if you think things are going to go in a downwards direction, okay? So you can prepare for the future in whatever speculative direction. So what are we actually trading in the first place? So we're trading standardized contracts. So we rarely trade the actual physical corn or oil. We're trading the contracts. And it's standardized. So every contract is identical, okay? Has the same size, same expiration date. And that's what makes futures so linear. On futures too, you know exactly how much you're going to make and exactly how much you're going to lose due to the fact that the tick size is, okay, which is how much money a futures contract moves, okay, it's going to stay the same. The only thing that's going to ever increase is the amount of contracts that you're playing with, okay? But as far as your tick size and as far as the amount of money per tick, that is always going to remain the same, whatever contract you're looking at. Let's talk about liquidity. So you can buy and sell these contracts in milliseconds. Now, futures gives you a lot of control in your hand in 1 second, okay? You can easily click buy, and once again, it gives you the ability to buy or sell and get some money based off a directional bias, okay? So you have the ability to buy or sell and get some money based off a directional bias, okay? So has a lot of discipline that comes into play when it comes to trading the futures asset, okay? Because you can instantly just get in and get out. Options, you got to go out and find the contract, etc. It's not that easy to just enter in a trade, okay? But with futures, you can instantly just buy or instantly click sell and place in a directional bias trade, okay? So make sure that you know what you're trading, you understand margins, okay? And what margins are is going to be the amount of money the futures contract is going to require, okay? So say, for instance, you're trying to trade the S&P 500 futures contract, the ES, okay? You're trying to trade the ES, then you might need at least $500, okay, inside of your futures account in order to open the trade, okay? So understand that all the tick amounts are going to be the same, and as well as the margin amounts. Please look at the margin amounts on your broker before you start trading futures. And traders usually close the contract before the day arrives, so they never have to store 1,000 barrels of oil in the first place. So a lot of times you're going to see an expiration date on futures contracts, okay? So let's say, for example, you're trading the ES, okay? You might see something like ESQ, okay? And when you see letters, each one of the letters are going to represent different expiration dates, okay? So let's go and jump into the next slide. And the main reason why people like futures in the first place is going to be the leverage, okay? It's an extremely powerful asset class to be trading, okay? But you can't blow the bag. You can't blow the bag, okay? You're going to be able to control more with less, okay? So this is why traders really love futures. With other things, you got to deposit, and it has more upfront cost in order for you to see some profitability. But with futures, you can really just deposit one time, okay? You only need one small deposit, okay, to cover the margin. So make sure you look at it. It's going to differentiate per broker, so I can't just give you a solid answer. Okay, on the NASDAQ 100, in order to trade the NQ futures contract, one broker might require $1,000 in order to trade it. One broker might require $5,000 in order to trade it. Okay, so whatever broker you're trading on, make sure you're looking at your margin, okay, requirements, so you know how much money you need in order to trade in the first place. Okay, so here's an example. Okay, so let's say your contract, once again, okay, is requiring a $1,000 margin. Okay, let's say you're trying to trade gold. Okay, let's say you're trying to trade the GC futures. You're trying to trade some gold. Okay, and the margin for gold, okay, is going to be $1,000. That means you would need at least $1,000 in your account in order to trade this futures. If you have less than $1,000 in your account, then what's happening is your account has the chance to get what's called liquidated. Okay, so if you need $1,000 in order to trade the asset class, you cannot go underneath that. Otherwise, your account is what's going to be called liquidated. Yes, futures is a leverage asset, but that comes at the cost. You have to have the bare minimum amount in order to trade with the leverage. Okay, that's the only reason why people trade things like prop firm and stuff like that, is because they don't have the capital for the margin up front right now. But be patient and stack up the capital, because trading on your own live account really does help. Makes things a lot easier, and you have full control over your funds, so you can feed yourself and your family however you want. You don't have time when you're playing on other people's rules. When you want to withdraw your money after you win a trade, you should be able to withdraw your money. So I really recommend live account. Okay, get your life together, grind hard. Okay, work on your business, work on your level up, get some money together, and boot up a live account. Okay, I don't recommend you guys trying to rush and go the prop firm route just to go ahead and avoid the margin. Okay, take your time, learn the skills. Okay, pay for some mentorship first, or sign up with a free call at Stackmode.net, and I'll teach you guys how we can trade futures before you just start trying to boot up a prop firm and trying to just take any type of ghetto weird trades. Okay, because there's a lot of things that come into the futures market. Okay, especially on a live account, your margin is going to be the most important thing. If gold says that they need $1,000 in order to trade gold, okay, you need $1,000, okay, in margin, okay, which is the bare minimum requirement in order to trade the asset class. You go on that, your account could be zeroed out, okay, or your account could go into the negatives, okay, if price moves too fast and clips past your stop loss, if you have one, okay, and if it moves too fast and clips into the negatives, then you would have to owe the broker money, okay, and if you don't pay it back, then they can sue you, etc. Okay, so make sure that you're paying attention to the margin cost on whatever broker that you're trading on. Every broker is going to be, okay, gold might require $1,000 to trade on one broker, might require $5,000 to trade on one broker. Okay, check it out and make sure you're doing your research. Let's go to the next slide. So, up or down? Okay, let's talk about long versus short. Okay, the difference between the two. So, it's shorting. Shorting is when you're betting on the price direction to go down. Okay, shorting means down. Okay, and longing means you think the price is going to go in an upwards direction. Okay, so if you're speculating that the Nasdaq 100, gold, or whatever asset class that you're looking to trade is going to go in an upwards direction, okay, then what you need to be looking at is looking to buy a long contract. Okay, so you're buying, okay, and going long. Since you think price is going to go up, okay, then you need to be buying, and that's going to be the long direction. If you think price is going to go down, you'd be shorting, okay, and you'd have to go ahead and purchase a sell contract. Okay, so go long, you buy contract, and you profit if price goes. And going short means that you're selling a contract, okay, and you're profiting if price is going down. It can be for anything. Okay, I don't care if you're trading egg futures. If you think the price of eggs are going to go down and you buy a short contract in egg futures, then inshallah you would make some money. So that's just exactly how it works. So because it's just a contract, you can agree to sell at a high price today, even if you don't own the asset. Okay, so do your research, and when you guys start putting the economy and your technical analysis information together, okay, because your economy information is absolutely futile to be looking at. You have to be looking at it. It's essential. Okay, it's very important to be looking at your economy information. The CPI, PPI, inflation rates, etc. Okay, seeing what recent laws are getting passed. Okay, things like that have a big factor in where the market is and where it's going. Most importantly, okay. So put your economy factors, and then get your technical side. Like, you know what, are we at all-time highs right now? Okay, ask yourself some important questions. Okay, am I ready to buy on this pullback? Okay, I'm gonna wait market to go down, and then I'm gonna buy up again. Okay, take your time and strategically plot and plan your trade before you make any rash, wild decisions. Let's head over to the next slide, class. So the danger zone, margin. Okay, just like we talked about, margin be dangerous. I don't want you guys getting sued. Okay, I don't want you guys getting served court papers or anything like that because you owe some money to the broker. Okay, and understand that sometimes your stop loss, okay, stop loss, that's what SL is, stop loss. Sometimes, okay, let's say you have your stop loss set at a certain price. Okay, if price decides to run past your stop loss too fast, you could end up losing more thought. Okay, so if you have your stop loss set for $400, okay, and price action moves fast way past your stop loss, okay, you could end up losing like $380. Okay, and if that goes underneath your margin requirement, also known as your maintenance margin, okay, which is the minimum amount required to even have the trade open. Okay, so since you're using leverage, you must maintain the minimum maintenance margin. Okay, so if you're trading the Nasdaq 100 on a broker and it says it needs $1,000 in order for you to have one contract open, okay, then you need to have $1,000. If you go under that, then you're gonna face what's called liquidation, which is pretty much account death. And once again, price action happens too fast, past your stop loss or whatever, you end up losing more than you actually expected. Okay, and that can lead to, God forbid, a margin call. So if your trade goes against you and your account balance drops below the minimum, okay, the broker will automatically close your trades and take the rest of it. Okay, so rule number one: never trade without a stop loss. Never trade without a stop loss. Okay, and it's very rare too. That price decides to just clip way past it instantly, and it fills you for a different number than what your stop loss was set for. But just know that it can happen. So it is good to have more money than your margin account. Okay, so if the margin or the maintenance margin requirements. So if the margin is asking for $1,000, okay, I would try and have like 2K. Okay, this way you guys can take some losses, etc. And you're not going to be panicking. So let's head over to the next slide. So the ticking clock. Okay, so unlike stocks, right, which you can hold forever, futures contracts actually expire. Okay, they have a time limit, and they're quarterly a lot of times. So most of them expire in March, June, September, and then you got December. Okay, and then we have rollovers too. Let's talk about rollovers. You might have seen this on your broker asking you if it wants to run contracts, etc. So if you want to keep trading, you must close the old contract and open a new one before it expires. Okay. So don't forget too, if you hold oil futures to expiration, okay, you're legally asking oil to be delivered to your house. Okay. And brokers a lot of the time usually permit this. Okay. So if you're just trading for pure speculative reason, which means you're trading off pure technical analysis and the chart, okay, then make sure you guys are closing trades before expiration dates occur. Okay, close the charts before the expiration dates occur. Makes things a lot easier. You're not gonna have to stress out about anything. Okay, just keep your digital money involved, and then you can take that futures income and buy assets with it. Okay, take that futures income, buy real estate, buy real life stuff. Do what you want. Okay, and cycle your money like that. So, what can we trade first place on futures? So we got the big three. All right, the big three. You got the ES. Okay, the ES is going to represent the S&P 500. Okay, and then we got the NQ. NQ is going to go ahead and stand for the NASDAQ. Okay, that's going to be the NASDAQ 100. Okay, which is going to be the powerful tech stocks. Okay, and then you're going to have the YM. Okay, and YM is going to be for Dow Jones, also known as US 30 for any forex traders out there coming to futures. Okay, so you got the ES, that's the S&P 500. NQ is the NASDAQ 100. And you got the YM, that is the Dow Jones. Okay, so the big three. Okay, those are really going to be the big three. And yeah, and then you're going to have things too, like crude oil. Okay, people trade oil as well too. And then you're going to have things, well, like gold, okay, which is a precious metal. So beginners often start with micro contracts too. Okay, so starting with micro contracts change the whole ball game. It makes things a lot easier when you can scale down, okay, and risk less. When you risk less, you have a lot less anxiety per trade, and you can catch way bigger trades as well too, due to the fact that you don't have that fear of, oh, I gotta hop out the trade, I have so much size in right now. No, you can let the trade ride out, do its thing, and play properly. Okay, you can let market do its thing. Okay, you can let market actually cultivate itself, and most importantly, you can risk a little and catch a big move. Okay, continue to keep yourself profitable and stress-free just like that. Inshallah. So over to the next slide. Breaking futures down, okay, from top to bottom is going to be extremely easy. Okay, we're trading the U.S. stock market. The U.S. stock market, it's made to go in an upwards direction. Okay, and all of these stocks are put into one index, creating the futures index. Okay, so breaking everything down logically, if I head over to the stock screener, okay, and I have my market set to United States, okay, I can see the company or United States companies. I'm going to have companies such as Microsoft, Nvidia, Apple, Google, okay? The whole world is using iPhones. The whole world uses Google to search, okay? The whole world owns Microsoft products. Okay? The whole world orders off Amazon, okay? And we have to also understand that these companies employ hundreds of thousands, if not millions of people, okay, all across the world. And these people are paying taxes. And the more beneficial it is for the United States government. So, of course, the United States stock market would be made to go in upwards direction. Okay, so forget getting lost deep in the technicals, okay? Because market is pretty easy to understand technically. It's just support and resistance, understanding where market wants to go. But understanding where market wants to go and why is going to be a big part. When you're trading the United States stock market, stocks are meant to go in an upwards direction year after year after year because that's the baseline of the company. America is built off of strong companies, okay? So take this area, for example. you're going to have areas where market decides to bounce from the bottom from. Okay. As you can see this area here, market decided to bounce twice from this area. Okay. We know whenever we see market bouncing within an upwards direction, okay, that's going to indicate that, of course, buying is coming into place. Okay. And when buying steps into place, that's going to let us know that that's an area of support. Okay? And we want to be looking at everything on our higher time frames first. Okay. So doing top-down analysis and looking at your chart on your higher time frames is going to give you that real bigger picture for absolutely everything. Okay. So start on your week time frame and then head down to your day, then your 4-hour, and then your 15-minute. Okay. The time frame is going to be your bird's eye view. Okay. We need to zoom all the way out to see the true trend of the market, where stuff is heading to. Okay. And how market wants to react on the higher time frame basis. Okay. The higher time frame is going to show us the true price action. It's going to show us where price truly wants to go, what it truly wants to do, and where the orders are truly being placed and stopped at. Okay. Your daily time frame, okay, you're going to use just to see a little closer for take profits. Okay. And then your 4-hour. We know the 4-hour is going to be really important because on the weekly and the daily, you can't see everything you need to see. So make sure that your electronic or extended trading hours is going to be enabled before you start trading futures. Okay. So now let me go ahead and pull up the futures chart. So now we understand what's inside of futures. Okay. We understand how it operates. And now let's talk about how to read the chart. Okay. So what I'm going to go ahead and do is start off on my highest time frame first. Okay. I'm on the weekly with it. Okay. So breaking down certain logical things. We know that market wants to go in an upward direction due to the fact that it's the most beneficial for the United States economy. Okay. Market wants to go in an upwards direction. Okay. It's the most beneficial for the economy. Okay. And the United States dollar is one of the most powerful currencies in the entire world. Okay. So our stock market is really, really important. We have innovative minds that build world-changing companies here. Okay. So putting that into perspective, we know that whenever we're trading the stock market, as we can see on the weekly time frame, price is meant to go up year after year after year after year after year. Okay, regardless of how many new lows are being made, okay, we could still see price heading in an upwards direction year after year after year after year. That's because that's what it's made to do. The United States' backbone is built off of companies and work. Okay, so this is pretty much be looking at real life in chart form. Okay, so as more companies get created, as technology starts expanding, okay, etc., you can start seeing more money being pumped in to the economy. Okay, thus leading the index to go in an upwards direction year after year after year after year. Okay, so trading futures, a lot of the times you're going to be looking to trade longs. Okay, so what a long is means that you're going to be trading in the upwards direction. Okay, so the futures you get paid based off speculation, which means you get paid based off your direction bias. Okay, so primarily, it's logically in the higher time frames, we see the market going up year after year after year after year after year. Okay, we're going to go ahead and focus on buying up. Okay, since the market is made to go up, let's focus on the direction where the market is made. Okay, the reason why people short is Forex traders came on and influenced U.S. traders, and people who are in the U.S. are not trying to short. Okay, so you can see this is going to be the United States index, the Nasdaq 100, goes up year after year after year after year after year, almost undoubtedly. Now let me go and pull up some Forex. So I got Forex here. Okay, I can go all the way back here on Forex. We can see that all-time highs is way higher than it is today. Not work the same. Okay, the United States stock market is meant to go in an upwards direction. Forex is going to be a lot more sideways. So don't let Forex traders influence you if you're a United States stock market trader. Meaning if you trade options, if you trade futures or shares, understand that these companies are meant to go in an upwards direction. It is not sideways Forex is. It is two completely different instruments and asset class and has to be treated as such. Okay, now let's continue. Okay, so we know price is going to go ahead and hunt this all-time highs up here. Okay, price is hunting all-time highs. Let's talk about the V formation. Okay, so market will continue to head up in upwards direction year after year after year after year. Once again, for the greater good of the world. Now, it's about knowing when to buy. So you don't want to buy when market is at all-time highs. Okay, because remember, we make money whenever we buy longs, which means we want market to go in an upwards direction. So in order to buy and be profitable whenever market's going in an upwards direction, we can't buy at the tippity top, because then we're just going to eat the whole drawdown. Okay, so you never want to buy at all-time highs. Okay, never buy at all-time highs. Okay, so all-time highs is going to be the highest point into the market, and you never want to buy all-time highs. Not worth it. Okay, because then you're just going to get pulled back on. But understand that market always wants to try to make new all-time highs. Okay, so let's put something together. That means that market will always want to hunt an area of resistance above current price, okay, to try to meet it again and try to break it, or sometimes might meet it again, okay, and then price might decide to reverse hard. Okay, so this is why we want to go ahead and close at the area of resistance, okay, where market decides to fall down from in the first place at all times. Okay, all of our trades are going to look the same from now until we fall off the earth. Okay, until it's time to die, all your trades are going to look the exact same. Okay, we're going to focus on letting market make the top left of the V. Okay, that's going to indicate the area of resistance. We want market to fall down first. After market falls down, you want it to also make the bottom of the V. Okay, so you want market to do two things for you. Okay, you want it to make the left side of the V and the bottom of the V. Okay, the left side of the V is going to indicate where it decided to start falling down from. Okay, so the left side of the V indicates where market decided to start falling down from. And the bottom of the V is going to go ahead and indicate whenever price wanted to stop falling and catch itself. Okay, and whenever market stops falling and catches itself, okay, that's going to indicate an area of support. So support equals buying. Okay, support equals buys. And the top left of the V is going to go ahead and equal resistance. Okay, resistance is going to go ahead and equal selling. Okay, sells. Hence why market's going in a downwards direction. And then once people start buying, longing, okay, buying and longing is the same thing, then market's going to start going in an upwards direction. And understand that logically, okay, because market wants to try and always make new all-time highs, we can put some logical perspectives together. Okay, we can understand that wherever market decides to fall down from, market will eventually try and reach that area again to smash past it, or reverse from the area to try to smash past it again. Okay, so understand that wherever market decides to fall down from originally, okay, wherever market fell down from, it will try and recover too. I don't care what it is. Okay, wherever market fell down from, I don't care if you're looking at futures, stocks, options, whatever. Okay, wherever market fell down from, if it's a half decent asset that people invest into, it will try and recover and break past where it fell down from every single time, because that's the greater good for the economy. Okay, the stock market isn't just going up to go up for no reason. Okay, so I don't want you guys to just be faked out, and I'm not going to be showing little 15-minute breakdowns of structure and this and that. Understanding the true logistics between everything is going to give you a lot less anxiety when you're in your setups. You're going to have such conviction. You're going have so much understanding and understanding that, you know what, price has to go up. It's logically meant to go up. Price already sold off. Buying has stepped in. Price is going to go ahead and meet up to the area where it sold off at to try and break into new all-time highs. And you continuously farm that logical structure. You continuously take the same setups. Okay, when you see the staircase stock chart emoji, okay, understand all you see is going up, pulling back, going up, pulling back, going up, pulling back. Okay, and when you see market making these higher lows, okay, this low is higher than this low. Okay, this low is higher than this low. Okay, we got this low is higher than this low. Once you start seeing market making higher lows and breaking previous all-time highs, okay, you know trading a good asset class. Okay, that's going to be an asset class that you want to be focused on primarily, because all you have to do is wait for market to make these little pullbacks. Okay, please pay close attention to this drawing. Okay, that's exactly how market works. All market does is go up, come down, and go back up and break where it previously fell down at. Okay, and take advantage of that. Wherever market previously fell down at, it will almost always want to meet it because it has to break it in order to make progress. So wherever market decides to fall down at is going to be your take profit. Okay, so your take profit, which is when you close and you get your money, that is going to be wherever market decided to fall downward at. Okay, wherever the left side of the V was created is when you're going to take your profit, because we don't know if market always wants to break into new all-time highs. Okay, market could easily come into the resistance again, okay, and fall down extremely hard, okay, and then one day again, but still you don't want to eat the whole fall down. Okay, just take advantage of the logic that's there. Understand that the right side of the V wants to be filled. Price wants to recover from where it fell down from. Okay, it may not want to break it immediately, but understand that a lot of the times it will want to at least recover from where it fell down from. And that window of price recovering to where it fell down from is our money window. Okay, that's going to be our money window. So using all of our time frames and seeing everything and doing our top-down analysis is to help us put it all together so that we can make the right profitable decisions. Okay, so let's go and keep going here. So take here. Okay, even if I'm on here, let's start on my weekly. Okay, I know price wants to come up to this all-time highs. Okay, we just went ahead and broke down all the reasons why. Okay, I can see we're not at all-time highs right now. If you're not at all-time highs, okay, there could be a chance to get a trade in. If you're not at all-time highs, there could be a chance to get a trade in. If you're at all-time highs, you do not trade. Do not trade at all-time highs. Okay, we need market to make the left side of the V, let market pull back. Okay, make the bottom of the V form support, and we catch the right side of the V right back to where it fell down from. Keep it simple. Keep it simple. Some of you guys are making market way too difficult. No need for all this weird stuff on the 1 minute. No weird terms like the silver bullet. Just understand that wherever market fell down from, if it's a profitable asset class, okay, and the whole United States runs off of these futures. Okay, if you turn on news and you look at the bottom left, you're gonna go ahead and see it tracking futures. Okay, the whole United States runs off of the stock market. Okay, so understand that. Once you understand that, you can easily just start your higher time frames and making a lot better decisions. Okay, so even here on futures, if I wanted to do something like this, okay, could easily make your trades. Okay, you could easily put down a trade, okay, and just catch it all the way to all-time highs. Okay, and catch the whole thing. You know price wants to go and fill all the way up here. Okay, but even if you didn't do that, say you didn't have enough margin, right, to hold overnight, right? Here's what you would do. Okay, what you can do is hop on your daily. Okay, if you wanted, you could put your, depending on how big of it is, depending on how big of a stop it is, saying have your stop loss set. Okay, find a good stop loss that works for you and your account. Okay, you can go to your 4-hour time frame after your daily, and you want to find yourself a support candle. Okay, find yourself a support candle if you can. Okay, whether it be this one, Okay, this one, okay. Try and find yourself support candles. Okay. Then from there, go ahead and just read the structure. Okay. So we can see market is making higher lows. Why? Because I'm looking at the support candles. Okay. So I'm seeing to these support candles conjunction areas heading in an upward direction. Okay. Time after time after time again. Okay. So we know that, okay, this asset class is definitely bullish. Okay. This low up here is higher than this low. Okay. This low up here is higher than this low. This low up here is higher than this low. This low up here is higher than this low. Okay. And you keep taking your formations like that. Okay. Now, I can go to my 15-minute time frame. Okay. And I can see everything more logically for what it is. Okay. So I can see here. Actually, I'll stay on my 4-hour for a second. Okay. We can see price decided to come in contact with this area here, resistance. Okay. We can see price wants to come up here first on the 4-hour. Okay. So what I'm gonna do is go to my 15-minute. Okay. And I want price to show me bullish structure. Okay. So this is exactly what I mean. So price decided to make the left side of the V here on the 15-minute. Okay. And getting on the 15-minute is where it gets nitty gritty. Okay. It's really turning on your sharding gun, making sure you see everything that you need to see, and putting that same higher time frame logic on the lower time frames is what's going to make a world of difference. Okay. So go ahead and get on your lower time frames after you've done your higher time frame analysis. Okay. I'm trying to make you guys the best traders in the entire world because it's not that difficult. Okay? After I touch $1 billion from this, so many free guys that's going to be out for you guys. Okay. This is not hard. It's just you have to get your psychology down packed. And inshallah. So look, you can see market decided to make the left side of the V here on the 15-minute. Okay. So on the higher time frame, this is the ultimate beginning of the V is up here on the 4-hour. Okay. We can see market topped out right here before it decided to fall down. Okay. Market decided to fall down all the way down here. Okay. Found an area of support and then started to make some higher lows. Once I start seeing things like higher lows come into place, I'm like, oh yeah, we're trendy. Okay. Because market doesn't want to go past these supports. Okay. Look at this line right here. And let me go and change the color of this. So if you look at the yellow line, we can see market these wicks that did not want to go beneath. Okay. Now we have this line here, did not want to go beneath. Okay. And then we have the support accumulation zone up here. Okay. And price looks like it wants to hold this area right here. Okay. Price looks like it wants to hold this area very, very confidently. Okay. Price looks like it found another area of support right here. Okay. So I can start seeing here, I have a 4-hour wick and I have a 4-hour lows above the zone. Okay. So I like that. Okay. I have a 4-hour candlestick above the zone and I have a 15-minute candlestick above the zone. Okay. So I can see that market is trending. Okay. In upward direction, market fell down and it looks like it's trying to make the V right here. So then it can go in an upwards direction from here. Okay. And at least hit this resistance. Okay. And this profit window is what we're going to use in order to make our trade. Okay. Then from there, you'd be able to pull out your risk to reward tool. Okay. To be long position. Okay. You could put your stop loss below this area of support if you want, and then take profit would go ahead and be the area of resistance up here. And we play this for a 1 to 2 about. Okay. So you play this for about a 1 to 2, catch your trade, and hop off. Okay. Or even if you wanted to play the take profit up here, you could play this one too. Or if you had multiple contracts, you could do it like that. Okay. But if you just wanted to play the first 15-minute V structure after the higher lows were created, then you head and get in just like that. Okay. So it's doing that top-down analysis, seeing everything, okay, and then catching the V structure, even on smaller time frames, breaking everything down and seeing it for exactly what it is really going to help you put things into logical perspective and help your trades over time. Okay. So we can see market decided to make the main V here. Okay. So starting off the weekly. Okay. We got all-time highs. Okay. I can see decided to make some higher lows here, even on the weekly, even on my daily here. can see market made the top of this main V up here, all-time highs. Market fell all the way down and made the bottom of the V on the daily. Now I'm going to go to my 4-hour time frame, okay? And I can see market decided to do its thing, okay? Markets decided to trend in an upwards direction, and I can see all the higher lows on a smaller time frame for exactly what it is, okay? I can see that market decided to make this area of resistance here, fell down, but it's still trying to trend up to fill in this V right here, okay? And ideally, it wants to fill in the whole V, okay? So what we can do, I could get on my 15-minute time frame here, okay? And I can open my trade, okay? Catch my 1 to 2 and catch it up here. Or I can move my take profit to up here if I wanted to as well, okay? Again, keep my stop loss as this support right here, okay? And have the take profit as the final V all the way up there, okay? So it's just about knowing when to enter, okay? So on your 15th, you want to make sure that you're seeing that recent support structure, okay? You want to make that you're buying when everyone else is buying. Once again, let me repeat that one more time. You want to make sure that you're buying when everyone else is buying, okay? So if market right here just made the left side of the V, okay, and then the bottom side of the V already got made, so market already dumped down and it already made a bottom, okay? What direction is it most likely going to go into from here? Nice, okay? Because people already sold, okay, and the low already got formed, okay? And understand that this asset class also has laws in place to make sure it doesn't flash crash to zero, the short tail restriction, okay? So don't expect more markets going in a downtrend for it to last too long, okay? Because people are going to be fiending to find a new low to buy it again because they know it's going to go up year after year after year, okay? So on futures, primarily try and focus on the pullback formations. I'm going to go ahead and pull up the S&P 500 futures. Now, that is the ES. Okay, let's go and let's cover this and break it down. So what I'm going to go ahead and do, just like we talked about, is I'm going to start on my weekly time frame first, okay? Then to my daily, then to my 4-hour, and then to my 15-minute, okay? Then to your 15-minute, finally, okay? So what I like to go ahead and ask myself, are we at all-time highs? We not trade if we're all-time highs, okay? We just can't. We want market to pull back first, and then we take it back up, okay? Don't trade at all-time highs. Don't do that. Don't do that. Don't short. Don't long. Don't do nothing. Wait for market to pull back, and then take it back up, okay? Wait for market to form. If there's no resistance above current price, do not trade. Once again, if there is not resistance above current price, okay, if you can't get on your time frames in market area of resistance above current price, like right here, okay, then you shouldn't be trading. If market's way up here and there's no resistance above current price, you're gambling, okay? You're not playing logic, okay? Market works in structured formations, okay? You know market wants to come and head to this area of resistance right here. As you can see, market decided to make this bottom right here. Price went all the way up from this bottom and stopped here, okay? After it stopped up here, it decided to make it flash down all the way to this low, okay? So this is a pretty strong area of resistance. If they can make it flash for about a month downwards, okay, it's a strong area of resistance. Market wants to dust off its knees, throw on its gloves, and get ready to fight again, okay? It doesn't want to lose at this area, okay? So after it lost the fight once and it failed, it's ready, you know? It's ready to back up and fight again. So always think of market as a fighter, okay? After it got knocked out, punched in the teeth, all their teeth on the ground, okay? They come back, mouth guard in, gloves in, training sessions done, and it's ready to fight and break the new all-time highs again, okay? So it's real life too, okay? There's going to be seasons where you're dumb up, but when you fall down, are you going to panic? Okay, trading's the same way. If you panic sell while market's falling in a downwards direction, okay, instead of just waiting for market to bounce at a certain low and then by then you're going to get your results, okay? So when you're drowning, you're falling down, you can't panic, okay? You got to wait, catch yourself, and then go right back up, okay? So right here, even logically, I know price wants to reach this area of resistance. Okay, price is upset that it fell down from here. It almost can't believe it that it lost. Okay, it lost at this area right here, and sellers stepped all the way in, stopped buying from here. Okay, and market's like, hold on, you know what? Who said sellers can step in right there? Okay, it doesn't like that. It's gonna try and break past that area and do it over and over and over again until we die. Okay, that's just how it's created. It's how it works. It's welfare sitting here for us, sitting here. Okay, all you have to do is plant your seeds. So boom. So market is go ahead and chase this main V up here. Okay, and I can know that because one, market decides to bottom out after making that heavy fall down. Okay, and we're almost fully recovered here too. But I can also see market making on my 4 hour higher lows. Okay, so I can see that this low is higher than this low. This low is higher than this low. Okay, I can start seeing this low even here too. Okay, and then let me get on my 15-minute time frame. Let's check it out. Okay, so on my 15-minute time frame, let's see everything a little bit more logically. Okay, even right here, this is going to be an area of support here too. Okay, that's a very, very recent low. Okay, and we can see, okay, price decided to fall downwards recently. Okay, price recently fell down from this area of resistance here on the 15-minute. Okay, so what we need is to see market hold an area of support and see if it's really for true. Okay, so after market decided to fall down from this area right here, it came down, and it looks like it made this kind of candle right here of support. Okay, so after a heavy sell-off, you want to see, okay, did market try and bounce from that at least? Okay, so we can see even right here for this top, okay, market decided to have a heavy sell-off, but it decided to find a low right here, correct? Okay, market decided to even come down, test it in the same area. Okay, so I want to see, okay, is this a higher low? Okay, this low right here. Okay, I want to see if this low is a higher low than this low for real. Okay, so what I'm going to be waiting for is I want more 15-minute candlesticks that are green filling in the right side. Okay, so I can see this low right here is real. Okay, you know this low is real because outside of the zone, okay, you start seeing green candlesticks heading up in an upwards direction, buying multiple green candlesticks in a row. Even down here with this low, okay, you know this low is real because you start seeing green candlesticks heading in an upwards direction, ready to fill in the resistance gap. Okay, but we can see here from this low, okay, it's just a wick. Okay, after this, it's red candlesticks, green, red, green, red, green, really choppy. Okay, really choppy. Hasn't started fully trending yet. Okay, has not started fully trending yet. Okay, after market found this low, green candle, green candle, green candle, green candle, you start seeing them rapidly success in a V direction. As you can see, it decided to kind of make this wick, but then a red candle, and then a green, but then red dojis, and then not really consistent. So I don't even know if this low is real. Okay, so I'm not going to take the trade here yet. Okay, I'm going to wait for more 15-minute candlesticks to keep heading in an upwards direction. Okay, I want to see price fully give me that V curl. Okay, one thing too, especially when you first start off and it's helping you eyeball, you can draw a trend lines too. Trend lines, like when you first start, could help you out too. Okay, it's really just knowing where the area of resistance is. Okay, so look at where price decided to start falling down in the first place. Okay, price started falling down up there. Okay, in this area up here. Okay, from there you can draw the trend line off of that, and a lot of the times, by the time the trend line gets broken, it'll let you know if the area of support is real for the most part. Okay, but that's why trend lines work, because price is confirmed. Okay, but you have to close at the area of resistance above current price, otherwise it's all going to be shambles. Okay, it's not going to work how you want it to. Okay, so even with here, honestly, it's been a couple minutes, honestly. That's why I like to wait for multiple 15-minute candlesticks. So you have this low, and then you have your candlesticks above the zone 2 that's closed. Okay. So either wait for the trend line to get broken and then enter, and then stop loss can be under the low and take it up to the high. Okay. And it's about knowing when to buy. You buy directionally. Okay. You want to buy after market sells. Okay, logically. Buy after market sells. Okay, that's it. You buy after market sell. That's literally how you trade. Okay, that's how you trade the United States stock market. Okay, is you buy after market sells off. Okay, after it sells off, then you buy. Okay, so even this here too, like yeah, you could avoid if you wanted to just wait for the trend line, honestly. Or you could take your chance and see if this low is pretty real. We're starting to get some more 15 minutes here that I like. Yeah, and we could either do that, or I really like this too, though. We have a kind of higher low being formed here on the 15-minute. So a lot of the times too, you see how this area of support got tested like twice. So sometimes it would do that. Take like a price like right here. We got two 15-minute candlesticks stopping in the same place. Okay, after I see something like that, that's gonna let me know, okay, price doesn't want to break below the support. Okay, give you way more conviction. Okay, price would have broke below the support if it wanted to, not bounce the same place. Okay, once I start seeing stuff like that on my 15-minute, for sure, yep, I can go ahead and I can get it right here if I wanted to. Okay, loss underneath this low. Okay, and then take it all the way up here. Okay. Yeah. For the 15-minute time frame. So yeah, this could be like overnight. Could be a couple days. Yeah, for sure. A couple days max if it's choppy. But a lot of times it'll be like a couple hours. So yeah, and then you just take that structure and you just keep taking your trades. Just keep taking your trades. Okay. It's a very small stop loss here. It's 31. Let me go ahead and log in to pick trade here to break down the math. Yeah. So boom, you be playing for about 108 ticks. Okay. So this is a really, really good trade. Okay. So you're only risking, okay, let's say you're on the micros. Okay, you'd be risking $45, right, to make 135. Okay. So that's over double your money. Okay, and it's a pretty small take profit. You could definitely take profit up here as well too, if you feel comfortable holding a little longer, for sure. Okay. So if you wanted to take profit up here, okay, that would be playable up here as well too. Okay, so you'd be risking $45 to make 180. Okay. And just wherever market decided to fall down from, it will want to return to. It will want to return to almost every single time. As long as you're trading, whenever market is making higher lows, okay, understand that market is always going to want to fill in and return and try for vengeance again from where it fell down from. Okay, wherever market fell down from, it's going to try to recover. Okay, it's going to try to recover, and keeping that perspective is really going to help you. Okay, after market makes its low, falls down. Okay, let market make its own area of support. Okay, and we can see on the 15-minute here too, once again, areas of higher lows being formed. Okay, I have this area right here. Okay, I like this candle a lot. After that, price went all the way up. Okay, fell all the way down and then made this low. Then price went up. Okay, came down and then made this low. We got two 15-minute candlesticks chilling in the same place here. Amazing area. Okay, so I wanted to stop loss underneath this area of support since we look like we're trending here. Okay, and then take it up to this area of resistance. Okay, for the whole formation build. Okay, and it's about just waiting for pullbacks, taking the trade, wait for pullback, and then take the trade. Okay, and being as patient as possible is really going to be the determining factor versus profitability and just ability. Okay, and buying during trending times. Okay, because you can't just live on your 15-minute time frame and try and do things like that. Okay, it's still important to do the whole top-down analysis. Because we did the top-down analysis, I was able to understand the 15-minute time frame structure a lot different. Okay, because the 15-minute, if I just pull it up, it could be a whole different story. Okay, but we're on our higher time frames. We can see everything for what it is. We can see that this is the bullish asset class year after year after year, and all we got to do is buy the dips and catch the sweeps back up. Okay, that's it. So get ready to rumble, traders. Okay, if you guys want more help with futures trading, okay, whether it be education, technical analysis, or anything, head over to Stackmode.net. You guys can book a free call with me. I got free courses, free ebooks for you guys, and there's just too much information out there, okay, that I really try and give you guys to help you get profitable, inshallah, if God wills, okay. And let's break down these things, okay. Understand leverage gives you a lot of power, okay, but you got to be in control of this. This could be a really good thing or a really bad thing if you don't have it down packed. So make sure you study yourself as a human. Make sure you're aware of your emotions. And don't crash out and make irrational bad decisions. Okay? And liquidity gives you speed. Okay? Whenever everyone is buying, okay, you start seeing price action flood in a upwards direction. Whenever everyone's selling, you start seeing price action flood in downwards direction. Okay? And risk management is the thing that's going to keep you alive. Okay? And your risk to reward. Okay? So if you're risking $50 a trade, you need to be at least trying to make 100 to 150. Okay, if you make 100, that would be a 1 to 2 risk to reward ratio. If you make 150, that would be a 1 to 3 risk to reward ratio. Okay, and focusing on your risk to reward ratios is how you're going to become profitable. Math. So if you're making more than you lose consistently, you will become profitable. Okay, and start with paper trading and start with mentorship first. Okay, so head over to Stackmode.net. I love you guys so much. Keep grinding. Stay present to God. And I'll catch you in the next one. Peace. If you're not familiar with cryptocurrency or how it works, let's fix that right now, because today you're getting the ultimate beginner-friendly cryptocurrency that actually makes sense. No hype, no jargon, just straight clarity. Crypto isn't just internet money. It's a digital system that lets you send, store, and grow value without needing a bank. And the best part, you don't need to be a tech genius to start. You just need the right roadmap. I got you. Step 1, I'm going to teach you guys how to understand Bitcoin. It's the foundation. Think of it like digital gold. Know the difference between coins and tokens. Coins run their own blockchains, and tokens live on blockchains. I want you guys to understand risk management. New investors lose money because they skip this. Never invest based on hype. Always focus on projects with real utility and making sure that it's putting a smile on people's faces in the future. Let's go on and jump in and let's understand what cryptocurrency is, inshallah. So let's go and do a deep dive into crypto and let's understand it, inshallah, if God wills. So why does crypto matter in the first place? It solves the trust problem. So traditional money relies on banks, okay? So the money sits inside the centralized bank system, okay? And within that system, people can only make certain decisions with their money. If you have 100,000 parked in the bank, you can't go to the bank and pull all of it out immediately. Same thing with certain apps like Cash App, Zelle, etc. There's going to be withdrawal limits, and there's going to be deposit limits as well too, okay? Due to the fact that the bank has to centralize and control everything, so that on their end, they have to have enough money to distribute to everybody, okay? Because the bank is using our money. So understand that if the bank freezes your account as well, then your money is going to be gone. Crypto solves all of this. It's censorship resistant. No government can stop a Bitcoin transaction, not a single one. You can be in any country in the world, and it makes it permissionless. That's the main reason why people fight so hard for cryptocurrency. It's because it's righteous. You know, everything doesn't need to be rat race and controlled, especially with other things being controlled as they are. You know, you have to go pass emissions for your car before you can drive it and do certain things already. So the fact that we can't spend our money or withdraw money how we want is a problem. It's a problem for me and a problem for many other people. And thank God we have the resolution for this. Cryptocurrency has come into play to solve this. Also, it becomes an inflation hedge too. So central banks continue to just keep on clicking print. Okay? They print constantly, over and over and over and over again. Keep on clicking the print button. Okay, making it worth less. And Bitcoin has a fixed supply, which makes it scarce. And that scarcity has a lot of value built into it, just like gold, diamonds, etc. Anything that has less or has a strict supply, okay, is automatically going to go ahead and be valuable. Okay, anything that has less supply than something else will be more valuable a lot of the times. And cryptocurrency is giving you true ownership on your currency. Okay, you could be any country in the entire world, as long as the country has a bank account system that lets you withdraw from certain brokers, such as Coinbase, etc. You can take that money from your cryptocurrency, spend it anywhere in the world. You don't even have to transfer it to fiat currency if you don't want to. You could easily just get your cryptocurrency, spend it on like Coinbase card, and you can easily just spend your cryptocurrency straight up without having to transfer it to a centralized bank. So you can be completely your own bank, have total control and total responsibility for your money too. So there's also things that come into play with this. So say things like fraud. If you make a transaction on mistake, okay, for a bank, you could call them, okay, I did this on accident. Could this be reversed? And a lot of the time, since it is a controlled system, and it is technically kind of their money also, so they have these, pause things, freeze things, and make certain transactions not go through if it's ever needed. And that could be a good thing or a bad way too. Because say, for instance, you're trying to send some money to a family member in another country. They could also decline that wire transfer if they wanted to. Cryptocurrency, nobody can decline your transactions. Okay, nobody. Okay, you are going to be your own bank, and everything works on autonomous smart contract. So on a normal bank, if you wanted to send $10,000 to somebody, once a bank has the ability to say yes or say no. Okay, it's going to be completely up to them. But if you send it via cryptocurrency, instantly it'll go ahead and get sent over. Okay, but that's also putting more responsibility in your hands too. So because of that, you have to be making sure that you're sending your cryptocurrency to the addresses, and you have to be making sure you're sending the right type of cryptocurrency and sending it via the right type of networks. Okay. So because you're your own bank, you have total control. Okay, but that also means a lot more responsibility. So before you send certain cryptocurrencies and stuff like that, etc., make sure you confirm every single address that you're looking at. This way, you'll be able to secure transactions and making sure that you're getting your money and making sure that your transactions are hitting the way that they're supposed to. Inshallah. So under the hood of everything, right? Let's talk about the blockchain. So miners and nodes. The blockchain is not magic. It's a global network of computers. Okay. So nodes are computers that keep a copy of the ledger. Okay. They verify that you actually have money that you're trying to spend in the first place. Okay. And let's talk about POW. POW is going to go ahead and stand for proof of work, and it's how Bitcoin is created. Okay. So specialized computers that secure the network using energies, and they compete to solve math puzzles and problems to add the next block. Okay. So what's happening is these computers constantly running problems through it, okay, trying to figure out what is going to be the next block that needs added, okay, into the hash, etc. Okay, and these leaders take up a lot of power. Okay, so consensus of it: 51% of the network must agree on the truth. Okay, hacking it requires impossible energy that just doesn't exist, because it would have to go ahead and determine and calculate so many different type of numbers and transactions in order to see what next block would even have to be added into the other. Yeah. So mining is how Bitcoin is generated, okay, and not by pickaxe mining. Okay, so just like we know diamonds and gold, you need like actual pickaxe or a drill, etc. Okay, and then people go out there find it in the caves. Bitcoin works a little different. Okay, the computers have very powerful graphics cards and intensive hardware inside of them. Okay, and what they're doing is that they're solving problems constantly. Okay, so it's answering like 2 + 2 and trying to find the equal sign. Okay, acting out every math puzzle. Okay, trying to find the next block. Okay, and do that, yeah, you get rewarded with Bitcoin. So that's how Bitcoin is created. People have powerful computers that take up a bunch of energy, okay, which is why it can be able to mine Bitcoin as well too. And then those computers are trying to solve complex problems. Once those problems are solved, then the miner is then paid in Bitcoin. And that's how Bitcoin is created. So let's go over the big three, right? The big three. So the big three are going to be Bitcoin, okay? You're going to have your Ethereum, and then you're going to have your stable coin. So let's jump into each one of these and break it down. So you're going to have your Bitcoin. Okay, Bitcoin is going to be the most valuable cryptocurrency as of today's date due to the fact that it's infinite. Okay, there is a limited amount of Bitcoin. It's going to be 20 million Bitcoins available. It is not an infinite cryptocurrency such as Ethereum, Solana, etc. Okay, so that's why Bitcoin right now is the most valuable cryptocurrency. Okay, it's slow, secure, and most importantly, scarce, giving it baked value already. And it's not for buying coffee. Okay, but you can if you want. But it's for preserving wealth over decades. Okay, so think of it as digital gold. So understand that Bitcoin is here to fight against inflation. Because if these dollars keep going up, say 10 years ago, right? Say rent was $700 at one place. Okay, and in today's day and age, say the rent is $1,400. Okay, that means that the rent doubled. Okay, did people's income double? Okay, that might not always be the case. So when you park your money into an asset, something like cryptocurrency, okay, year after year, your money's going to grow just as inflation decides to grow too. So it's going to give you a hedge against inflation and being able to protect yourself from the economy going in the down direction, inshallah. So let's talk about the smart contracts. So just like we talked about, Bitcoin was created by computers that use power, okay, POW, proof of work, okay. Ethereum was created based off of staking, okay, POS, okay, which is going to be a lot less economy taxing some in order to create cryptocurrency. So pretty much Ethereum came out to prepare for when Bitcoin does go away, okay. So the computer, okay, it's programmable money. Apps like DeFi and NFTs are built on top of these. Okay, think iOS on Android. And for Solana, the reason why Solana is going to be really important too is because it's going to be used in order to trade meme coins. Okay, I'm sure you guys have heard of that. And meme coin be traded until you have Solana first, and then you're going to have utility and stable coins. Okay, so this is kind of going to be like the fiat currency version of cryptocurrency. So instead of parking your money into a token or coin or something like that, expecting some profit returns, okay, stable coins such as USDC, they add $1, giving you a safe place in order to park your money in the cryptocurrency world without it fluctuating up and down all the time. So utility tokens like Link provide data feeds, and meme coins like Doge are communities built on certain factors. Okay, so figure out what you want to invest in, figure out what works for you, and let's go and let's keep going. So whenever you start trading cryptocurrency and you generate a wallet on whatever broker you choose, okay, you're going to get a 12 to 24 word phrase, and this can be used to log into your account. So if you don't want to sign in with a usual email and password, because you know those can get hacked, etc., okay, you can use a seed phrase. Okay, it's going to give you 12 to 24 random words, and you can keep these words safe in order to get back account. So with cash, say the problem with that, you know, if you have a cash stash in your house, it can get moldy, you can get robbed, the house can catch on fire, etc. A lot of things can happen to cash. Okay, but with your cryptocurrency, it's like keeping your cash but digital. Okay, and it's not behind email and password. It's going to be behind your seed phrase. Okay, so you can write your seed phrase down. Okay, it's going to be 12 to 24 random words. Make sure you write them all in a row. Okay, they're going to be listed like 1, 2, 3, 4, 5 to 12, 24, etc. Okay, so make sure you have the order correct, because that definitely does matter. Okay, try and write your seed phrase on a piece of paper, a notebook you have, whatever. Okay, and never screenshot it. Okay, never screenshot it. Okay, Apple, people can get into your iCloud, and then people can get access to your funds. Okay, try not to type it onto a online computer software, like no Google Docs or anything like that. If you do, try to just keep it on a flash drive. You can do like a notepad, .txt file, something like that, and you can password protect it with 7-zip, and RAR, anything like that too, if you want it as well. Just try to keep it as secure as possible. So if you lose this, your money is going to be gone forever. Okay, no support desk can help you. Okay, it's just going to be gone out of existence. Okay, and it cannot be recovered. So make sure you guys are keeping your seed phrase secure, keep it safe, because this is going to be your longevity. This is going to be your money, and this is what's going to take care of you. Okay, you guys don't want to be losing this. Okay, inshallah. So let's talk about the trade-off of everything. Okay, let's talk about CEX versus DEX. Okay, so CEX is going to be centralized. Okay, so whenever you're thinking CEX, think of the normal traditional bank system. Okay, so pros, right? Some easy cut support. It's pretty easy to get your money back whenever things happen, but there's also going to be things that come into play. Okay, sometimes you might have a random 3 a.m. maintenance. There's been times where my crypto had to come clutch because my centralized bank is doing maintenance. Okay, but my cryptocurrency was available. Thank God. Okay, there's also been times where your funds can be frozen. Okay, and there's also going to be that Monday through Friday window in order to get paid. Okay, so times correlate versus when you get paid. On the decentralized network where cryptocurrency is traded, it doesn't matter. Everything is based on the peer-to-peer transaction system. Okay, if I send 10K to somebody, it'll most likely be in their account within a couple, or the crypto wallet within a couple of minutes or hour. Okay, if I send someone K via wire transfer, okay, it would have to be via Monday through Friday. Okay, and it would have to hit at like 6 a.m. or like 9 a.m. or something, some time like that. And keep in mind, the central bank, if they wanted to, could completely decline the transaction. Okay, decentralized, everything is peer-to-peer. No one can decline anything, but no one can also recover your mistakes if you make any. So it's decentralized. Okay, you get total privacy, you keep custody, and instant swaps are going to be available. But understand that there's no customer support. Okay, if someone says, yo, send me 10K Bitcoin, and you send them Solana, that's it, man. And you have to understand that that's it. So there's extreme responsibility. So make sure you guys are staying humble, make sure you guys are staying focused, make sure you guys are waking up and praying to God, most importantly, and keeping your head on straight. Okay, you don't want to be having a moment of franticness or having bad mental health and make an accidental decision where you just lose all your cryptocurrency. Okay, please don't do that. Let's talk about what gas fees are. Okay, and I'm not talking about gas that you put in your whip. Gas fees are going to be every transaction that has a tiny fee attached to it. Okay, that's going to be a gas fee. Okay, any crypto transaction that has a fee attached to it is a gas fee. So on Ethereum, this can be like $50. On Solana, it can be like 0.0001. Okay, so your gas fees will go ahead and fluctuate depending on what asset you're buying and purchasing. So what about the dangers of everything? Okay, we want to make sure we're being as safe as. So the fat finger error, this happened to so many people. Okay, if you send Bitcoin, okay, but then they're asking for Ethereum, it'll leave it forever, or some random person is going to go ahead and get the money. Okay, crypto transactions are completely irreversible. Always send a small test amount, especially if you're sending big amounts. Okay, if you're about to send 10K, see if $5 goes through first. Okay, if they get that, then go ahead and send it again. Okay, take your time. Do not make fast, overzealous decisions because you can very quickly destroy and lose all your crypto value on accident too. Is really the crazy thing. Okay, so if you want to trade cryptocurrency, you say you're ready to be your own boss. Be ready to stand on business, CEO. Okay, you got it. I believe in you guys. Manage your currency well. And social engineering. So hackers won't break the blockchain. Okay, what they'll try to do with you. Okay, they pose as support agents or send fake website links. Okay, or what they'll try and do is be like, oh, here's a 12 to 24 seed phrase, word seed phrase, and you can come in and try to log in and you'll get all this money. What they want you to do is deposit into that account. They have access to it, and then they go ahead and clear the account. Okay, do not log into anybody else's crypto wallet. It's not worth it. Stay logged in on your wallet. Stay focused back. Don't try to rob nobody. Don't try to get no money from nobody else. Stay focused on you and yours and what God has planned for you. And bear markets. So crypto sometimes has winter cycles, just like the stock market, where prices can drop 80% for certain cryptocurrencies, especially if they're not valuable, and stay down for years. So only invest money that you can afford to lock away for plenty of years. Okay, you should be on the brink of almost death before you pull out your money from your cryptocurrency wallet. Okay, try not to pull out your crypto wallet. Try to live off your credit card. Okay, and invest all your cash into assets if possible, inshallah. So the psychology and everything. Okay, it's time in the market. Okay, it's gonna be a lot better than timing the market. Okay, so many people are trying to time the market for exactly what it is every single time, but understand that sometimes You just gotta be in the trade time. Some of you guys are closing your trades way too early and wondering why you're not profitable at the end of the year. Okay, you need to have your life together outside of the markets so you can actually sit on your plays for some years and build some actual capital. So don't buy at the top. We're gonna go ahead and go over some chart work too at the end of the presentation, just so I can go ahead and let you guys know some quick sauce. So try not to buy at the top of all-time highs. Okay, wait for market to dip down. Okay, and then catch the sweep back up. Okay, but do not buy at all-time highs because a lot of the time you're just gonna go ahead and eat a pullback straight down. So the DCA strategy. DCA stands for dollar cost average. Okay, so you can go ahead and set up an auto buy. You can set up a certain amount of money per week too if you wanted to. And even if you did buy all-time highs, because your cryptocurrency is really going to be more like savings more than income. Yes, you're still going to be making great income after the years do pass, inshallah. But for the most part, it's really going to be more of your savings. So even if you did buy all-time highs, you can have that consistent amount that you're constantly investing in. Okay, I don't care if you do $50 a week, $20 a week, $500 a week. Comfortable you for your income level. Okay, and come back in 5 years. Okay, and I'm telling you, most long-term investors who don't even look at the chart outperform 99% of day traders. Okay, and that's a very, very, very true statistic. And you guys are going to be able to touch millions, okay, if God wills, without stressing yourself out. Right play by just watering your seeds today. Okay, so start growing your account. Be patient and keep going. So here's some golden rules for cryptocurrency. If it's not your keys, it's not your coins. Okay, if you have your cryptocurrency parked into a broker that's email, password, and any recovery keys or secret keys, it's not really your cryptocurrency coins. If the broker shuts down, then boom, it's not really your true crypto in your hands. So I recommend like Phantom Wallet or anything like that, where you guys can digitally store your crypto. Very, very safe. You can also store them on a hardware, physical device as well too, where it be the USB drive or whatever. And the golden rules of everything, right? Never share your seed phrase. Okay, your seed phrase is going to be that 12 to 24 word phrase. Okay, that's going to go ahead and keep your account locked. Okay, you do not want to be giving out your seed phrase. Okay, you lose your seed phrase, things can get difficult. Okay, no customer support you can call to just get your money back. So ignore direct messages. Don't log in with anyone 12 to 24 word seed phrase thinking that you're going to get money. Stop. Okay, purge any type of mindset where you're thinking about stealing or getting quick, easy money. Purge that. Okay, invest only what you can lose. Make sure you guys are paying your bills first. Don't think you're about to invest in cryptocurrency and you can ignore all your bills because you're about to hit the best play ever. That's not how a real investor would play. Okay. Structure your life, get it together, and then come on to the market. Okay, and do your own research. Okay, don't just get in because your friend said, "Yo, this is gonna be the best coin ever." Don't do that. Okay, because then you're not gonna have enough conviction and confidence to hold the volatility. Okay, if this is the play you've been researching for weeks, month after month and month, if price dips, you're gonna have so much conviction, and you might even re-add. Okay, so it's gonna be a lot of things when it comes to buying cryptocurrency. Let's go in how to read the chart. So reading the chart is going to be quite simple. What we're going to do is focus on our higher time frames. Okay, so what I'd like to go ahead and do is go for my monthly time frame. Okay, then from there, I'm gonna go to my weekly time frame, daily, and then 4 hour. Okay, so we're gonna go from the monthly to the weekly to the daily to the 4 hour. Okay, and when we do this top-down analysis, we're gonna be able to get the full bird's eye view of absolutely everything, just so we can see the full perspective of the market. So always start off on your highest time frame first, then scale down. Okay, and the smallest time frame I'm going to go to look at the cryptocurrency chart is going to be the 4 hour chart, because cryptocurrency you want to be holding for weeks, months, and years. So focus on your higher time frames. There's no reason why you should be caught up on the 5 minute, 1 minute, 15 minute trying to trade cryptocurrency. It's not the wave. You need to have the full higher time frame picture so you know how many years, months, weeks to hold for, etc. Also, before we get into the chart, understand that cryptocurrency always wants to go in the upwards direction. Okay, most people can only buy, and this is the same thing for stocks too. Most people can only buy. Okay, most brokers don't let people short cryptocurrency, etc., unless they're trading crypto futures. So the fact that people can only buy means that it's meant to go up year after year after year after year after year. Okay, so we do not want to be buying at all-time highs if possible. Okay, so what you want to do is wait for what's called a pullback. So pretty much buying anywhere other than all-time highs. So all-time highs are going to be up here at this current level of 126 right now at the time of this recording. I'm on my monthly time. I can see on the monthly time from this chart is up year after year after year after year after year. This is a bullish asset. So I'm going to go to my weekly time frame. Okay, and I understand something about the market. I know market always wants to go in an upwards direction if the asset is going to be valuable. Okay, which means people are always going to be looking for an opportunity to buy. Okay, because they expect for it to go up year after year after year after year. So with that logic, I know that price always wants to go and head to break previous all-time highs. Okay, that way it can continue to keep going. Okay, and see all prices break all-time highs. Okay, and then it'll go ahead and fall below it. Okay, and then make some new all-time highs. Okay, we'll fall from there, and then one day, inshallah, we'll try and get above this all-time highs too. Okay, and then we continue to go in an upwards direction. But within the chart, we have to understand that price has to go up in order to go down, and price has to go down in order to come up. Yeah, so price will always hunt an area of resistance above current price, or it's going to go and hunt an area of support above current price. Okay, so always know that. Okay, price will always hunt an area of resistance above current price, or an area of support above current price. So the strong area of resistance on every chart is going to be all-time highs. Okay, so you want to also be focusing on things that trend too. So if I'm looking at Bitcoin here, okay, I can see Bitcoin goes up year after year after year after year after year. It's not trending up year after year after year after year after year. It's a lot of the time there's going to be a lot more straining to make some profit within the decade's time span. Okay, so next thing you want to be looking for is the V structure. Okay, so all your setups should look like a V. So here's what I mean by this. So the reason why I say the V is because it will always make the left side of the V for you. Okay, the left side of the V is going to go ahead and be called resistance. Okay, so whenever you see market falling within a downward direction, that's going to be called resistance. Okay, so market will always make the left side of the V. Okay, it'll always make the left side of the V, and it'll also make the bottom of the V. So many people try to predict where market wants to bottom out at, and here's how you know if the true area of support is real. Okay, make sure you're on your weekly or your daily time frame. Okay, and then from there, once you see market deciding to curl in an upwards direction after heavily, okay, how you confirm to see if the V is real? You have the left side of the V. Okay, we got market trying to make a bottom of the V here. Okay, but we want to see if the side of the V is real. Okay, so the whole right side of the V, all this whole gap up here to the previous area of resistance, going to be money that we're just waiting to collect. Okay, all of this is just going to go ahead and be money. So all your setup should look like a V. Okay, try to buy when market is curling in a upwards V direction. Okay, all your setup should look like you catching the right side of the V. Okay, so that's how you know when it's time to buy. Try to buy at certain lows. Okay, let market make the left side of the V, and let market make the bottom of the V. Okay, let market make the left side of the V, and then let market make the bottom of the V. After you're on the daily, you start seeing like 2 to 5 candlesticks going in upwards direction. Okay, that's how you know the support is true. Okay, you don't want to just see one little wick, okay, and see it going up and be like, oh my gosh, it's going up here. But if you see multiple days in a row, okay, price heading in upwards direction, the chances of the support holding is going to be really, really high. Okay, especially after it dumped down for many days. Okay, so cool. So that's going to be the full guide on how to trade cryptocurrency. If you guys want some more one-on-one mentorship, head over to Stackmode.net. Come on and book a free call. Or you can check out my free course and ebook. Stay prepared Keep grinding. I'm gonna catch you guys next one. Let me know what you think in the comments below. Peace. Don't just think of Ethereum as Bitcoin's little brother. Think of Bitcoin as a digital gold, and Ethereum as the entire app store. And the magic is in the smart contracts. Think of a vending machine. You don't need a cashier to verify the transaction. The machine automates it every single time. And Ethereum applies that code to the real world. We're talking banking without banks, art markets without galleries, and loans without paperwork. And it isn't just a coin that you trade. It's the world computer that powers the future of the internet. And that's the massive difference between Ethereum and Bitcoin and other cryptocurrencies. Let's go and let's jump into it. Exactly. Inshallah. So let's go and let's talk about Ethereum and exactly what it is. So think of Ethereum as the world computer. So Ethereum is decentralized, and what the term decentralized means that it's not controlled by a centralized bank. So within the traditional banking system, in order to send a wire transfer, for example, you, the individual, would go ahead and request to the bank saying, hey, I want to send, let's say $2,000 to maybe your trading broker, okay? The bank could either approve or decline the transaction. Now, within a decentralized network, it works on a peer-to-peer basis. So that means that if you send a transaction from one person to another, since everything's done automatically by smart contracts and there is no middleman or centralized ledger, the transaction is going to go directly from one person to the other, whether you're sending it to a person or depositing it to a broker or whatever. So that's how the decentralized system works. And it's the open source blockchain. And the smart contract functionality is the thing that functions and makes the whole Ethereum and blockchain system work. So think of a vending machine, for example. Whenever you put the dollar in the vending machine, you get the item that is in the vending machine. Now think of the drive-through. The drive-through is going to be more of the centralized bank. Even after you pay at the window, it's still up to the drive-through person to give you your food or not. They can completely quit or throw your food and walk out. Okay, but the vending machine is going to give you exactly what you put in. And that's going to be the difference between the centralized normal currency system that we deal with the banks traditionally and the decentralized blockchain cryptocurrency side. And while Bitcoin is a digital gold, the fact that it's a store of value and there is a limited amount of Bitcoin, so that's why people think of it as a digital gold. Think of Ethereum as a digital oil, and it's more used for utility uses. And it was proposed in 2013, and the network went live on July 30th in 2015. So as of when this video is coming out, still pretty new. And the key distinction, so unlike Bitcoin, which is a calculator, Ethereum is a smartphone, and it runs applications in backgrounds. Think NFTs. And if Bitcoin is the email for sending messages, then Ethereum would be the entire network infrastructure that's responsible for running websites, apps, and services. So let's go on, let's continue. Just smart contracts. So self-executing code. Smart contracts are lines of code stored on a blockchain that automatically execute when predetermined terms and conditions are met. And the trust list is no need for a middleman, no need for a lawyer, bank, or a broker even, since everything is done automatically and it's automated. Speed and efficiency are maximized as paperwork is removed and people, okay, no greed involved into it, no human decision involved into it, just straight up peer-to-peer transactions going through the system. And immutable. Once deployed, that cannot be altered by anybody. So once again, think of the vending machine. So you input the money and you select the chocolate bar. So you wanted the Twix on 2A and it costs $5. You go ahead and put that in and get your Twix bar. The machine will go ahead and check the money and think of that as the automatic contracts work on the blockchain and cryptocurrency system. And then the machine will go ahead and dispense the chocolate bar or the soda that you want. And no clerk, no middleman, and most importantly, no people, because people like to ruin things in the world. Okay? So no people, most importantly, were involved to verify the transaction, creating a righteous system for people to clean transfer the money from person to person or from person to broker, etc. So the EVM, the Ethereum Virtual Machine. The Ethereum Virtual Machine is the computation engine of Ethereum. It acts like a massive decentralized global computer that executes all smart contracts. And turning complete, it can solve any computational problem given enough resources involved with it. In a distributed state, every single node in the network runs on the EVM given enough resources. Okay, so the EVM agrees to the state of the computer, and code runs in isolation. And the most important thing about it is if one contract fails, it doesn't crash the entire network. So if it has enough resources, it's going to be able to continue to run codes in isolation. So imagine a class where every student, and every student is going to be a node, has the same calculator, the Ethereum virtual machine. And if I ask 2 plus 2, and everyone types it in and agrees the answer is 4, then the consensus is world computer. Okay. So the Ethereum virtual machine is going to be responsible for the calculations involved within the centralized and blockchain network. And we're talking about gas here, and we're not talking about the gas that you're in your car. We're talking about fees. And we'll talk about transactions as well too. So fuel for the engine, gas. So whenever you hear the term gas involved within the cryptocurrency or Ethereum sectors, relate the term gas with fees. Gas, fees. A lot of the times you'll see the term together. Gas, fees. Gas is the fee required to conduct a transaction or execute a smart contract on Ethereum, and it's paid in Ethereum. And spam prevention. Fees prevent malicious actors from clogging the network with infinite loops. Okay? So they can't just flood the network with random requests, random transactions, and stuff like that, etc., due to the fact that fees are going to be involved. So stuff like that wouldn't even be worth it. And the incentive, fees pay the validators, also known as the stakers. And proof of staking is how Ethereum is created. Bitcoin is created by many computers that are extremely powerful. Sometimes they're big. And what they do is they solve complicated math problems in order to get the Bitcoin calculations and create the hash codes. And if they solve the calculations, which requires a lot of power, so before you just think about getting some random computer and plugging it in, you have to have the right type of computer. I recommend looking into ASICs if you do want to get more information on it. Head over to Stackmode.net. But Bitcoins are mined based off of solving calculations. When those computers solve the calculations, the person who set up the computers are then rewarded with Bitcoin, and that Bitcoin can be put on exchanges where other people can trade it, etc. But there's a limited amount of Bitcoin, 20 million. And once again, this uses power, so that's not good for the ecosystem. So that's also a reason why Bitcoin is limited too. So people aren't just fighting over power and resources forever till the end of time, which will probably happen anyway, so that's sadly. So proof of staking, though, is how Ethereum is created. So you pretty much pay them some fees, be like, here, thank you so much for helping Ethereum get created and put on this network here. Here's some money. And supply and demand. When the network is busy, then gas prices, also known as fees, go up. And that's the auction mechanism. So driving a car requires fuel. And a longer trip, which is a complex contract, requires more fuel than a short trip, which is a simple transfer. And if you don't pay enough gas, then the car would stop, which means the transaction would fail. Okay, so Ethereum, gas equals fees. Set up to the next slide. The consensus mechanism. So proof of staking, POS. Okay, the merge. Ethereum transitioned from proof of work mining, which is exactly how I just described how Bitcoin was created with the computers solving complex problems. But computers got to plug into the wall, which requires energy, puts bad things into the air over time. So not the best for the economy. So Ethereum transferred from proof of work, the mining structure, to proof of staking. So if you ever see the term POS within the Ethereum community, NFT community, or anything, that stands for proof of staking. And they transferred to that in September 2022, and it's an event known as the merge. Crazy. And really helps keep the earth clean and promotes energy efficiency. Reduces energy consumption by 99.95%. Okay. Crazy change. A lot healthier for the world. And staking. Validators lock up 32 Ethereum to secure the network instead of buying expensive mining rigs over and over and over and over and over and over again. Okay. It's wasting resources and putting a lot of tension, even on the Airbnb. If you guys didn't know, if you're an Airbnb owner, I would keep mind of this. A lot of people are going into Airbnb, setting up their Bitcoin mining rig and having Bitcoin mined on your power bill while they just pay the small Airbnb fee, because the Airbnb fee is going to be a lot smaller than what that power bill really is going to be. People are also moving to other countries as well too in order to mine Bitcoin for cheaper cost as well. So keep all that in mind, what people are going through in order to mine Bitcoin. And we'll talk about slashing. So if a validator acts maliciously, their staked Ethereum is going to be destroyed. It's slashed. It's out of here. And why it matters. So proof of staking makes Ethereum more sustainable, and it sets the stage for future scaling upgrades. Let's head over to the next slide. And dApps. I'm not talking about the handshake and ecosystem. dApps stand for decentralized applications. Ethereum allows developers to build apps that run on a blockchain, and no entity controls the database. And DeFi stands for decentralized, and the Phi stands for finance. So Uniswap, Aave, banking without banks, all going to be involved within the decentralized space. So for lending, borrowing, trading speculatively, or sending some money to someone you hired, or getting paid, etc. Even paying your landlord in Bitcoin. I see some landlords take Bitcoin as well too. And NFTs, ERC-721, digital ownerships of art, music, and gaming assets. So think of the Bored Apes, OpenSeas. You might have seen people's Twitter profile pictures, etc. That's all going to be the NFT space, which is off with the Ethereum if you didn't know. And DAO stands for decentralized autonomous organizations, and companies run by code and community voting. So the real world use: a farmer in a developing nation can take out a loan using a crypto collateral via a decentralized finance protocol, bypassing corrupt local banking infrastructure. Okay, so bypassing all the unrighteousness, corruption, greed of human beings, and just having a clean, righteous system where we can transfer money cleanly. All right, let's head up to the next slide. And scaling solutions. So layer 2s and rollups. So the Ethereum mainnet, layer 1, it's slow, inexpensive. Layer 2 solutions process transactions chain and bubble them back together to Ethereum. And the rollups, they roll up hundreds of transactions into a single proof with optimism and arbitrum, as well as side chains, independent blockchains compatible with Ethereum, which is Polygon and Matic. And speed increases TPS, transactions per second is what TS stands for, from 15 to thousands. So a lot more transactions can flow through the network on the layer 2 solutions. And maybe in the future, if God wills, we'll see things can progress to maybe thousands of transactions per second to maybe millions. We'll see how things progress. But as human beings keep innovating, we keep running into more errors and we keep solving them, things could progress into a whole different type of banking infrastructure in the future. We can already get it from a double-digit number to thousands of transactions per second. We'll see. We'll see how the future's looking. So layer 1 is a busy, extremely jam-packed highway with no lanes you can't even get over, nobody lane you get over, and it's just frustrating. And layer 2 is going to be an open lane. There's plenty of lanes you can cut up, you can drive fast, okay, and there's going to be a bunch of space for everybody to get to their destination. So instead of 50 cars on 2 roads, layer 2 is going to be 50 cars on 10 roads, giving a lot more space for transactions and cars to flow through. So even if more cars came on the road, it wouldn't even be an issue because they innovated, scaled, and created a solution. In the future, we don't need to be looking back, so let's focus on the forwardness. So Vitalik's roadmap. Ethereum is only 55% complete. as of the time this video is dropping. And the roadmap includes distinct phases to improve performance. So the surge, massive scalability through rollups and sharding. Okay. Hundreds of thousands of transactions per second. Could be a whole new banking infrastructure involved in this. And the scourge, ensuring censorship resistance. And the purge, cleaning up old history to lower hard drive space requirements for nodes. Okay, and fixing everything else and adding fun extras. And a lot of things can innovate and change. Might see NFTs come back and stuff. Things continue to progress. And the global sentiment is really going to be involved with blockchain space. And it's a layer that's invisible, cheap and used by regular applications without users knowing that they're using crypto in general. So Ethereum, it runs the back end of a lot of things that you might use. So check out any type of broker software that you're using if you're involved on the NFT or digital art space. Might be run by the blockchain network. Even some Amazon Web Services stuff as well. So Ethereum represents a fundamental shift in how we handle value and logic on the internet. It's programmable money. And it's not just static value, but it's functional value, used as a utility mainly in order to power other applications and decentralize, removes single points of failure, removes a lot of points for unfairness for the most part, and prevents a lot of scamming and stuff due to the fact that there's gas fees involved. So Ethereum tackles a lot of problems, and even the fact that it helps reduce economic pressure, since we're helping people send money to anywhere they want within the country. So if you try to send some money to somebody in China, Africa, India, Europe, it might be difficult. You might run into higher fees and stuff like that, etc. But if you just send some Ethereum or some cryptocurrency, could be in their wallet within a couple of minutes, couple of hours, and they can withdraw that to the bank. So it really, really does help. So Ethereum is the foundation for DeFi. DeFi is going to stand for decentralized finance, NFTs, and Web3. So the class is going to be dismissed. Catch you guys in the next one. Say praise to God. Keep growing. Peace.
Investing, trading, all of it is forever, guys. So I want us to think about plants, for example. What do plants need? Water, sun, good soil, consistency, and you'll get the plant that you want. Whether it be a beautiful rose bush, a giant oak tree, a blueberry bush, whatever you want. It comes through consistency. Investing is forever. It's forever. Don't think you're gonna hop in this game, run up a couple of bands, and then hop out. That's for the quitters. Investing is forever. When you guys hop in this journey, when you guys start hopping on these charts have been around since before I've been alive. I'm 22 years old right now, and before I've been alive, people were trading Forex, people were trading certain stocks, etc. And I assume, inshallah, of God wills, that after I'm gone, people will probably still be trading the markets if the world is still going and flowing. So investing is forever. Don't think so instantaneously, so fast. When I was a day trader, I got consistent. It took me some time, lots of failure in the beginning, and that's why I thank God I'm able to come on here and coach. I'm so passionate about it, and I'm thankful I get to make some money in the process. Of course, I'm here to be fully transparent. Yes, I make money in the process coaching. Yes, I make money selling my trades, but I'm also really, really humble to the fact that I get to help another person learn a skill so they can feed their families, so they can help somebody, so they can pay their bills on time. So yes, I get to thank God, all due to God. Without God, I'm nothing personally. So thank God. Thanks to doing this, I get to coach you guys, make some money in the process. But I also want you to avoid a hardship that I've gone through. One of my students on a call that I was just on the other day, actually, he told me that. Well, he was like, he laughed. He was like, "I'm thankful you went through it," and I'm like, "I'm thankful too." Like, for real. Like, it sucked going through it at the time, but now being able to tell you guys certain things, like, hey, you might not want to get in at all time highs right now because you're probably gonna get down on. So being able to tell you guys little tidbits and stuff like that, or hey, market's dumping right now. You might not want to be in long. Let's wait till buyers step in. Being able to analyze certain emotional factors based off of anxiety, rushing, and I understand why people want to get in and rush, trying to test some money on. You're trying to test some money on. I'm trying to test some money on. We're all trying to test some money on. Okay, you're not alone. I promise you are not alone. You're trying to test some money on. I understand. But in order to test some money on, one, we got to pray to God so we can be healthy, okay, mentally and physically, so we can even think, so we can get some money on. So be humble to God. Really, really, really important factor. No matter how much money you start touching, stay humble to God. Don't change your ways. Don't change your ways as a person. Don't start treating people badly. Don't start disrespecting people. Even if they hurt your feelings, break your heart, whatever. There's no need to disrespect people. You know, I'm not perfect. There's times I've definitely made mistakes, but don't let the money change you. Even when you start touching that big bag, because it is easy to start thinking, well, you know, whoopty whoop, oh, I'm better than people, or why aren't people doing X, Y, and Z? And everyone's gonna live their own life, but if you your network to be full of grinders, full of investors, full of people who care about taking care of their families, stay around that. Don't try and change your whole life. Start investing and think you can hang around the same people, because I'm telling you, it's gonna be frustrating. Okay, and when you start changing and leveling up mentally, you don't want to be disconnected while you're there, presently trying to enjoy yourself, but you're not going to be on the same mental space. Instead of you guys going to McDonald's, you're going to think, well, I got food at home, then why not just buy some Bitcoin or some shares? Why not buy this options play? Why not load up a futures account? You know what I'm saying? Your mindset, it changes when you start investing. So the people around you, if they're not on the same wavelength and journey, it will and it can frustrate you. But don't let it get to the point where you just start distracting people. But yeah, I don't, like, you know what I'm saying? Sometimes people are broken spirited. Like, if people are broke, they're broke spirited. Like, for real. That's really what I think, because it's not even about money. It's just you're waking up every day, and I think it's just abusing the body that God has gifted us with. Because how are you not waking up every day and grinding? How are you not putting some money away for your family? So how are you not trying to get a bigger home for your family, in a safer home for your family, so they can live in a better environment? You know what I'm saying? So I do understand the frustrations, but if you're an investor, if you're a hustler, you're a grinder, and you're ready to change your whole life around, your whole life is going to change. You're going to be a really consistent person, especially when you start praying every day. Working out Monday through Friday, 5 days a week, is a really, really good way to build consistency, let off all stress, really just stay mentally focused, and investing constantly. As soon as you get some money, buy some shares. As soon as you get some money, buy some crypto. As soon as you get some money, buy an options play or whatever that you plan to boot up your account. Okay, do what you need to do. Try not to waste your money on prop firm, because ownership is really the main priority. Sell your shares never and put it right back in your bank account. Prop firm, they have little parameters that are set up for you to fail, because prop firms only make money when you buy a challenge. So of course they're going to make things very difficult and hard for you, so you fail. On the other hand, we're going to go ahead and have your actual live account. Go pull out your money whenever, whether it be your crypto, shares, futures, whatever. You can just pull out your money. Okay, you can pull out your money whenever. So think of it. Ownership. Ownership is the reason on the trade. Okay, you don't want to just have money to have money. You want to throw your money into the asset river so you can have ownership, so you can have more houses, so you can own more percentage of a company or an ETF, so you can get paid more dividends maybe one day. Okay? You want to have more ownership of more Bitcoin. So when Bitcoin extinct, Bitcoin is not infinite, if you didn't know that. And when Bitcoin goes away, you're going to have Bitcoin. Ownership is what we're investing and trading for. Okay? Ownership. Think about it, guys. Okay? You have money just chilling in your savings account. Why? What is that doing for you? Ask yourself, if you have money sitting in the savings account right now, what is that doing for you? Or your checking account, why is it there? Because once I turn on my brain, I personally try and just live off of the credit card, okay? All money goes into assets, and then take money out, pay off the credit card with the assets or income that's flowing in, pay off the card. And when tax time comes, take money out the assets, pay your taxes. Why is money sitting in your checking account when houses get more expensive year after year after year after year? When food costs more year after year after year after year after year. There's no more dollar menu at like McDonald's and stuff. Okay? Not everywhere. Prices, because of why? Inflation. So why is your money just sitting around? People like to complain, stuff is just getting more expensive every year. Do something about it. See, and that's broke to me. It's not about money. So don't around complainers. Investing is forever, so you're the one who should do something about it. Inshallah, you're the one who's going to take care of your family. You're watching this right now, you're the one. Okay? And you can't fail. Inshallah, you gotta keep going until you die. Don't stop. Don't let any relationships affect your mental. Don't let any people around you affect your mental. Don't let any loss of any funds affect your mental. Okay, stay focused on God and stay strong, because this journey is going to be a long one. You're setting up right now to be the provider, whether it be for yourself, family, or your loved ones. If you're investing, you're probably in it to give your family or yourself a better life. So be ready to be a provider. There's going to be days where it's going to be frustrating. It's going to be days where you're going to check your P&L. It's going to be red. It's going to be days where you're not going to be making some money. And that's okay, but forever. It's about staying consistent. It's about staying resilient. It's about coming back every single day, not giving up, no matter what. Because I'm telling you, whoever doesn't give up wins. The people who stop, the people who quit, the people who think it's a scam, the people who don't have control, who don't pray to God, okay, all going to be failures. All going to be failures. Because until I started praying to God, that's when I started winning. As soon as I started praying, I started winning. Okay? Until I started praying to God, like, I just wasn't winning. Okay? But then as soon as I started praying, started winning. Started getting healthy. Was able to lose 100 pounds in 8 months. I just privated this short just because I had some explicit pictures. I don't think it's very halal content. But yeah. Also, I don't want to be showing myself like that on the internet. Also, watch how you guys present yourself. Guys, start running up money, because whoever's watching this right now, I know you guys will go far, inshallah. So if you're watching this right now, watch how you present yourself too. Watch how yourself on the internet. Don't just be out here balling and flexing on everybody. Motivate. Okay, because we're all on this earth for a reason. And so whatever keeps on this earth, do that and try and inspire the next person, so we can all just be on this planet. All right, because that's really what it's about. Yes, we're here to get some money, but I'm telling you, investing is forever. The big plays will come as long as you stay consistent, you stay focused, you keep on the same type of setups, you keep putting the same money away. I don't care if you have $1 million and there's $1 million in Bitcoin. As soon as you get $20, if you put $15 into it, that mindset is the reason why you got to that $1 million. Keep stacking it up. Don't get that big ticket and then blow it and then go back to zero. Don't do that. That's something I had to learn from. Run it up. Stay consistent. Step up. Keep your mental straight and keep what you got. Don't lose what you got. Whether it be relationships, whether it be your money, whether it be your plays, don't lose what you got. Don't lose what you got. Okay? I love you guys so much. Head over to Stackmode down there for all trading education. Stay prayed up to God. Keep a free ebook and course there too. If you guys want to check that out for free, you guys can book a call with me for the first time for free. Let's break down whatever you're going through. Let's put an investment plan for you. I want to get you guys focused. I want to get you guys set up with a full financial parameter and a full financial system so you can be successful in this world. Inshallah. Stuff is only getting more expensive. They don't want you to suffer. Love you guys. For real. Peace.
So we're going to be talking about how whales manipulate the crypto market within the first place. So whales are going to be cryptocurrency players that have tons of money, for example. Okay, so if you're seeing an order come in $1 million plus, that's going to go ahead and be a whale. And sometimes whales can go ahead and control a lot of the markets, especially if something doesn't have a high market cap, which is the value of something. So for instance, if someone purchases $5 million worth of Bitcoin, it won't really move the market much due to the fact that Bitcoin has $1 market cap. So it's extremely valuable, and a lot of people are investing into it. So it's not going to market much. But for instance, say somebody invested $5 million into whale coin, okay, some random meme coin that is dropped, okay, they pretty much now own all of whale coin, okay. They bought all the shares pretty much since they invested $5 million, okay. Due to that, if any time whale coin goes up, since they're a majority holder, as soon as whale coin decides to go up, they can go ahead and sell. And since they're a large majority of the shareholder, the price is going to go ahead and tank with it since they hold a large majority of the value. Okay, so that's what a whale is. A whale can affect your trading in different ways. Let's go and talk about what we can do and how we can trade with the whales in order to make sure we're making profitable trades. Inshallah. Let's go. So what's a whale in the first place? So in the world of cryptocurrency, a whale is an individualized or entity that's an immense amount of a particular digital asset. And due to the decentralized, often less regulated nature of the market, the actions of these whales can have a disproportionate impact on price, liquidity, and overall market sentiment. And their large transactions can single-handedly trigger significant price swings, whether in a direction or negative direction, creating both opportunities and risk for smaller investors. So the market influence that whale has. So whales are not just big investors, they're market movers. Their buying and selling can create price momentum that typical trader can't, due to the fact that they own such a large percentage of them into it, since they have such a large percentage of it. Okay. And concentrated ownership. The concentration of wealth in the hands of few entities, individuals, or hedge funds included. So a few whales means that they control a large percentage of a token supply, giving them significant control over its price. Okay. And it has a large psychological impact. When a whale makes a move, traders take notice, and this can trigger a chain reaction of buying, okay, which is FOMO, or panic selling, and others try to follow or get out the way. So the psychology of manipulation. Whales don't just move the markets with their money. They exploit human emotions. They understand that FUD, okay, FUD stands for fear, uncertainty, and doubt. All things that are banned because we trust God, we trust our plan, and we're not here to fail. And FOMO, okay, and we don't trade with FOMO. Okay, FOMO is banned too because we trade with logic behind our trades. Okay, we know what our entry is, we know what our exit is, and we know what our stop loss is way ahead of time. Okay, we're strategic, logical traders. We're not falling into any FOMO, so we're good at that. But these are psychological triggers, and a whale's goal is to not just profit from the price change, okay, but it's to get other traders to do the heavy lifting for them by creating a narrative that encourages mass buying or selling. So strategic moves that whales do. Whales make calculated moves, not emotional ones. They plan their actions to maximize their profit by relying on the emotional reactions of others. So this is the illusion of momentum it creates. A whale's large buy order can give the illusion of a strong market momentum, drawing in retail investors who fear missing a rally. Okay, because people might see like, oh man, the price is deciding to go up, but it could go ahead and be overextended, for example. And whales and their affiliates can use social media, okay, and other news outlets to spread stories that justify their market movements. Like for some reason, people like to go ahead and tweet certain things like, oh, the market made this much today, lost this much today. Market's going to always fluctuate. Just pay attention to the chart and put everything together. Okay. So don't be manipulated by what you see on social media. Okay. Take actual education, implement it into your trade, do your research, and take your time. So, for example, the fake sell wall. So, if a whale places a massive sell order at a slightly higher price than the current market price, this sell wall is going to create the illusion that a strong response speaker there, and that can scare other traders into selling their holdings at a lower discounted price. And once the price drops, the whale can cancel their fake order and buy right back in at the discount. And common manipulation tactics. Understanding these tactics are going to be your first line of defense in order to avoid fake outs, things like that. And they're designed to be subtle, but they can be identified with some key observation. So we'll talk about pump and dumps. Okay, so a group of whales can buy a large amount of low cap coins. Okay, so for example, if they bought whale coin, okay, and let's say a group of individuals in a Discord, that's the real thing, real people, things I've seen myself. Okay, a group of people in a Discord come together. Let's say they own 60% of the coin. Okay, they're going to be inflows. They're then going to go ahead and push ads, social media advertisements, pay social media influencers or hack social media influencers to push the meme coin, that which has no intrinsic value for the future. Okay, and since they own a large majority of it, by the time the stock starts going up, starts getting hype from the internet, they're going to go ahead and sell. Since they're in at the bottom, they're going to make millions of dollars. It's trading. Okay, you might know what's losing, and when you lose, someone's making money. So since they're in at the bottom, they're going to go ahead and sell, and since they own 60% of it, the market will go ahead and crash. Okay, so that's what pump and dump is, and don't get manipulated by that. Okay, take your time. So wash trading. Okay, and this involves when an individual group simultaneously buys or sells an asset to create fake trading volume in hindsight. And this makes the asset appear more popular in liquidity than it actually is, attracting legitimate traders. So a lot of meme coin traders started creating their own tokens to do that. So check the flow. Okay, and the flow is going to give you the ability to see all the orders coming in. Okay, and see where the transactions are coming from. Is it a diverse flow coming in from a bunch of different addresses, which is going to indicate it's a bunch of different people investing in it, which is going to indicate it actually has value? Or is it just one address buying over and over again, which is going to indicate a whale? Okay, one person buying large quantities of something. And a whale places a large order on one side of the order book, okay, and using the buy or sell. Okay, so order book shows you who's buying and selling. Okay, and they use one side of the order book, okay, to trick others into believing that there's strong market interest. Then they can cancel the order before it can be filled, and often at the same time, they execute a real order on the opposite side to profit from the price shift. So since people are looking at the flow so heavily instead of looking at the chart, they end up getting faked out and they end up getting traded. Okay, so make sure you're taking a look at your TA, okay, your analysis, take a look at chart movements, and look at the flow too if you want to. Make sure everything lines up and correlates. So here's how to spot those footprints. So while you can't read their minds, you can track their movements. So tools give on-chain analysis, and they can go and reveal suspicious activities, and they can help you avoid being a victim of manipulation and some unusual volume spikes. So you can go ahead and look for sudden and inexplicable spikes in trading volume. Okay, so that means a large amount of people are getting in a certain direction that are not tied to any major news or fundamental developments. And some on-chain analysis. You can use on-chain explorers to track large funds who are transferring to and from exchange wallets. Okay, so you can see what type of cryptocurrencies are getting withdrawn the most. And a massive amount of a token being moved to an exchange could indicate an upcoming sell-off. So order book analysis. Pay close attention to the order book and be wary of a damn order book that suddenly gets massive. A single buy or sell order placed on it. And what you can do to protect yourself. You can't stop a whale from manipulating the market, but you can build strong defense against it. One, okay, just master the charts, okay, master your technical analysis, make sure you're understanding what you're looking at, and you might even be able to buy when the whales are going to be buying within a publisher. Okay, just trust God, okay, studying the market, and what you're buying, what the whales are buying, that's actually definitely when you're going to be profitable, inshallah. So your best protection is about not outsmarting them, but sticking to a disciplined strategy and buying at levels to where you're actually going to participate where the whales are going to be buying at too. So key levels are going to be important. Okay, so you're looking for your resistance to be broken. If it turns to support, then other people want to go ahead and buy it there. It wants to hold there, and market may want to continue in upwards direction from that level. Okay, so some things you can also do to protect yourself just in trading in general. Never invest more than you can lose. Okay, no trading with rent, no trading with important bill money or anything. Okay, and this golden rule of crypto trading reduces the emotional pressure that makes you vulnerable to manipulation. And you can also diversify your portfolio. Don't put all your eggs in one basket. Okay, spreading out your investments across all assets can reduce the impact of a single asset being manipulated. And you're not just going to be the whole time that one thing sweeps while everything else is going in upwards direction, whatever direction you want. Stop loss. Okay, set your stop loss. Stop losses automatically sell your asset if it falls to a certain price. So if your broker supports stop loss, go ahead and use it in case it's like 3 a.m. Okay, and price starts dumping and you're in a long trade. Okay, and it passes a certain area that you're more comfortable losing with, you can go ahead and set your stop loss and it'll go ahead and close you automatically. Okay, that's the key function of it. Is that it closes you automatically. So while you're doing something, driving, the gym, whatever, okay, your trades will go ahead and do its thing. Okay, you can set your take profits, which is on my order. That'll go ahead and make your trades close automatically. And then you can set a stopper, okay, which will go ahead and cancel out your trade if it hits a certain price threshold that you don't want it to, causing you not to lose all of your money, which is some amount of money that you are comfortable with. I can't stress it enough. Please do your own research. Do your own research. Don't take anyone else's trades that you just see, okay, unless you're trying to actually study and understand the market. Okay, do your research. And knowledge is going to be power. Okay, and in the end, the crypto market is really just a game of psychology. Okay, as a lot of people have made a lot of money. Okay, I've made a lot of money just buying and holding. Okay, just simply buying and holding. Okay, people are millionaires who don't look at the charts. Okay, but just buying and holding. So ideally, that's just going to be the main concept of it. Buy the dips. Okay, if you want to learn how to buy the dips, head over to Stackmode.net. Okay, so buy the dips, buy certain low points. Don't at all-time highs. Okay, that's also going to be a big thing too to succeeding. And try to follow what the whales are doing. Try and buy at key levels. Okay, buying at key levels is going to be a good way to go ahead and make some profit as well too, inshallah. Okay, buy at key levels. Okay, key levels are going to be areas where everyone wants to buy at. Okay, an area where everyone wants to buy at is going to go ahead and attract whales. Okay, wherever the money is moving, you should be moving to within the market. Okay, so bring yourself with knowledge, getting more informed, heading over to Stackmode for mentorship, getting your free mentorship call, and maintaining a disciplined strategy, resisting emotional trading. You can navigate these volatile waters safely. And your goal isn't to beat the whales, and it's to avoid being their meal, also known as liquidity. Okay, liquidity is pretty much people who are just losing, and you don't want to be ammo connected and collected in order for the real trade to actually happen. Okay. Stay praying to God. Keep running. Catch you in the next one. Peace.
The strong reasons why markets going to be going in upwards directions is due to the fact that these stocks help the United States economy. That's going to be the strongest reasons, and there's a reason why the billionaires within the trading community are play United States stocks companies, whether owning shares and options such as Warren Buffett, etc. Because it's going to be honestly the easiest market to play. Forex market is very sideways. Futures you can't hold overnight unless you have a certain amount of margin. So the United States stock market and even cryptocurrency is going to be great realms to just buy and hold your money. Okay, so let's go ahead and continue the lesson here. So these stocks, just random stocks listed on TradingView or these bursts, so people to just make invisible money. These stocks are real companies that people actually work at, okay, that we might have worked at in real life, okay, and they generate real income. So since they generate real income, they can also employ people. So they can employ people, and when they employ people, these people pay taxes to who? The government. Okay, so as long as these companies are making money, okay, and people are working at these companies, then the government will continue to make more money. So these companies being profitable, these companies doing well, these companies making money, they help out the government. And anything that helps the United States government will be pushed. Okay, that's just, we know about trading and just fundamentals of things. Okay, if it helps the government, it's going to be pushed. Okay, there's a reason why cryptocurrency didn't get a big push until SEC laws and stuff like that were regulated.
Okay, so until the government regulates it, and unless the government has something to do with it, it's not going to have too much value until then. But every single one of these stocks boost the economy since they put jobs out for people. Jobs include people who pay taxes. Taxes go to the government, making the United States more wealthy. Wealthier we are, more power we have over other countries. Okay, so it all starts from just simple things like wealth. So options and the fact that shares and stocks go up in an upwards direction is really important. Okay, it's way more important than people even think. Okay, so it's not just oh, I'm gonna come on here and just make some money. Okay, it's real life stuff happening on these charts, and really understanding everything is going to help us understand what we're going to be trading for. So market going in upwards direction. So this is why we're going to be focusing on call options. Okay, so as we know, call options, they pay you whenever you think price is going to go in an upwards direction. Okay, speculate and you're buying the call option and you think price is going to go in an upwards direction and you're correct, then you get paid. Okay, so that's going to be a call option. And the reason why we're going to be focusing on call options is exactly what I just broke down. These stocks have incentives to go up. There's also going to be laws such as the short sale restriction that are going to be in place too to make sure that stocks don't just fall flat down to zero. Okay, there's a reason why decades of these stocks going in an upwards direction has been a thing. Okay, so it's about letting go of all the fear, trusting God, not having any weird anxiety of, oh, what if it just falls down to zero? It's time to start just investing and being a boss. Okay, so we're going to be talking about the proper levels to play at. Okay, and we're going to keep talking about why we're playing at these levels and what we're buying. Okay, I always want you guys to understand why. I never want you to just be like, okay, just do X, Y, and Z and just do this. It's going to work. No, I want you to understand why this works, why people are billionaires buying just shares and call options. Okay, so finding things that are undervalued and catching the sweep up. Okay, every company wants its share price to go down. It doesn't make sense to really play puts due to the fact that the market is not built to go down. Exactly. And even when market does go down, people are quick to buy the dip. And market will recover right back to wherever it dipped from heavily. It'll fill it right back up. All it is just a discount. All it is just like clothes and cologne and whatever. It's just going on sale. That's all it is. Market just goes on sale whenever it falls down. So puts don't really make sense to purchase, especially on your higher time frames, especially when you're playing companies that have good revenue and actually make money and the share price increases year after year. Playing puts, not only are you going to have significantly shorter trades, your take profits aren't going to be as easy to put down because one, you can't predict market's going to bounce at. Okay, so you can't predict where the market wants to stop at all the time. Now, shorting and stuff like that comes really from forex traders, and is something that's seeped over to the stock market. But the forex chart and the stock market chart is completely two different worlds. Okay, so it just goes up in an upwards direction. Okay, and that's just the truth of it. Okay, if I pull up the forex chart here, forex is extremely sideways. Okay, you have price action all the way up here. We got price action all the way from here from 1977. We got all types of stuff going on. Okay, but if I click on the fluffy stock market, it's literally going up in a straight line. Okay, almost impossible to not make money in the stock market. This is why I'm so passionate about teaching in these videos. I'm starting to realize that they've literally made it to where we can just get money for free. It's welfare. It's genuine welfare. Instead of making stupid decisions, trying to flex for people who don't care about it, trying to make decisions that are just way too fancy right now instead of staying down and investing. Okay, those are the things that keep people back from being financially free significantly early. The opportunity is here for us to just invest money and infinitely turn your money into more money. This just goes up in a straight line. It's impossible for anyone to not make money on the United States stock market. It's impossible. Okay, and it's about just making really good decisions. So price has an incentive to go up. So forget put options. We're focusing on calls. Okay, we don't want to be shorting the stock market. There's a reason why you can't even short the stock market on a lot of brokers too. You also have to think about that from a logical perspective. Most people on most brokers cannot short with shares. Okay, they can't short with shares. They can only purchase shares. So everyone's trying to just buy the stock. Also, CEOs are trying to be richer than the next CEO. So they want their company share value to be going in an upward direction. They want to be classified as a billionaire. So also more incentivization to go in an upward direction. And there's also something called dividends. Dividends are going to be what the stock pays out. So the more you invest into a stock, if the stock is making good income, it'll pay out what's called a dividend. And that's going to be money that it pays out back to the shareholders. Okay, so it's like, you know what? Thank you guys for investing in this. Here's some money back. Okay, here's your reward. And that's what it's going to go ahead and say. Okay, so if a company has enough money to do that, that means that it's profitable. If it's profitable, it's most likely going up on the stock market. Okay, so there's incentive for it. The more profitable something is, the more going up on the stock market. Hence why when a company makes a big deal, it just shoots up. Okay, because it's now more valuable. Okay, the more money and the more valuable something is, the more of a high share price it'll have on the stock market. Okay. So, cool. That's keeping those things in mind. So now let's talk about when the setup is going to be good to play and when not. Go. So let's say for instance here, I have this area up here. Okay. One area that we're not going to play at is going to be called all-time highs. Okay, we're just going to be playing at all-time highs because one, we're trying to just sweep up. Okay, so all of your setups will look like a V. Every single setup will look like a V. Okay, and what your profit is going to consist of is the right side of the V. Okay, so the left side of the V is going to be the resistance. Okay, this is where price is falling in a downwards direction. So you can see here, you can see price creating resistance here. Okay, this is the left side of the V. Price is falling down. Okay, the left side of the V. What we're looking for is playing the right side of the V. Okay, we're playing the right side of the V. All of your trades are going to be the right side of the V. Okay, you're going to be buying call options, exiting price to sweep up. Okay, that's what you're going to be looking for. So how can you play the right side of the V if price is falling the left side, all-time highs? You can't. Okay. So I'll show you a good example of an actual setup. So this is how we find a setup. What I'm going to be looking for is a couple of things. One, I'm going to be looking for higher time frame areas. So I'm going to make sure that I'm on my higher time frames. I'm going to make sure I'm on my weekly time frame first. My weekly time frame is going to help me see everything. It's going to be my eyes. I'll go from my weekly time frame to my daily time frame to my 4-hour time frame. Okay, so you're going to start off on the weekly time frame first, due to the fact that the week time frame is going to help you once again see everything. It's going to be like an eagle eye, okay? Because tunnel vision when it comes to trading can be extremely bad. Okay, you want to be able to see the full picture and not just what you're seeing on a smaller time frame. You're then going to go to the daily just to see the picture painted a little bit more detail, and then you're going to go to the 4-hour to see any hidden candles. So what we're going to make sure is that whenever your 4-hour time frame, and this is why we can't just use the daily and the weekly, we have to make sure our extended trading hours is on. So as you can see, the daily and the weekly don't have that. That's due to the fact that they don't show pre-market hours because the weekly and the daily go off of 24-hour blocks. So that's why we still need our 4-hour time frame. And then we're going to be able to turn on the extended trading hours to see all the true candlesticks that we're missing. Okay. So extending trading hours always needs to be on. So we're going to go from the weekly to daily to the 4-hour. So let's go ahead and let's mark out setup, for example. Okay, I'm going to talk about what I'm going to be looking for, and then I'm going to finish up one of the charts. So my setup is only going to consist of 2 things. I'm only going to play setup 1, which is going to be a support mirror. Okay. If you see price bouncing at an area of support, you're going to be good to go ahead and purchase there. Okay. If you see price bouncing at an area of support, reacting from another area of support, okay, that's going to be a good area to purchase. Support is going to signify an area of demand where people want to buy the price. So it's going to indicate where buyers step in. Okay, so buyers step in the area of support. And we're going to call options, meaning we get paid when the price goes in an upwards direction. Okay, so we want to be buying at areas of support. Okay, so if you see an area of support, mirror yourself one after another, that's going to be a good setup. Or it'll look like this. Sometimes you'll have an area of support. Price might run down through it. Okay, it might bounce at the other area of support. It might break below it. But then it might come back up and put support in. Okay, even this would be considered a support mirror. Okay, so even if price runs down underneath the first area of support, if price decides to bounce at the area of support again, that's clean support mirror, I like to call it. Okay, so you'll either see one area of support right after another, or you'll see an area of support mirroring an area of support from the past that maybe didn't get reacted off of immediately. Okay, so your setup will either look like this or it'll look like this for criteria number 1. And criteria number 2, very simple. It's when an area of resistance gets broken, and the area of resistance is going to indicate where sellers are. So resistance indicates where sellers are due to the fact that people have too much supply. So that's why resistance gets created in the first place. There's too much supply. When people have too much of something, when they've made too much money, they're like, all right, you know what? It's time to close. I'm out. Okay. And then they're going to go ahead and close their trade simultaneously. And a wave of enough people doing that is going to create what's called resistance. That's going to create resistance. So let's continue on here. So if an area of resistance decides to get broken past, okay, if an area of resistance or support gets broken past, we call it a breakout. So resistance getting broken past and turned into support is going to be called break and retest. Okay, break and retest. Okay, waiting for resistance to turn into support after it's been broken. So when you're waiting for the resistance to turn into support after it's been broken. Okay, you see this, you can take the trade pretty much safely. Okay, we're going to talk about some certain criteria, how to read daily closes, etc., what a close is. But let's talk about some more fundamentals we are going to be looking at. It's important to have a logical, mechanical process before we put down any type of size or money. Okay, did price do this? Did price do that? Having a large checklist is going to save us a lot of money when it comes to making any type of mistakes on the market. Okay, so one thing we're going to mention here too is the earnings. Okay, whatever broker you're on will most likely tell you, but before you put down the trade on whatever stock you're looking at, make sure that you look at the earnings. The earnings are going to go ahead and let you know when the report is going to come out, and the stock can significantly make upwards or downward sweep when these earnings reports come out. So we want to be making sure that earnings aren't anywhere near. Okay, if earnings are 7 days or less away, and you're trying to don't open a new trade. If you're already in something, it's fine. But if you're trying to open a trade and earnings are 7 days or less away, don't do it, because the price action is already going to be weird, and people are going to be wary of the same thing. They're to wait for earnings to happen first and then make the trade. Okay, so if you swings a week away, 7 days or less, don't take the trade. Okay, just don't take it. Now, earnings is far, you're fine. So those are going to be the criteria we're going to be taking. Let's talk about it on the chart. So once again, we're always going to start off on the weekly time frame, doing what's called top-down analysis. TDA. T stands for top, D stands for down, A stands for analysis. Okay, top-down analysis, TDP, TDA. Okay, so what I'm going to do is I like to always mark out, okay, where would I want to close this trade if I got in. Okay, I can see price made all-time highs up here. So let me just go ahead and draw a zone up here. Okay, and I like to just eyeball. Okay, we don't use any indicators. We're not going to need any indicators. What we're going to do is pay attention to straight candlestick price action. Just like I told you, price should be doing the right side of the V fill. Okay, so we can see price is fall in a downwards direction here. Okay, this is going to be the left side of the V. Okay, and what we're doing is catching the right side of the V. Okay, we're going to be catching the right side of the V. So let price form left side of the V, and then we're going to get in and catch the right side of the V. Okay, so you can see price maybe potentially trying to make a low right here. Okay, trying to make a low right here. Let me go to my daily. Okay, I can still see price making a low right here. Okay, I can see, okay, I'm on my daily time frame. So I'm going to get on my weekly, put an area of resistance, put a zone around it, okay? Because I know, one, price has an invitation to go in an upwards direction, okay? It helps the government, helps the economy. It's trying to go and be the most profitable and helpful company, okay? It's a lot of recognition, and as human beings, we care about things like that, okay? So recognition will be coming with being the most profitable and best company. So in order for that to be credible, share price has to be decent. People have to be investing into it. So let's increase the share price. Okay, that's what people are hoping for. So let's drop better products so people buy from us. That is what people are really hoping for who are behind these companies. So let's think like them. Okay, so you can see price deciding to make a bottom here. Okay, so then I'm going to start on my weekly. Okay, I can see just this large gap of space here between here and up here. So here I have the left side of the V. Okay, I have the left side of the V. Price already created it for me. And then price already drew out the bottom point. Okay, so now I'm going to go to my daily here. I can see price drew out the bottom point for me here. Okay, now we can see price potentially wanting to fill up the V. Okay, so what we're going to be doing is catching the whole right side of the V. Okay, so we can see price made the left side of the V already for us. Okay, we can see it. It made it left side of the V. Now, price made a low already. I can see on my daily candlestick, and this is what I'm going to be looking for. Okay, no indicators, no nothing. If I'm on my daily and I see price bouncing from a low, okay, with a large gap of area from an area of resistance, and I see price making multiple daily candlesticks go up in a multiple color stick direction. So I can see here green candlestick, green candlestick, green candlestick. I see multiple green candlesticks in a row. Okay, multiple green candlesticks in a row, just like we have multiple red candlesticks in a row going down. If I have multiple green candlesticks in a row going in an upwards direction, and I see a large area looking to be filled in to fill in the right side of the V, okay? Even if price falls down at the resistance and goes down to all the way down there, we don't care, okay? Because we can clearly see that price wants to try this area of resistance again. It's like, hold on, how am I going to fall down right here? I'm not with that. Let me try it again, okay? And it's going to try it again. And when it goes to try it again, that's going to be our profit window. That's our opportunity. We're not here to get the best entries in the world. We're not here to predict the most high point of the market, the most bottom point of the market. We're here to react.
We're here to come onto the market, scroll down, see, oh, market made a low right here, and it make it high. It looks like it wants to try this high again. Okay, it might want to break this area. And that's what you do is you react within the market. Okay, and this is going to be the trick on options. So option sellers, right? Before we jump into the trick and why we're going to do what we do, let's talk about it. So option sellers, what they're preying on is that people make some ridiculous gambling dice decision. Okay, they want people to make some just fried, horrific decision. So options aren't just spawning out of thin air. There's a reason why certain stocks don't have any options attached to them. Because one, nobody is selling the options in the first place. Okay, so options are not just spawning out of thin air. It's called trading for a reason. Once again, it's called trading for a reason. Okay, contracts have to come from somewhere, and they come from people turning their 100 shares into a contract and then selling it. Okay, and what they're trying to make money from is that we don't win. Okay, they're trying to make money hoping that we're wrong. Okay, but we're trying to make money hoping that we're right as options buyers. Okay, so here is how, as an option buyer, how we can make some good profit, right? Let's talk about it. So as an options profit buyer, okay, of course we want to make some profit and some money by being in the right direction of the trade. Okay, so obviously we're buying calls, so we want market to go in a upwards direction. Okay, so in order to outplay the option sellers, we're just going to play not ridiculous bets. So you can see we just did all that criteria to determine if price was ready or not. We looked at another trade and saw it was at all-time highs. We would not buy because that's the left side of the V. We're looking to only purchase the right side of the V, which looks like it wants to be filled up here. Okay, let's catch the rest of the candlesticks and farm the rest. So what I'm going to do is come up here to the T. Okay, and I'm going to be able to see the options list. Okay, so the furthest to the left here would be the closest, and the more right I go will be the furthest. So what I'm going to be focusing on is called an options leap. The reason why people say options are so risky and etc. is because they're just not playing it right. Everything in the world is risky. Okay, driving on the road every day is risky. So we're not going to be scared. We're going to be smart. So options leaps. Okay, this is what we're going to be focusing on. Leaps is a contract that I say you hold between 3 months to 2 years. Okay. Any contract that you hold between 3 months to 2 years is a leap contract. Okay. So let's say this contract here, right? Let's say I bought this. Let's say I analyze this area of support, right? Let's say I'm like, yeah, price make the bottom of the V here. Okay, just like a V. You know, a V has a point. Okay, let's say I like the bottom V here. Let's say I want to go ahead and catch the right side of the V, right? Let's say I believe in this. Okay, I'm like, you know what? I'm on my daily time frame here. I can clearly see market's been trending in an upwards direction for quite some time. Okay, you can clearly see we're just sweeping up year after year after year. You know what? This is a profitable stock. Oh, okay, cool. We're beating earnings, beating earnings, beating earnings, beating earnings. I like that. We're paying out dividends to people. Okay, I like that. This is going to be a comfortable play. So I would go ahead and purchase a contract that makes sense. Okay, so this is going to be some sauce right here. So I'm going to buy at least a year out if I wanted to. Okay, so I would buy for a year out. Okay, or I could buy 2 years out to be even safer. Okay, so let's say I want to buy 2 years out. This is how you know what's going to be the best contract to buy. Okay, so what a lot of options people get destroyed on is the theta. Okay, and what theta is a Greek. Okay, so options has Greeks. We have delta, theta, and gamma. Okay, theta is going to be the Greek that equivalates to time. Okay, so whenever you think of time, think of theta. Okay, so once again, whenever you think of time, think of theta. So in order to outplay the theta, we need to make sure that we have plenty of time on our contract. So the theta and the Greeks don't destroy our mental patience, okay, and make us want to crash out. Okay, so instead of worrying about, oh man, I gotta close my trade in 2 seconds, like I gotta close my trade in a week. Nah, you have years on it to hold. Okay. And you can see price is already bouncing in an upwards direction. So what you're going to do is whatever the current number is of your options contract, okay, whatever the current number is, and your options broker, wherever you're on, will always tell you. Okay, it'll always tell you, it'll be in the middle of whatever options chart that you're looking at. Okay, the best contract to purchase at all times, okay, is going to be the contract one number above, okay, we're going to purchase the contract one number above the current price. Okay, so if current price is at 26.20, right? What we're going to go ahead and do is purchase the 27 contract. Okay, that's all we're going to focus on since we're buying a call contract. Okay, because we only want to buy in an upwards direction. Okay, just like we broke down, there's reasons why stocks wants to go in an upwards direction and why they go up year after year after year. Okay, and why people get rich by just turning their money into more money by investing into companies that put the money in the government's pocket. So you can get rich by investing in companies by putting money in the government's pocket, inshallah, God wills. So we're going to go ahead and focus on the call side, since that's the side that pays us whenever options are going in an upwards direction. Okay. So we're then going to focus on the current price. Okay. So let's say current price of this stock is 26.20. Okay. We just did all of our verification. Is price ready on the right side of the V? Okay. If price is ready on the right side of the V and already made a bottom point, we're ready to go ahead and purchase that. We're going to go to our options. We're going to make sure that we're buying at least 3 months to 2 years out, depending on how far your take profit is. Okay. My take profit here, let's say I did on the weekly. I think this gap is pretty big. So just to be safe, though, don't be cheap. Okay. Be safe. Okay. Being safe is what's going to get you wealthy within trading. Okay. Focus on the trades that aren't going to lose you money. Okay. People want to trade zero DTEs, trying to make some money feeding for bread, but they end up blowing up their account over and over and over again, not making anything or making some money and then losing it all. Okay. Because it's not safe. It's not consistent. So play options in a safe way. Buy 2 years out and buy the number one above current price when it's already trending in a positive direction. So this way, you're going to get your bonus points too. So this is why we use our higher time frames for options too, because we want to be catching the whole move. Okay, so we're buying years out and catching the whole move. So the higher time frames is going to show us the whole move here. So I can see I would personally close at the area of resistance. Okay, you always want to fill in the V structure. This is why the V structure is important. Okay, price will make the left side, you catch the right side. Okay, and you fill in the V structure. Wherever the V started at, slanting to the downside, is where you close at. Okay, so it's going to be where you close at. So price started resistance here, fell down, made a bottom point. I'm going to keep my profit window is going to be the remainder of the V. Okay, the remainder of the right side of the V. Even if price was up here, okay, I would still be able to catch the remainder of the V up here. Okay, the earlier entry that you see is just the more money you're gonna get. But even if you enter later, that means that you have a higher probability of being right. Okay, and we're here to play safe. Okay, you want to focus on the trades where you're not gonna lose. Okay, you don't know if price wants to bounce down here. But once price has showed you that it wanted to bounce down there, it's a lot easier to get in and make your decisions based off of that. Okay. So let the market react for you. You don't have to predict, just react to the market. Okay. React. Okay. Market decided to make a heavy area of resistance here. Close at the heavy area of resistance here so we don't get reversed on here again. Okay. We don't know if price wants to reverse right here. Okay. It might not or it might want to. All we know is that price wants to go and give it another whirl, it looks like. Okay, and we're just going to take advantage of that and be happy with that profit. Don't ever try and 50-50 the breakout. Okay, your take profit will always consist of an area of resistance above current price, or it'll be an area of support above current price sometimes. Okay, sometimes your setup's going to look like this. You're catching the right side of the V and you're closing at the area of support. And that's because, just like the opposite, resistance can be broken turn into support. Support can be broken and potentially turn into resistance. Okay. So we want to keep that in mind and trade safely. Yeah, it's really just taking your time and just letting the market react and do its thing. Okay. So these are going to be the two things we're going to be looking at. Okay. Close at areas of resistance above current price, which a lot of the time it'll be, or support above current price, since resistance can be formed there and you want to get in before market falls down. Since we're focusing on calls, we want to get paid whenever market goes in an upwards direction. Okay, so we don't want market to fall down. Okay, so keeping all this in mind, catching the right side of the V, we know what contract we want to purchase. Okay, I'm gonna go 2 years out. Okay, I'm gonna look at current price. And even though my take profit up here is 29, I'm still going to look at current price and buy the contract one above. I'm still going to buy the 27 calls contract. The reason I'm not going to buy the 29 calls contract is because options, once again, you get paid based off of predictions. So even though our chart closing is going to be at 29, we're going to buy the 27 contract because all the profit we get is going to be bonus points. Okay, 27 is the number before 29. So even if we bought 28, you would get bonus points too. So any number of a contract that you buy before your take profit will be bonus points. So it makes sense to buy the number one above. So even if take profit was 35, I would still buy a 27 just because 27 is before 35. And I would get all the bonus points. I would get, and the more points that you go. So if I bought at 27 and I closed at 35, it would get bonus points per number. So it would be bonus points at 28, at 29, at 30, at 31, 32, 33, because I'm so right. Because I'm right way before. Right? So because I'm so right, it just pays you out stupid amounts. And that's how people just do nasty flips. And I've done some nasty flips on option myself. Okay. So let's talk about another setup here. Okay. So you're always going to want to be looking for a price to be forming at a low. Okay, you want price to have made a low already. All right, and you want price to have made a high too. Okay, so in this instance here, market's still looking for its low. Okay, it hasn't quite made its low. It tried right here. And this is why I like to look at the daily here and wait for multiple candlesticks going in a green upwards direction. Okay, so you can see here, we wouldn't have gotten faked out by that. Okay, so this right here, say this low that people tried to buy, this is why we don't buy what's called falling knives. Okay, you don't know where market wants to bounce at. Okay, you can have a good idea of it, especially when it comes to the upside. Okay, and you don't know if market wants to break out. So if market creates resistance here, I'm gonna close at this resistance. I'm not gonna say, oh, market's not gonna fall down there again. No, I'm just gonna close at the resistance. Okay, it's a lot easier to play like this and play to the upside than it is to catch ultimate bottoms. Okay, just wait for the bottom to form and then play to the upside that's already been formed. It's a lot easier. Okay, so instead of trying to catch every single bottom and then price keeps falling and then you're losing money catching a falling knife, wait for the bottom to form. Okay, until I'm on the daily time frame and I start seeing green candlesticks going the upwards direction, I'm good. Okay, I want to see multiple green candlesticks in a row before I take any type of trade. Okay, so take some type of low like this, right? If I see price make a low and I see multiple green daily candlesticks in a row going up, I'm like, oh yeah, price wants to do that. But I can clearly see here, like an area like this, price just faked them out here, okay? Price tried to go up, but it's red, okay? Red candlesticks, and they're very sideways, and then market just dumped, okay? But then we have a low right here. Green heavy candlestick. I'm sure this candlestick was green too before the close. And then green candlestick, okay? Super heavy low right here. Green candlestick, green candlestick, green candlestick, okay? Even right here. Green candlestick, green candlestick, green candlestick, right here. Okay, same thing. Green, 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 green in a row. So if you're not seeing at least a couple of green candlesticks going in an upwards direction on the daily, then that low just isn't true. Okay, the low is just it's pointless. Okay, it's what you want to be looking for. Look at this low here. Okay, this low worked out, it formed, and then we started seeing green daily candlestick. See, I would have answered on the second one. I never answer on the first one in the zone because I don't know if price really wants to bounce there. But if I see another green candlestick and then another green candlestick, I'm like, oh yeah, that's cool. But price, it was pretty much close to the area of resistance here, and then we'll see if price wants to continue from here. Okay. So price decided to fill in this area of resistance right here. Okay, we have this area of resistance right here, and then price falling down right here in the zone. Okay. And then one day price will try and break this area potentially, and then we'll try and go up to this area of resistance, I assume, up here. Okay. So could wait for price to find another V and then take the whole side upwards like that. Okay, but right now it's just not ready. Okay, market is dumping on this, and it gotcha. So here, gotcha. So if I bought right here, I would close my first contract here, just because price keeps spamming this resistance. Okay, I would close, close the first contract here, and then if I have more, then I'll go ahead and I'll close the next one up here. And this is why I buy years out though. But even if I, yeah.
Guys, what's up? God is good. It's a beautiful day. We in the coop, hanging out. Alhamdulillah. So, I want to tell you guys, it's a little deeper than just trading, okay? You can't just trade and just live off of your trading income alone. It's not good. It's not healthy. It's not healthy for, one, your mental health. It's not healthy for your pockets, too. A lot of people might ask me, Chris, why don't you just survive off your trading profits? One, I would probably go mentally insane. I wouldn't go insane, but what would I do all day if I couldn't coach, if I didn't do the thing or teach the thing that I'm just so passionate about, that I love, that pulled me out of depression, that pulled me out of a hard time? I'm not just gonna let that go because I'm just making good income and I can provide for myself and my family, thank God. You know, I want to do more. My soul wants to do more. As I mature, I'm 22 now. As I mature, I realize it's a lot more things to life than just money, of course. And I feel like I've always known that, of course, God, family, but I'm realizing that my soul and what I want to do to help the world is what really matters. So I want to tell you guys that if you have a business idea, if you have anything that you're passionate about, if you have anything that you feel like you're really good at, teach somebody it. Or help somebody by developing a product. Or coach somebody. Do something so we can just all be better on this earth. You know, it's not just about money, competition, and, you know, I'm an extremely competitive guy. It's just something God put in me. But still, I'm starting to realize that the world is about, one, worshiping God, and two, it's about helping one another. Of course, you're going to make some money through the process, inshallah, if God wills, but it's deeper than that. Yes, you got paid to coach somebody, but now that person has a lifelong skill. Now they can put food in the refrigerator for their family because of what they learned. You know what I'm saying? So it's deeper than just money and competition. So I'm just going to be going 100% on stack mode. You know, I want more books out for you guys, more audio books, and I'm going to just branch everything together. You know, everything is a big oak tree. So trading, you know, I like it to be my base, but then you're going to have the branches. I have business, other things I talk about. Fitness is involved with it. I want to write a book and tell you guys about the herbs that I use every single day, water that I drink, how I work out Monday through Friday as consistently as I can. you know, the clothes, how taking care of yourself, and following God's rules, most importantly. It's the most important thing. You follow God's rules, you'll live a really good life. Inshallah, you'll live a really good life if you follow God's rules. I truly do believe, and your soul will be fulfilled. Try hard to get married. You know, I'm married. And if you guys can just find somebody you can worship God with, settle down, get yourself a house, and really build a life with, it matures you. It teaches you a lot. And I want you guys to grow your business, because you can't have your family's hunger, right? Your family's mental health, whether you're thinking about a roof over their head and stuff like that, in a job's paycheck cycle, right? Forever. You can. Now, if you have a job right now, run up that money, do your thing. But if you have a real talent and you're passionate about it, you have to get it out there so you could help the next generation, a wave of people. I'm going to die. Okay. I'm very aware of that. So this is why I try and produce the content I can. Yes. And thank God, God is so amazing that I can make money during the process of this, but I can help other people too. So that when I die, people are still going to be able to feed their families, inshallah, off of this content that I produced here. So we have to put a lot of things in a perspective, and we have to ask ourselves, like, what's holding ourselves back? Is it the people around you? If you're in college or something like that right now, I'm not saying drop out. If that's what you really want to do, then do it. But are you in college because you were influenced by your parents, grandparents, something like that? Maybe you didn't want to disappoint somebody. But you have to ask yourself, ask your soul, are you disappointing yourself by doing these things? Okay, you don't want to be disappointing yourself. You got to start putting more focus on your mental health and what makes you happy as a person and a human being. Okay, we're here once on this earth. Why are we putting so much faith and trust in the system instead of God? Don't do that. Don't do that. You want that stable paycheck. You think it's stable. Whole time, boom, as you can see with the government shutdown, they clip, fire. People just lose their jobs. Okay? I've worked with people where people just got let go of their jobs. People got bills to pay. People got debt. All kinds of stuff like that. So if you love your family, get out there and really put your passion out there in the world. We are here one time on this earth. We can't be sitting around wasting time when we don't even know if we're going to wake up tomorrow. It's a blessing that we woke up today. If you're playing video games, hop off of that. The game is here. The game is here. You're your character. Level this up. Level this up. I'm talking to myself as I talk to you guys too. Level this up. Level up your character. Hop off the game. Start creating. We got to start helping each other. People want to complain about the world. Oh, the world is X, Y, and Z, but we're not out here helping each other. And I don't want to be a part of that cycle anymore. So I'm done suppressing myself. I try and go as hard as possible for you guys, but I feel like I can go harder. And my soul has been disappointed recently because I feel like I haven't been giving you guys as much fruit as I can. I don't want to hold in the business stuff that I know. Making the website. Making 4 to 5 figures during business or just online in a short period of time. I want to help you guys get paid off of YouTube so you guys can spend time with your wife, spend time with your husband, spend time with your kids, your mom, your grandma, cousins, your family, your close friends, whoever. I want you guys to have that time. And it's really important that I teach you guys the ways and the things that work for me so we can get this money. You might even be able to do things better than I can. You might be really good at making seasonings. You might be really good at playing tennis. You could be one of the best tennis coaches right now. Teaching plenty of kids. Making the next superstar. You never know. And then you're going to be sitting down like, yeah. Like, I made that guy. Like, not you made him, but like, you helped him get there. You taught him the sauce in the game. And even though you're not the one playing, your soul will have that satisfaction. You'll be happy that you had participation in greatness. So forget the money and understand that you have to participate in greatness. Don't just rely on your trading income. Go harder than that. We got people out here that are depressed, sad. Sadly, suicide rates going up. May God grant them ease. Okay? Me personally, and may God bless their hearts, I've had friends who I've sat down and ate food with who are no longer here on this earth. Okay? Due to mental health issues, jump into things like substances and stuff like that. Okay? There's things that I've struggled with. And this is why God has really saved my life. There's things that I've struggled with. Okay? Off camera. I'm not here to show you guys glitz and glamour and cars and trading and this and this. Life is not about that. I want to be a real person and show you guys the real things about life. There's times I go through depression, anxiety. Okay? There's times I feel fearful of things. Even though my income is straight, there'll be things outside of trading, outside of money that are stressing me out. Okay? So ask yourself, are you happy? Is your soul happy? And I'm telling you guys right now, the money will not make you as happy as you think. I'm telling you. If you think that the money will make you super duper happy, you're wrong. Okay, you're wrong. Yes, your problems will be relieved for the most part financially. You're not going to stress about that. And that's a beautiful blessing. Alhamdulillah. And you can take care of the ones around you. And you can have fun. So it's super duper beautiful. I'm not saying it's not beautiful. I'm not about to lie to you guys. It's definitely beautiful having money. It's way better to have money than to not. But all your real life problems, let's say if you struggle with things like lust, okay, you're just going to go ahead and use that money and indulge more into your lust. If you struggle with substances, then you're going to use that money and get more substances. If you struggle with materialism, you're going to get more money and buy more stuff that's not asset related. Okay? So we have to ask ourselves, are we doing this for God? Or are you doing this to please people in the world who don't really care about you for the most part? So stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. I got some work to do. I love you guys so much. Head over to stackmode.net. Just wanted to give you guys a raw talk. I don't really care about numbers or anything. I'm just going to upload as much as I want. Pump as much content as out there as I can. I don't care who sees it. I don't care who doesn't. I just love you guys so much. And this makes my soul happy. Talking about life, talking about the charts, talking about income, getting this income. I love it. And I want to help you guys too. Stay prayed to God. Keep grinding. Get out the darkness. Jump into the light. Put the past behind you. And go forward, man. Or woman. Catch you guys in the next one.
Class, let's talk about crypto arbitrage trading, the pursuit of risk-free profit in digital markets. Welcome to the lecture. Welcome to Stackmode, and let's jump into it. So the essence of arbitrage. Arbitrage is fundamentally the practice of simultaneously buying and selling an asset in different markets to profit from a temporary difference in price. It's the closest thing to a risk-free profit and opportunity in finance. And in the cryptocurrency space, this occurs because the global market is highly fragmented, with hundreds of independent exchanges that are not perfectly synchronized their prices in real time. This creates transient imbalances within the cryptocurrency community. So arbitrage is not about predicting the future prices, right? That's going to be speculation. It's about capitalizing on the current now price discrepancies for the same asset at the exact same time. So why do discrepancies exist in cryptocurrency in the first place? So latency and speed. Network delays mean that a price change on one major exchange may take a few milliseconds to reflect on a smaller, slower exchange. And this tiny window is the opportunity that people use in order to capitalize on some profits. So let's talk about some regulatory and geographic factors. Differences in regulatory frameworks or capital controls in various countries can cause persistent price differences. The community premium is a classic example. And liquidity differences. Exchanges with low trading volume might have larger bid-ask spreads, leading to minor price offsets compared to high volume exchanges. And we'll talk about transfer fees and withdrawal delays. The cost and time associated with moving capital between exchanges also contribute to price gaps that need to be larger to be profitable. So the foundation. Let's talk about simple exchange arbitrage. So the two exchange model. And this is the most straightforward form, involving just two exchanges and one asset. For example, Bitcoin, also known as BTC, BTC USD. The goal is to exploit a direct price difference. So step one, right? So this is how you do it. For example, you would buy low and simultaneously place a market order to buy one Bitcoin on exchange A, where the price would be $50,000, for example. And then step two, you would sell it high. At the exact same moment, you would place a market order to sell one Bitcoin on exchange B, where the price is $50,050. And result, a gross profit of $50, okay, and less trading fees and withdrawal costs. Okay, so capital allocation challenge. For this strategy to work instantaneously, an arbitrage must have the capital prepositions on both exchanges. This is known as a capital risk or funding issue. So the required capital setup. You must have the fiat currency, for example, USD, okay, dollars, stable coins, etc., ready on exchange A to buy, and the asset, for example, let's say you're buying Bitcoin, ready on exchange B to sell. If you have to transfer the asset after buying, the price gap will likely close and the opportunity will most likely vanish. And due to razor thin margins, the speed required, this strategy is almost exclusively executed by automated trading bots that operate in milliseconds. So the advanced strategy, right? Triangular arbitrage. So 3-active cycle. Triangular arbitrage all occurs on a single exchange and exploits inconsistent pricing between 3 different currency pairs, creating a closed loop trade with a net profit. The core idea is that the implicit exchange rate calculated from 2 pairs does not match the exchange rate of the third pair. And the path. Example, using USD, Bitcoin, and Ethereum, and trade 1 to start it. Okay, so you would start by converting your crypto currency. Let's say, for example, let's say your starting currency would be USD to Bitcoin. Okay, so turn your fiat currency into cryptocurrency. Okay, so via the BTC USD pair. Okay, you could also turn your cryptocurrency into cash as well too, and do the same thing by whatever asset you want. Let's say you wanted to do Ethereum too. Okay, and the midpoint, you would convert the final asset, all right, or the first asset, that would be Bitcoin, to the second asset, for example, Ethereum, okay, via the ETH BTC pair. Okay, so you can use a cryptocurrency to swap it to different cryptocurrency pairs as well, or use your cash to do cryptocurrency and then buy the pair that you want. And you convert the second asset, such as Ethereum, back to your starting currency for your USD via the Ethereum USD pair. So the margin requirement and the speed of this. For the trade to be profitable, the final USD amount must be greater than the initial USD amount after all 3 trades and associated fees are deducted. And why this is faster? Since all 3 transactions happen on the exchange, the trade can be processed much faster than moving assets between exchanges. And this makes it a primary focus for institutional high-frequency trading. Okay, which can be a good thing and a bad thing because that can bring about as well. And this strategy is highly dependent on sufficient liquidity for all 3 legs of the trade to ensure that the bot can execute its large volume orders without slippage, which is the change in price due to the order execution itself. So the frontier, right? DeFi arbitrage and flash loans. So let's talk about DeFi pools and DEXs. Decentralized finance, which is DeFi arbitrage, involves capitalizing on price differences between different automated market makers, also known as AMMs, like Uniswap and SushiSwap, or between a DEX and a traditional central exchange, okay, also known as a CEX. And let's talk about the liquidity pool inefficiencies. Prices on DEXs are determined by the ratio of tokens in liquidity pool. And when a large trade happens on one DEX, the ratio shifts, creating a temporary price difference relative to other platforms. And there's going to be a gas war, right? So gas in the cryptocurrency world equals fees. So when you see the word gas, think of fees. So a gas war. A significant risk here is the cost of gas, right? The network transaction fees. And arbitrage bots must bid high gas fees to ensure the transaction is included in the next block faster than their competitors. Okay, and nice writing here. And the game changer, right? Flash loans. So flash loans are a novel decentralized finance concept that allow a user to borrow any amount of uncollateralized assets, provided liquidity is available, so long as the funds are borrowed and repaid within the same blockchain transaction. So let's talk about some zero capital arbitrage. Flash loans enable an arbitrator to perform a large-scale arbitrage without needing any initial capital. The bot executes the buy low, sell high sequence, and then repays the loan plus a small fee, all in one automatic transaction. Okay. And if the transaction fails for any reason, for example, if price moved, the loan is automatically reverted, eliminating execution risk. So the automated life cycle of an arbitrage trade. So opportunity scanning, right? We can go watch it. So the bot, right? Having a bot, especially as AI progresses and things like that, the bot continuously monitors real-time price feeds across Devon's exchanges, calculating the net profit after all fees for every possible pair or triangle. And it seeks a spread that is going to be wider than the combined cost of trading and transferring the funds. 2, trade evaluation and execution, the trigger. Once a qualifying spread is identified, the bot initiates the simultaneous execution. And for interchange arbitrage, this means sending API calls to both exchanges at the same moment. And the execution must be extremely fast to beat other bots. And let's talk about the settlement and rebalancing, right? The closer. So after the trade fails, the arbitrage now has an imbalance of assets. For example, more Bitcoin on exchange A or less on exchange B. And the final step is often transferring the net profit back to the seller account and rebalancing the capital for the next opportunity, which incurs more fees. So the necessity of automation for arbitrage, the bot stack. Manual arbitrage is essentially impossible in modern markets. An entire process relies on sophisticated low latency software, written primarily in languages like Python or C++, and the API integration. Bots communicate directly with exchange APIs, application programming interfaces, right? That's what API stands for, to retrieve real-time order book data and submit orders. This bypasses the slow web interface entirely. And collocation. Professional arbitrage often host their bots physically close to the exchange servers, known as collocation, and to shave precious milliseconds off their network latency. And high-frequency data. The bot must process tens of thousands of market data updates per second to stay. And algorithmic sophistication, the net profit calculation. A good bot doesn't just look at the price gap and must factor in variable market maker fees, taker fees, slippage estimates, and potential withdrawal transfer fees to calculate the true expected net profit before initiating trade to make sure that's worth it. And the competitive landscape is going to be fierce as more capital flows into arbitrage and the profit margins are driven closer and closer to zero. And this creates an arms race of technology and speed and execution efficiency. So, 1, the execution risk, right? The closure. So this is the biggest threat. The arbitrage opportunity often disappears before the second leg of the trade is filled. If you buy low on exchange A, but the price on exchange B drops before your sell order executes, you are now holding the asset at a loss. This intended simultaneous nature of the trade hasn't failed. So 2, slippage in the costs, right? Arbitrage profits are often less than 0.5%. If an exchange increases the trading fees or if a large order causes slippage, just filling at a worse than expected price, the small profit can instantly turn into a loss. And arbitrageurs must strictly track their trading tiers and fee schedules to make sure that the trade is going to be worth it before they put on some size. So, withdrawal and funding risk, right? The weight. For inter-exchange arbitrage, the capital needed to rebalance the accounts, right? So moving the final asset back to the original exchange can be tied for minutes or hours due to blockchain confirmation times or exchange enforced withdrawal limits. This is known as going to be opportunity cost. So, walking through a hypothetical Bitcoin trade, right? Let's say on exchange A, you bought low. Yeah, let's say the Bitcoin USD price, 60,000, you have 100K available, $100,000 available. USD, fiat currency. On exchange B, you sell high. Okay, on exchange B, the Bitcoin USD price is 60,050. Okay, and you have 1 Bitcoin available. And for the fees and the spread, for the trading fee on the each side, right? So trading fee, 0.1%, and the gross spread would be $50, right? So the buy cost on A, Be buying one Bitcoin for $6,000. Okay. Take the trading fee times 0.001. Okay. So 60. Sell one Bitcoin for 60,050. Okay. And then same thing with the other trading fee. That'd be 60.05. Okay. 60.05 plus 60 is 120.05 gross profit. Okay. And that's just going to be the total fees paid. Okay. So that's the calculations you do to get the fees. And then your gross profit would be $50. Okay. The gross profit minus the fees, then boom. You see the arbitrage due to fees, making the trade not worth it. So sometimes fees can destroy your profit. So keep it in mind about that. Even if you're a day trader, spamming trade and stuff like that, especially if you're losing, can increase your losses. And certain fees depend on certain brokers or exchanges. So check them out, depending on whatever you trade on. It's not going to be the same everywhere. And arbitrage is only profitable when the gross spread significantly outweighs the total cost, right? The fees and the slippage. The threshold must be met first. Okay. So the evolving landscape and the challenges ahead. So the market efficiency. The long-term impact of successful arbitrage is the increase of market efficiency. Arbitrage and the pursuit of profit automatically correct the price imbalances, forcing the market to converge on a single fair price. Okay. So reduce volatility. By buying low and selling high, arbitrage stabilizes prices and reduces unnecessary volatility caused by large temporary discrepancies. And fair pricing is involved. And ensures that retail traders, which means just non-bank traders, just individual traders pretty much, are less likely to buy or sell at an artificially poor price. And the competition and innovation. From HVT to MEV, the focus has shifted from simple inter-exchange arbitrage to complex, low latency strategies like miners plus maximal extractable value, right? MEV, arbitrage on the blockchain networks. Blockchain is going to be the cryptocurrency network where people can go ahead and trade. Okay, it's going to go and check all the transactions and manage everything via smart contracts. Okay, so unlike a bank system where money goes from person to the bank where they confirm it, and then the person, cryptocurrency, happens to work on a person-to-person system, okay, making it one of the most dominant systems in order to send money or receive money. And as global crypto markets mature and become more interconnected, traditional arbitrage opportunities are shrinking, and success now requires cutting-edge technology, faster network access, and highly sophisticated risk management algorithms. And the race for speed continues to define who profits and who loses in the zero-sum game of crypto arbitrage. So summary of arbitrage trading, right? Arbitrage is the simultaneous trading of an asset to exploit temporary price differences for risk-free profit. It's not speculation, but rather a corrective mechanism for market inefficiencies. If you have enough capital, then inshallah it'll be profitable. And types and methods. Okay, so we covered inter-exchange markets, right? That's the two markets, triangular, three pairs, okay, and one market. And DeFi, which stands for decentralized finance, using flash loans. And they're all highly dependent on extreme speed and technological automations. And the reality of risk. While theoretically it's risk-free, execution risk, high transaction fees, and slippage can easily eliminate the tiny profit margin, turning a potential gain into a guaranteed loss. And automation would be mandatory for success most of the time, inshallah. Okay, so I pray to God, keep grinding. If you want to learn how to trade cryptocurrency, head over to stackmode.net. Peace.
After you've been grinding for years, really busting your tail, you want your money to work harder than you do. And dividend investing might be the easiest way to build passive income, but most beginners overthink it. But dividend investing is really simple. You just buy shares of strong, established companies, and they pay you cash just for holding them. And that's it. So imagine waking up to deposits monthly, weekly, and certain dividends pay out in different ratios and frequencies, and they hit your account while you sleep. That's the power of dividends. Let's go and let's jump into it. Let's understand what dividend investing is and how you guys can start building some passive income for you and your families, inshallah. Let's talk about dividend investing. Making our money work for us is going to be the most ample way to, one, get our mental health back. Okay, I understand we're grinding hard, working year after year after year after year, but let's at least make our money make us some money. Okay, we're not just grinding. Okay, no more exchanging time for money. Okay, It's time to start exchanging money for money. Okay, this way you guys are going to be a lot mentally healthier. You guys are going to have time to get closer to God, work on your family relationships, work on yourself, work on your business, and understand that when you have your money flowing within that asset river constantly, you're using your cash and buying more assets with it, and it's flowing in the river, flowing in the river. You could pretty much never work again. Okay, so when people talk about passive income, retiring, it's about putting your money within that income river. Let's go and let's talk about how to make our money work for us. Inshallah. So, what is a dividend in the first place? A dividend is going to pretty much be a thank you payment, okay? And they pretty much just tell you, hey, you've been investing in us for a long time, you've been believing in us, and I'm going to go ahead and give you some money back because we've been crushing it on the company side. So, a dividend is a thank you payment, okay? So, whenever you invest into a company that pays out dividends, or you're invested into an exchange trader fund, okay, which is a compilation of companies just put into one big giant fund, then you could also get dividend payments from there if the fund pays it out. Okay, so let's say imagine you lend money to a friend, right, to start their lemonade stand. Okay, you believe in them, you think it's going to turn up, and every month they start giving you $10 from the profits as a thank you because he started turning up, started making tons of money. Okay, so that friend who started the lemonade stand decided to give you a portion of the income because since you gave him that initial investment to believe in him, okay, and you funded his company, he did the right thing and gave you some profits back because you had his back and you believed in him. And that's what a dividend payment is. When you believe in these companies, when you believe in these ETFs, then we're able to get some profit back, inshallah. And that's a dividend. It's real cash paid to you just for owning a piece of the company, okay? And it's passive. Okay, you don't got to do no work for this money. All you got to do is buy. Okay, all you're doing is turning money into more money. Okay, dividends is going to be one of the most extreme forms of passive income, especially after you guys have grinded out 6 to 7 figures. Okay, being able to plant that 6 to 7 figures into some dividends and get paid $5,000 to $25,000 a month just for having your money parked is going to be a really, really good way to just chill in life. Okay, and it could be regularly. Okay, it's usually paid every 3 months. Okay, so quarterly, and it's very, very safe. So usually only strong, profitable companies pay them. Okay, it's not a lot of broke companies paying out dividends because they can't afford it. Okay, a lot of companies paying out dividends are companies that have it all based out. They know that you investing into the stock market, okay, is going to go ahead and give them more income. They're then going to be able to turn that income into bigger buildings, hire better and more employees. Okay, which should lead to them making more income. Okay, better products, faster products being made, etc. So that way their income can skyrocket. Okay, and when that happens, we benefit from it too. And a lot of the times too, dividend payments, okay, have certain dates set to them. Okay, sometimes you get dividend payments monthly, sometimes you get dividend payments quarterly, a few times a year. Okay, and every single company and ETF is going to have its own different dividend payment cycle. So before you invest into something, make sure you're doing your research. So here's an example, okay, just one more time to make sure we understand it. Let's say you own 1 share of Apple, okay. For 1 share of Apple, Apple pays you 24 cents, okay. You can check your phone, okay, and that money is sitting in your account, chilling, okay. You didn't have to sell the stock to get it, okay. All you have to do is just have your money chilling in stocks. So you get paid for turning your assets into more assets, okay? So after all the day trading is done, after grinding your business hard for years, after grinding corporate hard for years, take that money and you guys can easily park it into some dividends and start getting yourself some monthly cash flow, okay? Put some mental health back into yourself and take some of your money and let's try and get some passive income from the money we already have and we've been working hard for. Let's go to the next slide. So let's go and let's talk about the dividend yield. So the dividend yield tells you the return on your money right now, okay? And it's kind of like the interest rate number on your savings account, okay? So as you know, for APY accounts, okay, interest though, you know, is a reason why God says not to do it. It's not something that'll leave you profitable in the end anyways, okay? So focus on things outside of interest. But let's say annual percentage yield, let's say there's an account that would give you like 3% per year, okay? With inflation and taxes though, that's not anything. Okay, so when you're focusing on dividends though, something like that, okay, then you're going to be able to get a lot better bang for your buck and for your value. Okay, so average yield, right, around a 2 to 5% average yield is going to be healthy. Okay, and a red flag If the average yield is over 8%, okay, be careful. Okay, it might be a trap and the company could fall off later, even if they're paying out big dividend payments right now. Okay, you want to try and have your dividend payments be as consistent as possible. Okay, you don't want your dividend payments to go down. Okay, if you're getting 5K a month for the money you have invested, that's how much you want to be getting. Okay, you don't want it to go down to 3K one month and then your bills and calculations are all thrown off. You don't want it to happen. It can be really, really frustrating. Okay, so let's do the math. So let's say the stock price of something is going to be $100. Okay, and then they pay you $4 per year. Okay, so the yield, okay, is 4, since they're paying you $4 a year, divided by 100. Okay, and that's the stock price, and that's going to equal a 4% return. Okay, and that's how the dividend yield is going to go ahead and be broken down. Let's go over to the next slide. So, is it safe, right? The payout ratio. So let's talk about the pizza analogy. So think of a company's total profits as a whole pizza, okay? And the payout ratio, it's how many slices they decide to give you, okay? And that's going to go ahead and be exemplary for the shareholders versus how many they keep to grow the business, okay? So how many slices of pizza are they going to give to you, and then how many slices of pizza are they going to try and hold on to, okay? And safe, okay? So under 60%, okay? If they give you 6 slices and they keep 4, okay, that's safe, okay? That's safe. Why? Because they were able to pay you a little piece of the pie, okay? Make sure you eat and make sure they eat too, okay? Because they got to be logical. They can't feed you if they're not feeding themselves, okay? So they be logical. So, but it can be dangerous if they're giving away over 90% of their pizza. If they're giving away their whole pizza every single time, then they're going to have no food left over for tomorrow. Okay, so you have to watch and look at the payout ratio percentages. Okay, so let's say company A, right? Let's say earn $10. Okay, and then they give you $2. Okay, they would have $8 left. Okay, and that's going to be pretty safe. Now, let's say company B, right? Let's say they also earn $10. Okay, and let's say company B paid you 9.99. Okay, they paid you $9.99. Okay, they'd be left with 1 penny left. Okay, what type of investments or growth can they do then? Okay, so focusing on the payout ratio of the dividend you're looking at is going to be extremely, extremely imperative to making sure that you're not making any random decisions unnecessarily. Okay, focus on companies with safe payout ratios, because that way you can see that they have their math baked in for consistent scaling year after year after year after year, not just random sporadic payments being sent out and then they have a possibility of going broke and then there's really going to be no more dividend payments. Okay, so in order to avoid all of that, avoid the hardships, try and focus on dividends and companies and ETFs that pay out very safe ratios so that they don't go broke, so then they can continue to pay out dividends so you can continue to feed your family and yourself, inshallah. Let's go to the next slide. So let's go and let's break down the snowball effect, okay? The compounding effect, stacking dollars, okay? Get into stack mode, okay? Stay down. I don't care if you got to wear the same clothes every single day, okay? Keep driving that old car, okay? It's not time to get a new car right now. Stack it up, okay? Set some parameters. Tell yourself, you know what? Until I have 100,000 stacked up, I'm not going to get X, Y, and Z. Until I have 1 million stacked up, I'm not going to get X, Y, and Z. All this just takes a couple months and a couple years, okay? You guys got it. Go hard. Go hard. Go hard, because it's really time to automate your wealth, okay? And it's going to be the secret sauce. Instead of spending your dividend cash on coffee or random other things, okay, you can press a button called drip, okay? So what drip is going to do is take your dividend income, okay? So say you're making $100 a month from dividend income, okay? You could take that $100 a month and buy some more dividend shares with that, okay? So that way that $100 a month will turn into $150 a month. You keep doing that, it'll turn into $200 a month, okay? And then it keeps stacking up over time. As long as you're in stack mode, your account will be in stack mode right with you. Just know that, okay? So drip equals dividend reinvestment plan. A lot of brokers have it to where you can automatically just reinvest your dividend income back into more shares, okay? So the computer or whatever broker you're using uses your dividend cash to buy more shares automatically, okay? And next time you'll have more shares, so you get a bigger bag, bigger check. Then that bigger check buys even more shares and it spirals upwards, Okay, so trying to have your life together outside of the market. Okay, the more you have your life together outside of the market, the more money you'll be able to generate from the market. Okay, just keep cycling your money back into shares, back into more shares, back into more shares, and keep upping that income. So let's say year one, you own 100 shares. Okay, you invested super duper heavy. Then by year 10, okay, you own 150 shares. Okay, and let's say you didn't even pay for the extra 50 shares. It was just stacking up over time. Okay, so once you start planting that seed of ownership, your tree can do nothing but sprout and grow, inshallah. So plant your seed today so you can start sprouting. You guys can start dropping fruit everywhere. Okay, but you gotta plant your seed. You cannot start dropping fruit everywhere until you plant your seed. Okay, so then from year 30, 20, then from there you're earning a full salary from dividends alone. And then you could chill out. Okay, you still have your money parked away in the dividend, and you're getting paid for having your money parked away. It's crazy. Okay, if you make the right financial decisions, you stay focused on God, and you don't feed your flesh, you guys can get out of poverty. Okay, you guys can be rich forever. You can never go broke again as long as you maneuver your wealth into that constant asset river. You have to continue to flow your money in that asset river. Otherwise, things can get hard. Okay, so throw your money to the river and start flowing so you guys can grow like the big oak tree. Plant all your seeds today. Let's head over to the next slide. So let's jump into royalty stocks, right? Dividend aristocrats. So these are going to be the MVPs of the stock market. Okay, and to be on the list, a company must have been in the S&P 500, okay, which is accumulation of like the most powerful stocks, okay, put into one index, okay, known as the S&P 500. And two, okay, they must increase their dividend every year for 25 plus years straight. So if a company is paying, right, 20 cents per share, okay, in 2010, okay, and then in 2011, let's say they're paying 25 cents per share, okay, that's going to be a 5-cent increase, okay? So if they're increasing their dividend amount every year for 25 years straight, then that's going to be a big MVP. And that means that these companies have survived recessions, wars, bubbles, and still paid their investors more money, which means that a lot of these companies are going to be constant investments due to the fact that it seems like that these companies have become a staple in human lifestyle. Okay, companies such as Coca-Cola, okay, or Johnson & Johnson, the Band-Aid company, for example. Okay, so companies that incorporate into lifestyle, okay, really are going to be the ones that will survive year after year after year. So let's go and let's talk about the risk with everything. Okay, pay attention to that yield trap, just like we talked about on the previous slides. The yield trap is going to be really important to pay attention to. Sometimes you see a stock paying 15%. Okay, you think you're about to be making bands every single month just by investing into a simple dividend. Okay, and they might pay you out for a couple of months. Okay, you might be getting 5K a month payments, for example. Okay, for 3 months, and the next thing you know, they start losing profit. Things start getting shambles, and then boom, and then the high yield decides to stop paying you out what you're used to getting paid out. And if a company runs out of cash, I'm telling you, they're gonna cut that dividend to zero. Okay, so just with the pizza analogy, okay. You can't help anybody in the world if you're not helping yourself first, okay? So if you have a box of pizza, right, there's 10 slices of pizza, okay? If you give away 6 slices of pizza, okay, you'll still have 4 slices of pizza for yourself, okay? You can still eat, you're not gonna be starving, and you're gonna be chilling, okay? But then take person B, okay? If person B gives away all their pizza, they're gonna have no pizza left over, okay? And that might seem like a good thing instantly, okay, because they fed everybody and ignored themselves, but that's not, okay. That'll turn into later frustration, later hunger on that person, regret on that person, okay, and they're gonna be like, well, you know, people might not have fed me in certain type of ways, okay, leading into certain type of mindsets, okay. So even in dividends, it tells us it's really important, okay, to keep our bag right. Before we can help anybody else, our bag has to be right, okay. And dividends show us this. If a company is giving away all their money, they're not going to have enough money to reinvest into more ads, into more workers, into better factories, etc. And they're not going to be able to scale at the way that they would like to, if at all. Okay. So if a company runs out of cash, they're going to cut the dividend to zero. So be wary of new companies, especially paying out big dividends, because it might not be consistently for long. And that's when the crash comes. Okay, and when they cut the dividend, the stock price drops even more because it's going to go ahead and lose value, which means you lose twice. So not only would you lose money on your base, money that's parked in there, your dividend payments are going to go ahead and get cut as well. So a golden rule, right? So a safe 3% return is better than a 15% risky return that has a chance of going to zero. Okay, don't be greedy. Focus on consistency. The name of the game in trading, investing in general, is consistency. Treat yourself like an oak tree, and you got to plant yourself in the ground. You got to give yourself water and sun. Okay, if you're not planting your seeds and you're just trying to hit the big 0 to 100, you're just trying to go buy an oak tree and plant it in the ground, it might not be stable. Okay, it didn't get time to connect to the roots, to the soil, and it might topple over. Okay, but when you're the tree and you grow it day by day, limb by limb, okay, root by root, okay, you're going to know the field, and your money is going to be planted within the soil. It's going to have a lot better baseline to it. Okay, even if stock prices were to start dipping down, since you have so much baseline planted, okay, stuff isn't really going to affect you. Okay, your dividend payments are still going to be pretty consistent, and your profit fluctuation isn't going to be as bad because you planted your seeds. So focus on planting your seeds over a quick win. So how do you start today? Okay, I'm going to give you guys a 3-step plan. So the account, open up your broker. Okay, you guys can do Webull, Robinhood, Fidelity, Schwab, Vanguard, so many different options. Okay, open a brokerage account. Okay, then from there, okay, you can buy ETFs. ETF stands for Exchange Traded Fund, and they're pretty much going to be a bunch of companies put into one big giant company, for example. Okay, so you could buy really, really consistent ETFs like SCHD that pay out really, really good dividends, or VIWM, for example. Okay, and it's a basket of 100+ dividend stocks that give instant safety. Okay, or you could pick individual stocks as well too. Okay, and then the button. So find settings for your dividend reinvestment and turn it on. This way, all your dividends are going to go back into shares consistently, instead of you guys just having random cash, and then you're going to have to go buy dividends, instead of you just having it all in that DCA, consistent flow mode. Okay, so don't forget, diversify. Okay, and a good way to diversify is to really invest into ETFs as well too. Okay, let's head over to the next slide. So dividend investing is really like going to be the ending to everything. Okay, it's the furthest thing from a get rich quick scheme. But after you run up 5 figures, 6 figures, 7 figures, you've been grinding, you've been putting in the work, you've been praying to God, really staying down. Once you have some money stacked up, dividends is going to be a good place to park your money in, and you guys are still going to get that monthly income and that monthly reward from it. But make sure you guys are choosing to invest into things that pay you out consistently, and be patient, be consistent, and start now. Okay, start now. That's going to be the most important thing. Start generating your business now. Start generating income now. Start doing whatever you need to do now. If you say you want to invest into certain assets, if you have $5 in your account right now, take that $5 and invest. Okay, start planting your seeds today, and that's going to be the most important thing. It's not really about the money. It's about your lifestyle, your consistency, okay, and how disciplined and focused you are when it comes to stacking your assets. All right, if you want help with it, head over to Stackmode.net. Stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. Peace. Keep going hard. Don't ever give up.
So what's the difference between major, minor, and exotic Forex pairs? Let's go on and jump into a class. So an introduction to the Forex market. So the foreign exchange, also known as the Forex market, is the largest financial market in the world, with the daily trading volume exceeding 7.5 trillion as of 2022. So this is a pretty recent study. It operates 24 hours a day, 5 days a week across major financial centers like London, New York, Tokyo, and Sydney. And it's a decentralized market where currencies are traded over the counter. And it involves speculation on currency, and speculation is going to pretty much mean to where traders can get paid based off of directional bias on currency value fluctuations driven by economic, political, and geopolitical events. And participants include banks, corporations, governments, hedge funds, and retail traders, which are just single individuals. So let's go on and jump into the classifications of the currency pairs, their characteristics, and how they impact the trading strategies. Let's go. So what are currency pairs? In Forex trading, currencies are always traded in pairs because you're essentially buying one currency while selling another. The first currency is the base. So let's say, for example, USD, okay? And the second one is the quote currency. So the first one here is going to go ahead and be the base. So USD before the slash is going to be the base currency. And the second one, okay, is going to be the quote currency. So let's say euro. Okay, so let's say you're trading USD euro. The first term, USD, is going to be your base. And then the second one is going to be your quote. So an example, for example, here in euro USD, then euro will be the base and USD would be the quote. And if the pair is at 1.10, it means 1 euro buys 1.10 US dollars. And currency pairs reflect the relative value and are influenced by interest rates, inflation, and economic data releases like GDP and employment reports. And understanding pairs is crucial for risk management and profit potential in trading. So for example, if you believe that the euro will strengthen against the US dollar, you go long on euro USD. Conversely, if you think it'll weaken, then you'll go short, okay? And long means price is going to go in an upwards direction that you speculate, and going short means that you think price is going to go in a downwards direction. So some categories of the currency pairs. Forex pairs are categorized into 3 main types, okay? Based on liquidity, trading volume, and the economics involved. Majors, minors, and exotics. So majors, they're mostly traded and involve the USD and major economies. And minors could cross pairs without USD and still for major economies. And exotics involve emerging or smaller economies. And these categories help traders choose pairs based on their risk tolerance and strategy. So major pairs, here's the definition. Major currency pairs are the most liquid and widely traded in the forex market. They always include the US dollar paired with another currency from a major global economy. And majors account for about 85% of the daily forex volume. And the US dollar dominance due to the US economy size and the dollar's role as the world's reserve currency. And high trading volume leads to tighter spreads, okay, which means you're going to be hit with less fees whenever you do close or sell off your trades, and better execution, which means you're going to go ahead and get filled. So when you click buy, you're going to go ahead and be entered in the trade, or sell, you're going to go ahead and be exited out the trade. And major pairs are traded heavily during the overlapping sessions like London session or New York session. And New York session is from like 9:30 a.m. to 4 p.m. Eastern time, okay? And in between that, London session overlaps. So London session ends at 11 a.m. But due to the fact that New York session opens at 9:30 a.m., there's going to be time where New York session and London session are going to go ahead and overlap. And major pairs are going to be ideal for beginners due to their predictability and abundant market analysis available with so much data. And we know this is a left to right chart. That's just how it works. So examples of major pairs. Here are the 7 most common major pairs. Euro USD. So euro/US dollar is the most traded pair globally, has the most volume, has the most money running through it, and has the most people trading it. So USD JPY stands for US dollar and Japanese yen, and it's known for carry trades. GBP/USD, that stands for British pound. So GBP stands for British pound, okay? /US dollar is volatile due to the UK politics. So the United Kingdom politics really affect the pair GBP/USD. And USD/CHF, okay, US dollar/Swiss franc, it's a safe haven pair. And Australian dollar/US dollar, okay, it's commodity driven. And USD/CAD, US dollar/Canadian dollar, it's oil influenced, okay. And New Zealand dollar/US dollar, it's very agricultural focused. And detailed example, so Euro USD, it's influenced by ECB and Fed policies. And for instance, if the Fed raises rates, USD strengthens, pushing Euro USD downwards. So some characteristics of major pairs. Majors exhibit specific traits that make them attractive. Okay, so high liquidity, major pairs is really going to be a spot where trades are going to be able to take place quickly. So if you click buy, you click sell. Since there's so much liquidity, aka people trading or money being flowed into it, when you click these buttons, you should be filled pretty quickly. Okay, so high liquidity, they're easy to enter and exit positions without price slippage. Okay, and more stable. Okay, but can spike on news like non-farm payrolls. And tight spreads often around 0.5 to 2 pips, reducing the trading cost. And there's going to be abundant information on major pairs, extensive coverage, a lot of government information, economic information, etc., affecting the price. And there's going to be extensive coverage from sources like Bloomberg and Reuters, for example, and different correlations. They often move in tandem with the stock markets or bonds. And these characteristics allow for scalping, day trading, or long-term position holding. And advantages of trading the major pairs. The pros include some lower risk due to the stability and liquidity. They can be cost-effective, they have minimal spreads and commissions, diverse strategies are going to be able to play it within them. They're suitable for technical and fundamental analysis. So when you put news and charts together and your TA together, technical analysis, then it could be a really good way to make some money, inshallah. But not without risk, be careful. And global impact, you can react to worldwide events, providing opportunities. So for example, during the COVID-19 pandemic, majors like USD JPY saw safe haven flows, creating a predictable trend. And so disadvantages of trading major pairs. So some cons to consider. Lower profit potential. Less volatility means smaller price swings. And high competition. Crowded trades can lead to reversals, and new sensitivity and sudden announcements can cause whipsaws. For example, in 2016, Brexit, which was something that involved the European Union, it caused GBP, which is the British pound, US dollar / US dollar, to drop 10% in one day, catching many traders off guard. So even if you were in a good position, due to the fact that you're trading something that's based off of economic news, can still be subject to certain drops or certain uprises. So be careful. Make sure you have your stop loss set, and make sure you're trading within your risk parameters. Trade within 1 to 10% of your account. So the definition of minor pairs are going to be known as cross pairs, and they consist of two major currencies, but exclude the US dollar. They represent about 10 to 15% of the Forex volume and are traded between major economies, and they're derived from majors. For example, European / GBP is influenced by European USD, and GBP / USD reflects regional economic dynamics without USD influence. And USD stands for, once again, US dollar. That's going to be the fiat currency used in the United States. And they're more active during European or Asian sessions. And miners often offer diversification from USD-centric trades. And some examples of minor pairs. Some common minors include Euro / GBP. Now remember, minor pairs do not include US. So minor pairs are going to be Euro GBP, Euro AUD, which is going to be for Euro Australian dollar, GBP JPY, that's for British pound Japanese yen, AUD JPY, Australian dollar Japanese yen, Euro CHF, that's Euro Swiss franc. So CHF equals Swiss franc. And Euro GBP is Euro British pound. And then we're going to have CAD JPY. CAD is Canadian, and JPY is Japanese yen. So for example, with GBP / JPY, known as the guppy, it's volatile due to the carry trade interest rate differentials. So some characteristics of minor pairs. So minor pairs have moderate liquidity, less than majors, but sufficient for most traders. And they have higher volatility. They have more price swings than majors due to the fact of different certain parameters. They also have wider spreads. It can consist of typically 2 to 5 pips. So low liquidity is also going to lead to wider spreads. So beware of that too. And they have a regional focus, influenced by local news. For example, European data for European pairs and correlations, often inversely related to US dollar strength. And they're suitable for intermediate traders seeking more movement. And pros and cons of minor pairs. Advantages: higher volatility for profits, bigger moves in shorter times, and they're used for diversification too. So you can avoid the USD exposure. Let's say the US economy is going through something, then you can trade minor pairs. Some disadvantages: they have higher cost and wider spreads eat into the profits. So let's say you made $200 on your trade, the spreads would go ahead and make it like 184, for example. So this way you're going to be down like $16, something like that. So they also have increased risk too. They're more unpredictable during off hours as well. And during 2022, for inflation, for example, Euro / GBP fluctuated wildly on the ECB versus BOE policies. So once again, any big economic news that occurs is going to go ahead and affect the price. So be wary, have your stop loss set. Stop loss is going to be an automatic order that cancels out your trade for you, so you guys don't lose money for no reason. So exotic pairs, here's the definition of that. Exotic pairs are a major currency, usually USD, with a currency from an emerging market or smaller economy. And they normally have low trading volume, making up less than 5% of the market. And emerging economies like Brazil, South Africa, and Turkey are going to be involved. And they have high sensitivity to local events like elections or commodity prices. And they're traded sporadically, with liquidity peaks in specific time zones. And exotics are for experienced traders who are willing to take higher risk, who believe in the future of a certain country, for example, or smaller companies' progression. So some examples of exotic pairs. You're going to have USD/TRY. That's going to be USD/Turkish lira, okay, for Turkey. So USD/MXN, USD/Mexican peso, so the US dollar and the Mexican peso. USD/ZAR, the US dollar/South African rand. Okay, it's going to be South Africa's currency. Euro/Turkish lira, so the European Union currency can be traded with the Turkish currency. And USD/THB, the US dollar and the Thai currency, the baht. So THB is going to be representing Thai's currency for the baht. And USD/SGD, okay, that's going to be for the Singapore dollar, okay. So SGD is going to be Singapore dollar. So for example, USD/TRY, it's highly volatile due to the Turkish inflation and constant political instability. And certain other countries too that have not a stable government can be subject to certain volatile price action fluctuations, so be careful. So some characteristics of exotic pairs. So some distinct features, class. They normally have low liquidity and they're prone to slippage and gaps. And they have a high volatility, and large swings can happen depending on the news. And that can be a good thing or a bad thing, because they can throw off your technical analysis depending on just certain events. And they have a huge spread when it comes to fees, and they have up to spreads of around 10 to 50 or more, okay? Which could mean that if you make like $200, you could be getting like $100 back, depending on the certain amount of spreads. So be careful. And local influences, commodity and politics dominate, okay? And certain governments are going to be corrupt. And higher swap rates. Overnight costs can be significant. And this requires deep research into an emerging economy and see if they're actually improving. And some pros and cons of exotic pairs. Advantages, they have high profit potential, and volatility allows big gains. And unique opportunities, okay, less crowded markets. And some disadvantages, they have high risk and sudden devaluations possible. They can be expensive as wide spreads and low liquidity can make certain things not work out. And limited data can be harder to analyze too. And the 2023 USD/ZAR surged hard due to the fact that South Africa decided to invest heavily within energy business, okay? So surge hard due to the South African energy crisis. So if you make a good investment and the economy starts improving, you could potentially make some good profit based off of that. So the key differences. So comparing the three. So liquidity, majors are going to have the most, then minors, and then exotics are going to have the least. And volatility, exotics are going to have the most due to the fact that they're going to be the most unstable, then minors, and then majors are going to be the most stable. And spreads, majors are going to have tight spreads, so you're going to get most of your money. Minors and exotics have wide spreads. And trading volume is high for majors, low for exotics, due to the fact that majors are more trusted, more news, more data, and risk levels are low for majors and high for exotics. And you could choose based on your experience and goals. And once again, I'm not saying one is better than the other, just do your research before you trade. And liquidity explained. Liquidity refers to how easily you can buy and sell without affecting the price. And majors have extreme liquidity with minimal slippage. And minors can be good but thin out after off hours. And exotics can be poor, leading to higher costs due to the fact that slippages can be destroying you. So if I would think different about trying to swing trade or trying to day trade exotics, I would maybe swing trade. And during low liquidity, exotic pairs like USD/TRY can gap up like 100 pips on news. So be careful. And volatility explained. Volatility measures price fluctuations in the magnitude. So majors have an average daily range of around 50 to 100 pips. Minors move around 100 to 200 pips with more opportunities, and exotics can move 200 plus pips with high risk to reward. Not saying one is better than the other, do your research. And use tools like ATR, average true range, to measure if you want. And here's what spreads are. Spreads are going to be the difference between the bid and the ask prices. A lot of the time, the ask prices is what you're going to be buying at, and the bid prices is what you're going to be selling at. And majors have a 0.1 to 1 pip on average, minors have 1 to 3 pips, and exotics have 5 to 20 pips or more. And a 10 pip spread on exotics means you start 10 pips in the red. And trading strategies for each. Tailoring strategies. Majors, okay? You trend and follow. Following the trend is really going to depict what you want to do on the majors, okay? And news trading. And minors, they can carry the trades and have different range bound systems. And exotics, okay? They have fundamental analysis and different long-term holding. And always use stop losses and position sizing. And some real-world examples. Applying concepts. So major, European/USD. During the 2022 Fed hikes, the USD strengthened. And minor, GBP/JPY in 2023, volatility from BOJ, policy shifts. And for exotic, USD/MXN during the US-Mexico trade talks, swings on tariffs, okay? So different examples like that can be used. So for example, for a major pair, in this scenario, let's say you're trading USD/JPY during a risk-off event. Japan's yen is a safe haven. In the 2022 market crash, the USD/JPY dropped from 1112 to 101 as the yen strengthened. And the strategy, short USD/JPY on the stock market decline, and you ended up outcome with profitable low spreads, since it's a major pair. And exotic pairs risk. Let's say you're trading USD TRY during a Turkish lira crisis. Okay, megabus. Okay, in the 2018, let's say TRY depreciated 40% against USD due to inflation and politics going on. And strategy, then you could long USD TRY if you wanted to, but wide spreads cost extra. And with high rewards but overnight swaps, eroded the gains. Okay, so exotic pairs, even if you make a really good trade, fees, spreads, and stuff like that could just wipe away the money that you make. And the whole purpose of putting on a good trade. So in conclusion, major, minor, and exotic pairs is the key to successful forex trading. And it starts with majors, you can graduate to minors, and approach your exotics cost sheets. You can practice on demo accounts and stay informed with economic calendars. Stay prayed up to God, keep grinding. Put any comments below. I'll catch you guys in the next one. Head over to Stackmode.net if you want to trade forex or anything trading related. Peace. So if you lost all your money, you're at zero. It's happened to pretty much almost every single trader before, okay? And I don't want it to happen to you again, okay? It's gonna be important to lower your ego, humble yourself. And this is why it's really important to get with God, okay? It's really gonna help us build consistency, waking up, praying every single day, okay? Let's wake up, let's work out every day, okay? And let's transmute this pain, and let's work harder, whether at work and or your business, okay? So you should either be having one job and working on your business, or you could have 2 jobs, okay? And then on the weekends, work on your business, okay? Do what you need to do to grind, run it back up, don't stop, keep pushing. No matter in any situation, you have to keep pushing. You can't stop, you can't let things get to you. You can't let things break you down within your mental, okay? If you say you want this, if you say you want to be a profitable trader, if you say you want to put your family in a better position, we got to lock in. We can't be getting broken down. We got to bounce back, inshallah, if God wills. Okay, so here's gonna be the full guide to financial and psychological recovery. We gotta keep pushing forward underneath any circumstance. We can't stop. We can't let our emotions break us down. That's all just the devil, okay? The devil doesn't want you to progress, but God wants you to progress. Alhamdulillah, okay? So turn to God, okay? Wake up every day, pray, get yourself right, lower your ego. This is why you're blowing up your account. Why can't you just accept the fact that you're losing? Okay, if you lost the trade, get off the charts. Why are you trading over and over and over and over and over again? There's no point to that. It's time to transmute all of that pain, okay? Put it into more work, put it into your business. Set your alerts at your key levels and go work on your work and your business, okay? Why are you sitting there trading over and over again? Why are you sitting there taking 10 trades in a day, blowing up your account? How do you expect to progress? Okay, take one trade, risk management, and have some long-term investments, okay? Invest in shares, okay? Cryptocurrency, some long-term investments so you don't have to sit there trying to day trade every single day. The reason why you guys are also blowing up your account so quickly is because you're trying to day trade. All the money you've been losing trying to day trade, one, you could have put it into mentorship. Stackmode.net, the first call is even free, Okay, so I give you guys a free first call. And on top of that, there's just no reason to be blowing up your account in the first place, okay? Because all that money you've spent trying to day trade, trying to make profit, you could have been putting in long-term investments, and your profit would most likely still be positive today, and you'd still have a large majority of it. And so you'd be up and you'd still have your money. Okay, so focus on long-term trading too. Okay, it's not just all about day trading, zero DTE, futures, etc. Don't let that prop firm mindset destroy you. All right, let's go. So the immediate aftermath, the psychological toll, losing a significant amount of money in trading is more than just a financial event. It's a deep psychological blow, and you may experience a range of emotions, including shock, denial, regret, shame, and even a profound sense of failure. And it's crucial to understand that these feelings are normal and a part of the grieving process for your financial loss. Acknowledging this emotional state is the first critical step towards healing and recovery. So acknowledging the pain. Do not suppress your feelings. Allow yourself to process the loss without judgment. And this is a necessary emotional release that has to happen. And combat cognitive bias. Your mind might trick you into a get it back quick. Okay? Get it back quick. Okay, so pretty much if you lost some money, let's say you lost $200, okay, you might think, okay, I'm gonna go ahead and risk even more money so this way I can go ahead and get my $200 back and I can go ahead and end up profitable on the day. No, man, you lost. You lost. You get off for the day. You plot out an even cleaner setup. You come back with even more logistical analysis and more of a good reason to put on a good trade. And until then, you're gonna wait. I don't care if it takes days, weeks, or months. Okay, you wait for a good setup. Don't just come on here and burn your money trying to fiend for money. Okay, wait days, weeks, and months. It takes a long time to get profitable. Okay, but it can happen now if you just plant yourself in the right positions. Okay, invest in things that have future value. Invest in things that put smiles on people's faces. Okay, some stocks just go up in a straight line year after year after year after year after year. You just have to do your research. Okay, so don't get tricked within the get it back quick mindset, especially day traders. Day traders, you got to control your emotions. You got to think more long term. Even if you make some profit off a day trade, think about how you're going to reinvest that back into a long term play. And recognize that this is a cognitive bias, specifically the recency bias and loss aversion. And this resists the urge to jump back in. So conduct a brutally honest financial audit. So before you can rebuild, you must understand the full extent of the damage. This is not about self-blame, but about creating a clear picture of your current financial reality. And these detailed audit will be your map for the road ahead. So identify the full loss. Tally up every dollar lost. And this includes not only the principal, but also any fees, interest borrowed on funds, or opportunity cost. And categorize your remaining assets. List every single asset you still have, from checking account balance to the value of a car or your home. Okay, be meticulous. And document your debts. Don't run from your debt. Okay, don't run from your debt. You know you got to pay it off. Okay, certain things that you might have piling off. I pray that you guys don't have any debt, but if you do, let's tackle that. Let's pay it off. Let's stay down. Let's get in stack mode. Okay, stay down, stack mode. Okay, get in stack mode for the rest of your life. Okay, only spending 50% of our income, keeping the other 50% in the stash. This way, after we pay taxes, we're still gonna have money left over in the stash, inshallah. So document your debts. Create a comprehensive list of all your liabilities: credit card debt, personal loans, mortgages, etc. And after a $50,000 loss, for example, a trader might discover they only have $500 in their checking account and $2,000 in their savings account. They also find they have a $10K credit card debt occurred trying to recover the loss. Okay, so while they were just trying to make up for the money lost in cash, they were just spending money on their credit card debt. Okay, something that's happened to me, and I don't want you guys to go through that. It can be extremely daunting, extremely frustrating, and scary when you start seeing your debt pile up like that. So be financially responsible before you start trading, and don't trade with any money that you can't lose. So their audit reveals a negative net worth, but it also provides a clear starting point for a new financial plan. So focus exclusively on earning and saving. Stack mode. Okay, stack mode is about being a God-fearing, righteous individual. Okay, and it's about staying down. Okay, saving up your money, because we got people that's protecting what we're ride for. We can't be spending all of our money on stupid stuff. We're gonna be investing smart, growing our money, and making sure our money is always making us more money. Money is gonna be a tool. Okay, don't use money just to consume. Use money as a tool in order to generate some more money. This way you can work, okay, less. Okay, so as you get older, you're not gonna be able to work the same, but you still gotta be generating some money. Inshallah, still gonna be people that need help. Still might be family that need you. Still might be people to take care of. So your money needs to always be making you money. So use it as a tool and set up your investments. So for now, All trading activity must cease. Okay, if you go broke, if you lose all of your money, trading is stopped. Okay, pause it. Your number one priority is to rebuild your financial foundation with stable, reliable income. And this is a period of accumulation, not speculation. So work on increasing your income. So every avenue that you can explore, whether it's working harder at your business, okay, trying to get monetized on certain things, okay, creating certain programs, lots of things you could do to generate wealth. Especially with AI, it's extremely simple to just choose a niche and jump straight into it and just work hard. Okay, so this can mean working more hours, okay, freelancing, certain businesses. Just do what you need to do to generate some more income. So create a strict budget. So develop no frills budget that prioritizes essential living expenses. So stack mode, right? So when you're in stack mode, you got to really be staying down. When you get older, you can't work 16, 18 hours a day. Okay, you're going to be too old, but you got to be using money as a tool still. You still got to be investing. You still have to be generating income. Okay, so this is why investing is going to be so important, inshallah. So while you're healthy, okay, invest your money so then when you get older and you can't work as long hours, you're still going to be able to survive. You're not going to be down bad. Okay, I don't want you guys to be broke, okay, with no options and just nothing to really just say that you did on this earth. Okay, so please save your money and get in stack mode. It's important. So every dollar should go towards building an emergency fund and paying down high interest debt, and eliminate high interest debt. So use strategies like the debt snowball or debt avalanche to aggressively pay down credit cards and personal loans, and this is a guaranteed return on investment. So a deep dive into education and risk management. So once your foundation is stable, okay, you started clearing your debt, you got your money back on track, it's time to re-educate yourself. Your previous approach failed, so a complete overhaul is necessary, okay? Lower your ego, and you have to completely change everything. Restart your mindset, restart how you think about everything, restart how you approach the charts in life, okay? Completely overhaul your mindset. Quit things that you used to do, okay? Start doing some new things, okay? And this step is about replacing reckless habits with a structured, disciplined methodology. Okay, so here's a market study. So dive into the market history, economic cycles, and different trading philosophies. You can go ahead and read books. I have so many videos too, okay? And you can go ahead and check out how to balance your account, okay? Do your research, okay? I also have an ebook as well too, free course, many free videos. Please just do your research before you hop onto the charts, trying to throw some money at it or trying to make some money, okay? Because you might just end up losing some money, and that's really gonna hurt. So do your research first, please. Master your risk management. This is a non-negotiable. Learn to calculate your position sizing, set your stop losses. That's an area where the price is gonna go ahead and close out your trade automatically if it hits that certain area, okay, causing you to only lose a certain amount of money. And never risk more than 1 to 2%, especially when you're a new trader. But as you get better, you can go ahead and bump that up to 1 to 10% of your account. And a well-defined plan is gonna be your roadmap for everything. It must include your entry and exit criteria, your risk-to-reward ratios, and a detailed list of rules that you're never going to break. So instead of day trading with leverage, for example, a recovered trader decides to focus on a long-term swing trading strategy in a single sector they've studied for months. Their new rule is to never risk more than 1% of their account on a trade, ensuring that a string of losses won't wipe them out again. Okay, you're coming onto the market to make some money. Why are you coming into the market and going back to zero? It's not making sense. So you need to be focusing on the trades that are going to keep your account alive, and not the account or not the trades that's just going to make your account money. Okay, money is not always everything. Focus on what's going to keep your account alive. Focus on the safety, okay, and that inshallah will transpire to profitability. So conquer your emotional demons. Okay, trading is going to be 80% of psychology. I've seen it firsthand. You can give someone the best levels and they don't close that take profit because they think it might go further. Okay, so psychology is going to be extremely important, and your perspective. So your biggest opponent is not the market, but it's going to be your own emotions. Okay, and a lot of times it's going to be the devil trying to attack you. So just pray to God, and just understand that it's just evil trying to decept you. Okay, anything that you guys might want to do to tempt you to do anything bad, it's all just evil. Okay, don't do it, because when you're crying afterward, when you're sad afterward, that just means that the devil got you. Okay, so don't be weak, be strong. Okay, and keep your head on. So you must learn to separate your personal feelings from your trading decisions too. Okay, so even if you take a big loss, even if you just went down to zero, don't treat people bad. Okay, don't treat people bad around you. Don't talk to anyone bad. Don't get emotional. Okay, I know there's some times when you take a loss, you can't even speak to anybody. Okay, I've had those days. I've definitely had those days, but you can't let the trading loss affect your real life. Okay, you have a whole life that God has blessed you with. Okay, there's still grass outside, still fresh air, etc. Okay. So even if you lose all of your money to trading, don't get depressed, don't spiral, and just manage your expectations. And understand that trading is going to involve periods of drawdown, okay? And especially when you're first starting. If you go down to zero, it's okay. Okay, many people fail with their businesses, have gone down to zero, failed businesses, and I wish you guys just know how much trial and error it takes to actually be successful. Okay, this is why God is important, so you don't go insane. Okay, it takes an extreme amount of trial and error. Okay, so winning every single trade, that's an illusion. Okay, in hindsight, kind of not really. You are gonna lose sometimes, but it depends what you're trading. You can win like 99% of your trades though. I can say that confidently. So focus on long-term probabilities of your edge, not the outcome of a single trade. So start a trading journal. Okay, document your trades on YouTube, Notion, Discord, whatever. Okay, coming out with the app, Stackmode app, where you guys can also track your profits and trades too. Okay, so document every single trade, your profit, your loss, your entry, your thought process, how you felt, and the outcome of it. This is going to help you identify recurring mistakes and any emotional triggers. And practice unwavering discipline. Stick to your plan no matter what, and do not chase trades, do not get greedy, and do not panic. Discipline is the bridge between your goals and your execution. So start with paper trading too. Okay, you can paper trade on TradingView. A lot of brokers too allow it. And don't jump back into the market with large sums of money. Wait. Okay, play with small percentages of your work check, your business check, whatever. Okay, pay your bills first, get some groceries, and then whatever you have left over, start investing with. Okay, let that grow over time. And by this whole time, while you're playing with small amounts of money, you're gaining info. Okay, so say your business, something like that blows up, when it's time for you to get into the big bucks, when it is time for you to throw it into the market, you're going to be well informed and you're going to be all good. Okay, so alhamdulillah. Okay, so it's a lot better being in this position versus being somebody who has a lot of money trying to come into the market with no education and then losing it. Okay, because that can hurt. And even if that has happened, it's fine. Just run it up again, inshallah. So start with the tiny account, scale it up. If you can't grow a small account to a big account, you can't grow a big account to a bigger account. That's just the truth. So increase your position size when your account grows through profitability. Okay, be disciplined and don't just keep adding more capital in your pocket whenever you're making bad decisions. Okay, you have to grow your account. Okay, let it grow through discipline. So losing money can be the most valuable lesson you'll ever learn. It's definitely taught me a whole bunch, got me closer to God, made me realize how unstable I was in certain emotional aspects. I realized I was extremely greedy. Okay, there'd be times I just wouldn't be satisfied with my profit. Okay, and that was leading me to spiral over and over and over and over again. Okay, leading me to take more trades than I need to, trying to chase more dollars, instead of just realizing if I would have just stayed disciplined, been consistent, then I would have gotten to the position of where I wanted to at the same pace anyways. So instead of trying to make $2,000 in one day, if you make $500 4 days separately, that's still the same amount. Okay, so just focus on the long-term vision. Okay, get rich slow, focus on the discipline, and confront your weaknesses. Okay, and rebuild your strength and your wisdom. Okay, God tells us to be reborn. And the journey back is not just about financial recovery, but it's all about personal transformation. And you're no longer the same trader who took on too much risk. You are a new, more disciplined, and more resilient individual. Okay, rebuild yourself back up and become a boss. Every boss has taken a major loss, and it's about bouncing back. Do you have that hustle in you? Okay, it's really gonna determine if you're built for this. Okay, if you have that hustle in you, you'll run it back up. All right, God got you. Don't give up. You got people to provide for. I love you so much. Head over to Stackmode Network for all trading and business education. Catch you in the next one. Peace. All right, let's go and let's talk about how to catch big moves, right? This is gonna work for crypto, stocks, Forex, whatever. All right, how to catch big moves. So what is a big move? A big move is gonna be pretty much a move that involves catching a lot of points and potentially can make you a lot of money. And the reason why we want to be focusing on big moves is because big moves help you turn a little amount of money. Okay, so if you have a small account, for example, and the whole goal of trading is to turn a little bit of money into a lot of money. Okay, we don't want to be trying to turn risking a lot of money to make break even or the same thing. Okay, want to be using a little bit of money to try to make a lot of money. Okay, and that's going to be scaling with the amount of figures that you have. So 5, 6, 7, 8 figures, etc. You're still going to have the same mental perspective, using a little bit of money to get a large return. Okay, so, and that's going to mean a little bit of your portfolio, once again, relative to your scaling. So if you have a $10,000 account, then ideally you want to be using max 10% of your account per trade. Okay, so max $1,000. is what you want to be using. Okay. Don't want to go over that because then you could potentially just be out of your risk management parameters, throwing you off. Okay. So you want to be using, once again, 1 to 10% of your account per trade. So if you want to catch a big move, focus on the chart too. Okay. Forget about P&L. Forget about the dollar sign. Okay? We got to learn how to read the chart, learn what we're looking for if we want to catch a big move in the first place. Okay. So when catching big moves, once again, don't focus on the profit. We got to be focusing on the process. Okay. Let's go ahead and let's jump into it. How to catch big moves. So if you're on the crypto stock market, you're most likely trading an upwards trending market. Okay, so I can pull up most stocks and I could see that most stocks from left to right goes in an upward staircase direction. Okay, so that's going to be the same for stocks. And let me go and pull up Bitcoin here. Even if I zoom out on Bitcoin, I can see the same thing here. Price started below down here, and I can see price made its way all the way up here to this day. Okay, so that's going to let me know that price makes upwards direction. Why is price making upwards direction? Okay, so price is making upwards direction movement due to the fact that, one, for stocks, these companies aren't just moving for no reason. Okay, these companies employ people. Okay, so these companies help the economy. Okay, the more people working, the more people paying taxes. Okay, the more people paying taxes, the better the economy can be because the less debt the United States will suffer. So these stocks aren't just stocks for no reason. Okay, they're not just going up in value as well for no reason. They're helping people, they employ people, they feed families. Okay, and as far as the cryptocurrency tokens, right? So the crypto tokens, a lot of crypto tokens are created by humanitarians. Okay, like Ethereum, for example, created to counter Bitcoin's power wattage mining system. Okay, so a lot of humanitarians create crypto. Okay, people who care. Okay, it's people coding these networks. Okay, coding the blockchain network, coding the hash, etc. Okay, lots of coding involved within the cryptocurrency network. So there's people behind these projects. Okay, they want to see these projects succeed. Okay, they want to see it go up in value. And not only that, a lot of these CEOs of these stocks and owners of the token currencies own shares or a percentage of the crypto token. Okay, so they also want to see it go in an upwards direction. So once again, why else do things go in an upwards direction? Let's talk about safety. Okay, when people feel safe to invest into something or keep their money into a certain place, everyone's going to do it. And the benefit of that on the stock market and the cryptocurrency market, etc., is that the more people doing one thing within the trading world, so if a bunch of people are doing some buying, then inshallah, you can go and put into place and assume theoretically that price wants to go in an upwards direction. Okay. If you start seeing a bunch of buying on the order flow on your tape, you start seeing whales buy in, etc. Okay, you can assume that price wants to go in an upwards direction. Everyone's doing it. Everyone's putting big money at it, and everyone's betting on it going in an upwards direction. Okay. So keep that in mind. Things that are safe, people are going to feel comfortable investing in. Okay, that's why Bitcoin's been going up exponentially past couple of years, especially once the SEC, okay, government body, decided to gain regulation over the Bitcoin. Okay, and regulation then leads it to a whole new masses. Okay, people who watch the news and stuff like that, etc., then they're going to feel safe to invest. Hence why Bitcoin rose to 112,000 as of right now. Okay, fairly quickly as well too. So let me know if you guys were an early investor as well. So that's going to be a reason why price goes in an upwards direction. Now, let's talk about them. Two things. We'll break down resistance and support. So the market can only move one or two ways, okay? 1 or 2. It's simple. That's it. Okay. It can either move down or up. When market is moving in a downwards direction, right? All it is people selling. So I like to do everything on my higher time frames too. Personally, I like to use the daily and 4-hour time frames. And those are going to be the 2 time frames I scan everything with. So I'm going to start off with my daily here. And I could see, once again, this is a left to right chart. But I could see that even from all the way back here in 2017, why did price make this spike right here and then dip down? Why didn't it just go up to infinity? Okay, let me go ahead and answer this question for you guys. This is why stuff just doesn't go up in a straight line. And this is why you shouldn't panic when stuff dumps as well too. Because anything that goes down will try to come up within the market. So check it out. Price created this area of resistance right here. Okay. And resistance is going to be an area where sellers are present. Resistance means people sold heavily on this or at this level. Okay. And it's going to be best to see resistance on things like the higher time frames. Okay. You want to see resistance on the weekly, on the daily, on the 4-hour. Okay. You want to see support on those time frames as well too. But resistance means that people sold heavily. So why would people sell? Okay, if they're already up so much profit, why would they not think that's going to go to 1 million? Okay, let's put in a logical perspective here. So this is why it's kind of difficult to trade at all-time highs. So people got in way over here to the left, okay, and then price just starts pumping in an upwards direction. Okay, they have no take profit above them. They don't know how high it wants to go up in this one cycle. Okay, so the market's going to start collectively selling, okay, creating a massive sell-off. Once again, anything in the cryptocurrency or market world, as long as it finds its value within the world, it will make its mark. And we could see here, once certain things started to change, when people started investing into it, you can see this area of resistance here, where price fell down heavily at, decided to be passed. Okay, when market decides to pass a heavy area of resistance or support, we know it's going to be called a breakout. So price broke out right there easily. Okay, and a breakout couldn't be a good move here because why? You don't know how high price wanted to run up to. Price ran up all the way to here. Okay, and there was no previous highs. So this is why when they're structured, it's a lot easier to trade. Okay, and there's going to be some things that you buy and hold and sit in a long-term position. But as far as catching the trend and catching a big move, you want to make sure you know where price wants to exit, where it started at. Okay, and what type of trade it is. Okay, is it a bullish trade or is it a bearish trade? So let's take this example here, right? I have Amazon here. So one thing I know about the market too, I know market's always trying to break all-time highs, okay? Because everything's trying to be the best, okay? Companies want the highest rated currency. Stocks want the highest rated value as far as numbers. Okay, tokens want to be the most popular and most used. Okay, so it's very, very competitive. So in order to compete, let's analyze. So you can see here, it's area of resistance up here, and this area of resistance up here. Okay, why is that important, Chris? So areas of resistance are going to be extremely important due to the fact that price is always going to hunt them. No matter if price is at $0, if all-time highs is at 200, it's going to try and break that one day, inshallah. Okay, if an investor gives them $2 billion to revive the company from the ground and people start buying into it, it's aiming right for that previous all-time highs, looking to break it, okay, because it's looking to be the best, okay, it's looking to break its future records, break its future numbers, okay, and a company is trying to get better, okay, just like human beings, we're trying to get better every day, companies are trying to be the base, okay, and be in new levels, have a new stock share value, so they can pay out their workers and shareholders more if they give dividends, okay, so Amazon, for example, so I could see this area of resistance is up here. And I have another area of resistance up here. Okay. Price pause. I just think of resistances as areas where price paused. Okay. Check out this area here. Price decided to create this V area here and bounce in an upwards direction. Okay. So the opposite of resistance, we're going to have support here. Support's going to be an area where price decides to bounce from a downwards demand area. Okay, so price is going to come down, make a low, okay, and then bounce up from that low. Okay, and that's going to mean it's in demand at that place. Okay, so demand is going to mean support, and resistance is going to mean supply. Okay, so if you ever heard the two terms, that's how you break it down. So when market is shorting, okay, and shorting means selling off, okay, going in a downwards direction, market is always trying to meet with a area of support below current price or an area of resistance below current price. So resistance can be broken and turned into support. And when price is going in a downwards direction, especially on the stock and crypto market, it's not crashing. What it's doing is looking for a new low. Okay, it's looking for an area where people demand it, and then they're going to go ahead and get it. Okay. So the area of resistance is always where we're going to know where we want to exit at. So if I have this strong area of resistance up here, I know I'm going to go ahead and close and take my profit up here. Okay. And this is how you can catch big moves, especially on things like options. Okay, it's just closing at the right time and one buying at the right time as well too. Okay, so if price starts showing me price action down here from this area of support, and then breaks all-time highs, etc. Okay, then you can keep studying that congruency. Okay. So we got Google here. Okay. Create an area of resistance all the way up here at 257. Okay, we're dumping down to 237. Let me go to my 4-hour here and check it out. Okay. So price kind of met up with this area of support over here. Okay. And I don't like to just get in on the first week once again. I like to wait for that daily close. Okay. Once it's the daily close, I'm gonna wait and then boom. So we'll jump into another example here, some Tesla. So I can see area of resistance above current price. Okay, price is falling in a downwards direction. Okay. Once I start seeing price curve and give me some bullish momentum, I know price is going to try to reach this area of resistance. Okay, trying to beat its competitor. Okay, so take this example here. Okay, amazing example. So we have this area of resistance all the way up here, and you can see price decides to create its own area of support system here. Okay, and then looking to curl and fill in these areas of resistance. Okay, so that's 50 points here of Oracle. And finding a trade just comes down to really just taking your time. So Visa here. Price has this area of resistance up here. My daily, let me zoom all the way out. I can see we're making higher lows. Ultimate low, higher low. Low, low, and then higher low. Okay, so let's start seeing higher lows, price going in upwards direction. That's definitely gonna let me know we're trending hard. Yeah. So I'm gonna go ahead and mark out this other area of resistance over here. Got resistance right here too. Cool. Price falling down in the same exact area. Okay. So A, wait for price to curl, or wait for price to blast past this area, turn it into some support, and then take it up to the next area of resistance. Okay. And then a ruler. And you always know price is trying to hunt resistances. Okay. So don't think that these gaps won't try and fill itself, okay? Because inshallah, they really will. So boom, and that's about 20 points here, and it's definitely a neck out flipper. So I'm going to pull up some crypto examples here. Okay, same thing on the crypto market. Okay, we're not going to make it hard. Just keep it simple. So I'm going to pull up Ethereum here. Okay, market's making that big red dip on the daily. Okay, let me delete all the drawings here. All-time highs is going to be all the way up here. So price is looking to make a low. Okay, so we do have a strong area of resistance right here. Right here. Right here as well too. Okay, two very strong areas of resistance. And I believe way over here as well too. Okay. So then price came down, broke the area of resistance, and then turned it into support. Now price is heading within an upwards formation. Okay, and everything remaining till the area of resistance is going to be a move you can catch. You could just enter in the middle of it. Okay, don't stress over perfect entries. Our only God's perfect. And we're going to slow down, see what the price action is talking about. If we can catch our take profit still, we're going to catch it. Okay, if price made a low, it made a low. You start seeing daily closes and curves, you know what time it is. Okay. It's about having the risk appetite too. So even right here, have this area of support right here. Area of support right here. And then area of support right here. Or resistance right here. So support got broken, turned into resistance. The resistance got broken, turned into support. And now price is trying to sweep with an upwards direction. Okay. So if this is successful, I see price wants to sweep here. And I'm going to go ahead and catch the whole rest of the move up to this level up here. And then you catch the rest of the upper up here. Okay. And then the whole remainder of the move is pretty much going to be in your pockets. Okay. So that's going to be 1, take profit, and then 2. So extremely simple here. That's just making it easy for ourselves. Knowing what we're investing into, knowing what we're buying, knowing what we're going to exit. It's really going to be imperative to just making good decisions, okay, and just making sure we're profitable at the end of the day, which is really, really, really what matters. So cool. So I'm going to go and pull up another example here. Let's do some XRP. XRP just took a massive, massive dip. The price might be trying to bounce here. We'll see. It bounced really, really quickly. There's also an area of resistance over here too. Yeah, we have this area of resistance here. Looks like price is reflecting off of that here, and may potentially be going to go in an upwards direction. Okay, so let's go and let's check out this area of resistance up here. Okay, you know we're trying to break all-time highs, so we can keep making new highs. Sure. Okay. So think of market logically like that. Solana, for example. Yeah, Solana is super duper useful. Can't trade anything without it. Can't trade not Bitcoin, like Pepe the Frog coin with etc. Can't trade without Solana. Okay, so meme coins. So even the same layout here, have support, turn into resistance, turn into support. Okay, so the same thing as Solana. Okay, so this is why it's important to have a just certain strong mindset too. Don't panic sell the same place everyone else is doing it. Okay, be calm. Okay, and you got it. Okay, really sit on your trade, let take profit get hit, and yeah, and doing that really can help your flow out. So let me pull up TRX here. It's the same thing. One thing you're gonna notice too about me pulling up all these crypto pairs, they're all very similar. Each and every single one of them are really similar. So they all do the dip. Okay. And price action was just a little different here. So it looks like we had a dip here. We had a heavy dip on September 6th too. And that's also another thing too when it comes to catching big moves. Be aware of like news too. Be aware of news, the most volatile times, etc. too. Okay. So cool. So yeah, that's gonna be how to catch the big move. So prep to go. Keep grinding. Head over to Stackmode.net.
So I want to talk to you guys about trading with the trend. Understand that trading with the trend is going to be trading with where the money is flowing. You have to trade with where the money is flowing. Think of the market like a river. If you're trading against the current or you're swimming against the current, what's there going to be? Counter resistance. It's going to be hard. So if the market's going in a heavy uptrend, lots of buying is happening. Lots of liquidity, lots of money is flowing into the upwards direction. And you put in a short and you notice market still keeps going in an upwards direction, you're swimming against the current. Stop swimming against the current. If you're doing that right now, stop doing it. If you see market going in an upwards direction, you need to be buying in an upwards direction. If you see market shorting, okay, then you need to trade with the trend and take shorts. Stop trading against the market. Stop trying to see market go in an upwards direction and be like, market's going to short exactly right here. And then try and plant something that's not even going to happen. Next thing you know, buyers are still in place. The breakout happens. And then price continues in an upwards direction. Why? Because the trend is so heavy. The buyers have stepped in. If it's an upwards trend on the higher time frame and it's real, it's going to be a heavy trend. Okay. Trading. It's the art of reading human psychology through price. Most traders fail because they look at the reflection and not the source. And price is the only really thing that matters. Where's price going? Is price going up or down? Price can literally only go up or down. Trading is quite simple when you think about it. Okay, everything else is pretty much a derivative. So any type of indicators, things like that, all delayed, not things you need. So let's talk about the cycle of money. So accumulation, right? Professional buying. Accumulation is going to be people loading up on things, people loading up on shares, people loading up on crypto. When people are accumulating large amounts of an asset, such as the government, many governments buying hundreds of millions of dollars worth of Bitcoin, for example. Okay. Accumulation is going to be when an investor or an investing class, such as a government, a hedge fund, and the hedge fund is pretty much just a bunch of people with a lot of money coming together investing, and they buy. Okay. And markup is going to be letting you know that there's a visible trend. Okay. And professional selling as well too. distribution coming into play. Okay, is market going in a downtrend? That's all it is distributing going on. Okay, and accumulation is just a bunch of buying, people loading up on shares, cryptocurrency, whatever. Okay, and the markup. So as far as certain things, you can wait for pullbacks, wait for support to confirm, and you could see breakouts, such as breakouts into new all-time highs, to confirm the markup phase. Okay, a lot of the time that's going to be where the easy money lives, and risk is going to be the lowest. Okay, so if market is continuously breaking areas of resistances, okay, you can wait for market to pull back and buy each pullback until market comes back to the area of resistance. And you can continue to hold your contracts for a breakout if possible too, because you have to understand that market, in order to continue in an uptrend, for example, has to break areas of resistances above current price or areas of support above current price. Okay, let's head over to the next slide. So the anatomy of an uptrend. So higher highs plus higher lows equals a trend. So higher highs equals exactly what I talked about on the last slide. Areas of resistances, which is just going to be areas where market decided to sell off at. That's all an area of resistance is. And then you're going to have areas of support, which is going to be areas where market decides to buy at. And that's going to be where buyers are stepping in it. Yeah. So sellers resistance, buying at areas of support. And you see higher highs, which means areas of resistances are getting broken into higher areas of resistances. Okay. See these areas of resistances, see how each one of these are higher, and then you're going to have the higher low. So look at this low, this area of support where buyers are stepped in. Then this low, buyers have stepped in. And this low. This low is higher than this low. This low is higher than this low. This low is higher than this low. Okay, so whenever you see higher lows getting put in and higher highs getting put in, then you know price is trending in upwards direction, inshallah. So certain things matter. Resistances getting broken out into new highs and higher lows being maintained, so price doesn't keep dumping down to the same areas of support over and over again. So it can actually trend in a staircase. So identify the last higher low. Higher lows are going to be good areas to enter, and that's going to be a really good pullback entry. And some people do find success in breakouts as well too. Find your bread and butter, find what you like to play, and play that. And as long as that low holds, then the trend is going to go ahead and be intact. And risk versus reward. So you might see certain things like on the risk reward tool, like 1 to 4, or you might hear terms like 1 to 2. So what this means is, let's say the 1, let's say you're risking $100. So if you're risking $100, then the 4 is going to be a multiple of that. So that means you made $400. So if your risk is $100, you made $400, your overall profit would be $300. Okay. So you always want to try and make double at least whatever you're risking. Okay. So if you're risking $50, try and at least make 100. If you're risking 70, try and make at least 140. Okay, if you're risking 1,000, try and at least make 2,000. And that's going to be a 1 to 2 whenever you're just catching the double multiple like that. And the strategy is only as good as the exit. So remember, as higher lows and higher highs are getting put into place, let's say you are trading in an uptrend. Let's say you caught a higher low entry, such as right here. You want to make sure you're closing at the area of resistance, most of your contracts at least. Okay, and then if you want to play a breakout, let's say you have 3 contracts, then maybe hold 1 contract for a breakout and see if price will continue. Okay, but don't be greedy and take profit. Target the next major horizontal resistance or area of support above current price, and that's going to be a trouble area where a lot of orders are going to be sitting. Okay, people are going to have what's called limit orders and bracket orders, which are automatic orders. When price comes in contact with a certain area, either price is going to sell or buy, because people know price is waiting to react at that certain heavy area. So if market falls down heavily from a certain place, people might have limit orders placed at that area of resistance if they're in buys, so price will automatically close. Or some people, which you
depending on the market, could affect you. Could be good and sometimes not. Some people might have sell orders at the area of resistance too, expecting price to fall downwards. Okay. And structural protection. So your stop loss. It's an invalidation point. Okay. And if price hits it, your thesis was wrong. Accept it and move on to the next trade. Don't break your account structure and everything you've been working hard for because you want to have an emotional moment. It's not worth it, I'm telling you. Okay. Stay focused, stay disciplined, and stay prayed up to God, and just keep working on your craft. Don't give up. It's really important to not give up. Okay, let's do it. Indicators. Just trash. Okay. All of them. All of them, in my opinion, are trash. Okay. Everything you need to see is baked into the candlestick chart, which I'm going to cover right after we get over these slides. Okay. But all these RSI, MACD, stochastics, EMAs, barf. Okay. Trash can. And we take the indicators and we put them into the trash can. That's what we do. Okay. We grab the indicators. You get on your trading view. You get on your broker. You click the trash can on them. And you delete them. Everything you need is baked into the chart. Why are you looking at lagging indicators? It's not worth it. They tell you what already happened. Just look at the chart. Look at the chart and look at your higher time frames. Stay prayed to God and focus on your wisdom. Focus on how you're analyzing the charts. Focus on how you're feeling the charts. Okay. So the lag. Late data is going to kill your edge because you're relying on something that's already in your face. So stop it. A lot of people do that in life. A lot of people look instead of just doing and reacting. And it can cause analysis paralysis. Clutter clouds judgment. Instead of just being confident in the candlestick chart analysis mixed in with the economics with whatever you're playing, you're waiting for an indicator. Stop it. I used to be there. It's not worth it, I'm telling you. So, naked charts. Okay, just straight up candlestick charts, all you need. Indicators suggest reversal, and price action proves it. Stick to the source data. Stick to the actual candlesticks that are moving in your face, not lines that react off of the candlesticks later. Please don't do that. Don't destroy your account like that. Don't destroy your future's family profit like that. You got this. You're the breadwinner. You can't fail. Okay? And if you do, get up, scrape your knees off, and pray to God and keep winning. Don't let these indicators hold you back. Let's go. Simplicity wins. I'm going to show you guys how to read the chart with just candlesticks. No indicators, no squiggly lines on the candlestick chart. It's not making sense. Turn it off. Turn everything off. Okay, trade price, not the derivative. Follow institutional footprints. You can see it all. A lot of it's going to be baked into the higher time frames. Okay, stick to your weekly, daily, your 4 hour, okay, and lowest maybe your 1 hour. Okay, stick to your higher time frames. It's really going to help you get that good edge and break everything down strategically. Remove the clutter, use your higher time frames, and use horizontal lines. Let's go ahead, continue on to the charts. So we're on the charts with it. Let's go ahead and analyze Bitcoin. So I'm going to show you guys two examples. I'm going to show you guys how to read an uptrend. And then after this, I'm going to show you guys how to read the downtrend. So a lot of the times the United States markets and cryptocurrency are meant to go in upwards directions. So US stock markets are meant to go in upwards directions due to the fact that the more successful that these worldwide companies are, the more taxes they're going to be able to pay to the US government, whether via business taxes or the more employees they're going to be able to hire since their company's on the stock market. And the whole reason companies list themselves on the stock market is so they can generate more income, which causes them to build more buildings, which needs more people to maintain. The more people, which means more taxes can be taken out of their wages, the richer that the US government gets. So it's really imperative that US stocks go up year after year after year, especially the big important ones that help the whole world. And cryptocurrency is meant to go in an upwards direction because the creators of them, especially Bitcoin, is going to be finite, which means that there's a limited amount. Okay, so people are trying to buy it up, and there's a lot of imperative value to owning cryptocurrency and buying and holding. So let's talk about how to read the uptrend.
So a lot of the times you want to be starting on your higher time frames first. Make sure you're not trading when price is already at all-time highs, okay? Because then you're just going to go ahead and get pulled back on. It's not worth it. You don't want to get pulled back on. It can really, really just destroy your account buying at all-time highs. Buying after all the hype is done, you want to buy at pullback areas and then catch the sweep upwards, okay, back to the area of resistance above current price. Okay, so I'm going to go ahead and show you guys how to analyze the trend. So I'd like to go ahead and zoom all the way from the beginning. I don't like trading trash personally. I like to make sure I'm trading a trending asset. And I like to ask myself, does this asset go up year over year? Okay. If it doesn't go up year over year, I'm not even worried about the uptrend. I'm worried about if I'm trading something decent or not. Okay. Bitcoin, for example, I can see has gone up year after year after year after year after year. Okay. So in my opinion, this is going to be a good asset for me to trade and catch an uptrend on. If it doesn't go up year after year after year, if it's sideways, like if price action was like this, and then this, and then this, and then this, and then price was over here today, it's not something I'll be looking forward to uptrending on personally. Okay, but I could see price starts from here and decides to progress over time. And I like that a lot. Okay, I can see a lot of upwards projection value in this since year after year data is showing me that it likes to uptrend. So I can see price decides to burst up. So we started here from the beginning of time. Price came up and it bursted up here. So buying started happening. So when you start seeing price heading up in an upwards direction, multiple green candlesticks, a lot of times is what I like to look for. Multiple green candlesticks on my higher time frames in a row. Okay, it's going to signal a lot of the buying. Okay, a lot of buying happening here. The price decided to top out right here. And then it fell down. Price decided to fall down and create an area of support. So let me go ahead and show you guys here. When price decides to fall down from an area, that's going to be called an area of resistance. And when price decides to bounce upward from an area, that's going to be called an area of support. Okay, resistance is going to be an area where price falls down from. Support is an area where price decides to bounce upward from. Okay. Then we could see this area of support. Price decides to bounce in an upwards direction here. Price decides to bounce up and stop again. So whenever I'm looking at an uptrend, I like to think of price moving in a V. V meaning that the top left of the V is going to signal the resistance. Okay. And the bottom of the V
power off
is going to go ahead and signal the area of support. So I'm going to have the left side of the V, which is going to signal area of resistance. And the bottom of the V is going to signal the area of support. Our goal, if we're catching an uptrend, is to catch the right side of the V. So on my higher time frames, I like to wait for price to make an area of support first. And if I get multiple green candlesticks heading in an upwards direction after price has already fell down, because that's going to let me know that sellers are selling. And then if I see price making a bottom and then buyers start buying, that's going to let me know that price is done selling and buyers have stepped in. Okay, price is not going to sell forever. And there's also going to be a lot of laws, especially on the stock market, such as the short sale restriction, which prevents a lot of things from just flash crashing to zero. So you can see here, price decided to create resistance all the way from here. And price decided to fill in and even break the area of resistance right here. Okay. And price decided to make a new high from here. Price decided to come up here and make an area of resistance up here. From there, price decided to make the left side of the V again, come down, bottom out, and make the bottom of the V. Right here. And then we see multiple green candlesticks going up in a row on the higher time frames, and the right side of the V being filled. Okay, we got the left side of the V, bottom, and then our job is to catch the right side of the V. Okay, so the later you enter on the V, let's say you enter like right here where that black line is, the later you enter in the V, the more confirmed. The earlier you enter, the more profit you're going to be able to make, but more of a chance that you could potentially get burned. So it's going to be depending on the certain setups you take. So if you would enter like right here on the black line, and if you're trying to close at this area of resistance, it's like not a lot of money left. But if you enter like right here, like that would be fine, or even right here, that would be fine too. Try and enter like halfway of the V, and then go ahead and close at the resistance. Okay. And then you can see price decided to make a low right here. Price decided to come back up to the resistance. Didn't quite break it. It said, nope, gonna go ahead and reject again. We came down. And then we bounced at this low here. So this low is higher than this low. And then this low is higher than this low. Then we can see the V right here being filled in. Again, just like the V here filled in, V here filled in. Okay, and price will continuously do that. And you can also use your daily time frame to go ahead and plot out trades too. So even if I delete something here, and I just see this trend, I have the bottom area of support right here. We got another area of support right here. Then we got another one right here too, the C being generated. Price making higher lows. Price is making higher lows. See price uptrending. Yeah, it's going to be a really, really important thing to look at. And you can see these V structures being filled in. So top left of the V, price started here, area of resistance was formed, price came down, bottomed out. Then the right side of the V got formed, resistance area got broke, price came down, did the same thing again. Price bursted up towards this area of resistance here. Came all the way down, made this area of support, and did the same thing once again. Okay, could see price deciding to progress over and over again. Okay, and we're coming down here. Looks like it's trying to hold a new low, and we could potentially see over time if this low will remain higher than this low here. Okay, and if so, that's going to be another verified area of support. I like the multiple green candlesticks here on the daily. On the weekly here, we do have some sideways weekly candlesticks that are green. So we'll see about another week here too. Okay. So higher lows and higher highs are going to be something to look at whenever you're reading your uptrend. Let's over to the downtrend. All right, let's go ahead and talk about analyzing the downtrend. So when you're analyzing a downtrend, you want to be looking for lower lows and lower highs. Okay, so let's go ahead and let's talk about it. So let's say price decided to super top out right here. You know, it had a good run. It's been uptrending for a while, but since then, it's been trying to head down to the graveyard. So let's analyze and break down how you can catch trades when price is heading in a downward cycle. So you can see price here created an ultimate area of resistance. And resistance is just going to be an ultimate area where sellers are coming in. Okay, sellers are coming in to this area since price is falling down. Then you're going to have price making bottoms. Okay. Once again, that's going to go ahead and be areas of support. Support is going to be an area where buyers are going to be stepping in. Okay, you're going to have support and then you're going to have resistance. They both correlate. And the cool thing about them is resistance sometimes can be broken and turn into support. And a lot of times support can be broken and turn into resistance, just as resistance can mirror another area of resistance, even if price decided to previously break it. Say, for example, price decided to create an area of resistance here. Price broke it, came down. Price could still come up and short at that resistance again. Same thing with an area of support. Price decided to come up, break below the support. Price could come above the support and pull back at the same support again. Okay, price is very reflective over what happened in the past. Okay. So let's go and let's keep analyzing. So you're going to have the area of resistance where price decides to fall downwards from. And then you're going to have the area of support where price decides to bounce in an upwards direction from. Okay. Both important areas to look at. So resistance, just like I said, can sometimes be broken and turn into support. Support can sometimes be broken and turn into resistance. Okay. Keep all that in mind. And put it all together on the charts. So a lot of times when I'm downtrend shorting, I'm looking for two things. I'm either waiting for an area of resistance. I don't even care if it's in the past, to meet up with an area of resistance, and I'm taking it again. Okay. Or I'm going to wait for an area of support to be broken and turn into resistance. Okay. So let's find an example here. So let's say price decided to make this area of support right here. Could see price decided to make this mini bounce after a heavy downtrend from a while. Okay. After that, price decided to hunt back up to this area. So look at this support zone right here. Price decided to bounce up for a little bit here. Okay. To this area of resistance here. Okay. And even this area of resistance right here. All right. Sometimes you'll be able to look to the left and be like, okay, I see why resistance was created here. Okay. So for instance, if I drag it all the way over here, we can look to the left and we could try and piece things together and see, okay, was there any price action that reflected? So I could see this area of resistance here. And if I zoom in close, I could see another area of resistance right here. Okay, so stuff doesn't just happen for no reason. You could see the two areas of resistance. Both cause price to fall downwards for a while. Okay, very, very reactive market. So stuff even from years, months ago, okay, could be reactive. And even right here, price decided to create support. Price broke it and turned it into resistance. Support right here got broken, turned it into resistance, and then price headed in a downtrend. That's going to be one of my favorite ways to downtrend. Is going to be waiting for support to get broken and then waiting for price to run back up to it and turn it into resistance. A lot of the times, if you see that, it's going to be a really, really good short or a good time to short. And even if you see two areas of resistances meeting up with each other, it's going to be a good area to short at as well, too, a lot of the times. Okay, but be careful with that, especially during uptrends. You don't want to get caught trying to short something that's not meant to be shorted. That's in a clear uptrend because you're just hunting for something. Okay, so that's why I like to wait for support to get broken and turn into resistance cleanly, whether it be it on my daily. A lot of the times I'm gonna wait for it on my daily because that's gonna give me the cleanest structure and what I'm actually looking for, making sure it's confirmed, because I don't want to be taking any type of nonsense trades. Okay, you don't want to be wasting your funds. You don't want to be wasting your time. You want to try and take the trades you know are going to be making you good money. Okay, and waiting for confirmation is also going to be really, really important too. So just as you're waiting for, let's say, an uptrend, I like to wait for 2 to 6 daily candlesticks going in an upwards direction to the right. If I'm waiting for a downtrend, I'll wait for 2 to 6 red candlesticks going down just to make sure. Okay, I don't buy the first immediate reaction a lot of times because I don't know if it's going to be completely true. So let me go ahead and pull up an example here on natural gas. Okay. So even here on natural gas, we can see price farming this downtrend here extremely heavily. Okay. And certain trades can be found by just being patient, okay, analyzing the market, and really just taking your time. So even right here, take this area of support. That was very important. I like to look at very important areas of support, especially on my higher time frames. You can see price decided to break below it. We could see a daily wick right here. After that, I got one red candlestick, 2, 3, and then we got price heading in a downwards direction, okay, from there. Okay, and you could have did take profit at like this support here, or even this support right here. Okay, and caught that good trade down. Could enter down here, take profit here, and that would give you about a 1 to 2. Yeah. So taking your time with the setups and analyzing everything, it's really going to be important. And when you're downtrending, a lot of the times your take profit is going to be either an area of support above current price or below current price, now above an area of support below current price, or an area of resistance below current price too. Because just like I talked about, resistance can turn into support. So when you're shorting, your take profit can either be resistance or support. Same thing if you're uptrending too. So yeah. So say here, price decided to create a little buy zone right here. Price bounced in the same area 3 different times. Price broke it, and then price hunted all the way up to it, shorted, and then gave us 1 red candlestick, 2, 3. I like that a lot. You could have did take profit at like this support right here, and you could have went ahead and caught your trade. Okay. Boom. Could even take profit down here. And then the amount of days this would have took, you can use a rule tool on trading view. You can start on the resistance, drag it to the support. It took about 90 days, but that would have been a real account flipper. Okay. A lot of the times it's not about getting a trade over and over and over and over again. It's about just taking a couple of good trades. Okay, a month, a week, or even a year sometimes. Even if you did it right here, this resistance to the support took about 14 days. So if you did a smaller take profit, it would take less time. So yeah, so cool. That's gonna go ahead and be that. Stay praying to God, keep grinding. Catch you guys in the next one. And I pray this helped. Head over to stackmode.net for all trading education. Peace.
Let's master technical analysis the easy way. Charts isn't going to be that difficult, and once you learn how to run chart, you know how to read everything. So I'm going to give you guys the best sauce and the best strategies in order to read this chart and make the crypto markets pretty simple to trade. So 1, starting off on the main thing, you're going to be needing to use your higher time frames. So your time frame is going to depict on the amount of candlesticks and how much candlestick price action you're seeing. So if I'm on the daily time frame, for example, each one of these candlesticks will represent 1 day worth of price action. Okay. If I'm on the 4-hour time frame, each one of the candlesticks will represent 4 hours worth of price action. If I'm on the 1 minute, each one of these candlesticks will then represent 1 minute worth of price action. The reason why we're using a higher time frames is because we want to be seeing the overall trend on the higher time frame scale. Okay, so year after year, and you have to understand that everything from the left that happens on the chart reacts with what we see to the right today. So everything correlates, everything works together, and we're going to be able to mash it all together. Okay, so now that we know that information, if we use our daily levels, okay, and we put the levels from the left to the right, we can go ahead and put out some trades. Okay, so let's talk to you about some different models, some different stuff I'm going to talk about, and how we're going to be able to introduce them into making profitable trades on the chart. So areas of resistance. Okay, so when you see me mark areas of resistance, it's going to be an area where sellers are going to come in from. Okay, understand that the chart is a left to right chart. Okay, so price action let's say price action started all the way over here. People are going to take profit eventually. People are going to want to make their money. They're going to want to sell. Okay, so whenever you see price have periods where price dips down after making a high, that's going to be called an area of resistance. Okay, so resistance is going to be an important key factor to knowing where, okay, this is where sellers came in. Okay, so opposite of resistance, there's going to be support. Support is going to be an area where price decides to bounce in an upwards direction from. Okay, so this is going to indicate an area where buyers step in. Okay, so buyers are going to be trying to buy here, so then price can go up in an upwards direction from here. Okay, buying is stepping in since price is going in an upwards direction. Okay, and then when you see price making sharp downturns, that's going to go ahead and signal an area of resistance. Okay, so both of these things are going to be extremely important to go ahead and keep note of. Okay, so resistance has to be broken in order for price to progress in an upwards direction. Okay, so we know the goal of the cryptocurrency market a lot of the times is for cryptocurrencies to go up in price. Okay, so people are trying to gain APY, annual percentage yield, percentages on their dollar. Okay, I know I definitely am. Okay, by buying and holding and investing in something with value. Okay, so when you do that, you're going to be able to progress a lot faster, inshallah. So noting that, we can determine that, okay, the goal of cryptocurrencies is to go up in a certain value. Okay, so if price starts at $100 one year, maybe the next year, price might head over to $10,000. Okay, so let's go and let's check out the chart, for example. So if I check out Bitcoin, I can check price is currently at 113,104 as of right now, today. Okay, so price is all the way up here. If I check 2 years ago or 3 years ago, I can see price all the way down here near the 15,000s area. Okay, so price is at 15,000 all the way down here. Okay, and price is now at 113,000 in just 3 years. Okay, price has increased that much value exponentially within an upwards direction. Okay, so now that we know that, okay, the goal of the tokens and cryptocurrencies are to go up over time, we can go ahead and put that and plot out some really solid, good trades. Okay, so let's go and let's check it out. So back to the drawings here before we jump into the chart. Areas of resistance, once again, have to be passed in order for price to progress with an upwards direction. So resistances have to be broken and turn into support. And then price can go ahead and blast up in an upwards direction. Okay, so once again, resistance can be broken and turn into support. It's not going to happen every time, but when it does happen, that's going to be a really good solid way in order to play a pullback. So let's say price is currently above and it goes back down to an area of resistance, it can turn it into support. Okay, so then price can go ahead and sweep up and you're going to be able to buy a low at the right time. Okay, or you're going to see price decide to bounce at an area of support twice. Okay, so if price decides to hold an area of support twice, then that's also going to be a valid way in order to determine, okay, you know what, price wants to head up in an upwards direction. Okay, so it really just determines on what you're looking at, okay, and the certain type of trades. Okay, so even if price is still going up here, price makes an area of resistance right here, if it comes down, turns resistance into support, I'll go ahead and swoop up and show up. Let me show you an example of this on Bitcoin. So I'm on the daily time frame here. I'm gonna go ahead and zoom in. So I can see price decides to create an area of resistance here. Okay, the major area of resistance that there's always gonna be is all-time highs. Okay, so all-time highs, also known as ATH, it's gonna be when price is at the highest. Okay, it can't go any further. Okay, and this is the furthest price that it's at. Okay, so it's when the highest area of resistance is created. Okay, and price is trying to break it in order to continue further. Okay, so check this area out here. So check out this area of resistance here. We'll go ahead and zoom in. So you can see that this is an area of resistance due to the fact that price wants to fall in a downwards direction, okay, from this area. So price decided to meet up with the top of this candlestick here and fall within a downwards direction. Okay, price went all the way up from this low. Okay, went all the way up from this low. Okay, 2 candlesticks bounce at the areas of support on the daily. Okay, 2 separate days. Price decided to bounce all the way up, stop here. Okay, once it stopped here, this price decided to get broken over here. Okay, so an area of resistance isn't going to keep getting tapped over and over again a lot of the times. Eventually, price is going to attempt to break the area of resistance, turn it into support. Okay, and then price is going to try and head up in an upwards direction. Or price is just going to break the area of resistance and just break out. Okay, and just head up in an upwards direction. Or price is going to head in the breakouts direction. Okay, it'll happen. It'll break out a tiny bit and then pull back all the way down. Okay, that's going to be called a fake out. Okay, in order to avoid fake outs, for breakouts, you're going to play break and retest. Okay, a lot of times break and retest, you're not really going to get faked out. Okay, especially if you wait for your 4-hour close, which is when you're waiting for the time that you can see over here to the right. Okay, to finish. So let's say we entered at this black line. I would not enter at this candle here because it's in between the black line. And I would not enter any candle that tests the black line. I would enter at a candle up here, okay, above the black line. So this way, if price decides to burst down below the black line, I'm not going to be upset that I lost. Okay, I'm going to go ahead and just take the closed candlestick, okay, and take the trade this way. This way I know that, okay, you know what, price might want to go ahead and sweep up. Okay, so the earliest entry might not always be the cleanest time to buy a lot of times. Sometimes it's better to just trade the confirm entry, okay, and just wait. So this right here would go ahead and be a good example, okay, of a close that I'd be waiting for. Okay, and then my take profits, I'm going to go ahead and set it for either all-time highs, depending on what I'm playing. If I'm playing cryptocurrency or shares, I'm playing for all-time highs. Buying at dips, and I'm playing for all-time highs. Okay, I'm going to be waiting for price to sweep all the way up, okay, and to do its thing. Okay, so you're just waiting for price to do its thing. Okay, and once again, areas of resistance like these up here, okay, are going to be your take profits. If you're playing along and you're waiting for price to go up, okay, your areas of resistance are going to be your take profit. So up here is an area of resistance. Okay, up here is an area of resistance. Okay, and both of these areas of resistance are going to go ahead and be able to be played. Okay, so make technical analysis simple when it comes to trading cryptocurrency. So I pray up to God. Keep grinding. And head over to Stackmode.net for all trading education. Peace.
Future trading can be a little tricky if you let it be. You only want to buy when buyers are buying. Try not to ever buy when sellers are selling. In this video, I'm going to teach you guys exactly how to trade pullbacks and how to buy when the buyers are buying and what to identify and look for. Let's go and let's jump into it, inshallah. All right, so here's going to be buying at the right time. You want to buy after sellers are done selling. So sellers need to sell first, and you want to buy when buyers are buying. If you buy when sellers are selling, you're going to go ahead and just get destroyed. Okay, if you're looking to buy at the right time, we have to wait for pullback. We have to wait for price to form an area of support. Okay, so playing pullbacks is going to be really, really important. And here's going to be the things we have to look at. Okay, one, you need to make sure that you're trading in a trending market. So if we're going to trade pullbacks, which is just price coming down, lower, and then going back up. That's all it is. So if price goes up, comes down, and then goes back up, that's a pullback. So you want to get on your weekly time frame ideally, or be on your higher time frames, such as your weekly, daily, or your monthly. And then we need to analyze the full chart. So I'm going to start off on my weekly here and get the full bird's eye view of absolutely everything. So I can see here on my weekly that price decides to trend upwards year after year after year after year, no matter what. Okay. We're still ending up at new all-time highs, regardless of how many dips that it's made. Now, the way that price works within a staircase manner. And in order for price to progress, it has to make higher
lows. So that means that the new low that price just made is going to go ahead and be higher than the previous low that it made. If that's happening, then that means price is trending within an upwards direction. Okay. And you need to buy when price makes these areas of supports, also known as the higher lows. Okay. So I'm going to break down how we can time and what we're looking for. So you want to buy when market is down, so then you can profit on the sweep up. Once again, buy when market is down, so you can profit on the sweep up. So in order to do that, you have to be trading something that's trending in an upwards direction anyways. Okay, so get on your higher time frame, start off on your weekly, and look at absolutely everything. So my weekly here, I can peep. We have this low starting from 2020. Okay, and I could see here, we have not stepped back here since. And I'm on my weekly here. So I can start marking from the bottom of this low. And I'm going to go through and mark all the higher lows up until current price, just to show you that price is trending. So I can start seeing price trending in the upwards direction after it hit this 21,000 area here. Then price bounced super duper heavy. Okay, made another higher low here near this 26,000 area. Price came up, topped out right here. Okay, when price tops out, all it is making the left side of the V. Then once price makes support, it's making the bottom of the V. Our job is to catch the right side of the V. So even right here, you can see price come up, top out at this area, and then come down. After it come down, stopped right here, then bottomed up. Okay, price stopped up here. Price came down, and then bounced up, stopped right here, came down. Okay, so this is going to be a whole area in itself. Got price coming up here. Looks like price stopped towards this top, bottomed out right here, and then kept going. Right here, came up, stopped at this red candlestick, pulled down, made a low right here. Stopped up here, pulled down, made a new low right here. Okay, then over here, price decided to get underneath the lows. Okay, made a higher low right here. So even though we fell all the way down right here, it's still higher than this low right here. Okay, so that's good. So this higher low is still valid. Price was deciding to come in the cut here. Decided to bounce up the same area twice. We just still see price just trending, doing its thing. Try to make a low here. Kept trending up, kept trending up. Price came down. Okay. And this low is still higher than this low here. So we're still in an uptrend, regardless of how hard we're dipping. We're still in an overall uptrend. This low right here. This low right here. Low right here. We can see price heading in upwards direction. Okay. Now, what is price hunting? Price is hunting these areas here. These areas of resistance. These are going to be the areas that price are hunting. Price can't make new all-time highs unless price breaks previous areas of resistances. So after market decides to pull back, okay, your take profit, ideally a lot of the times, is going to be an area of resistance above current price or an area of support above current price. So you want to wait for price to pull back, wait for sellers to stop selling. And once you've identified sellers have stopped selling, which you'll see, and a good indicator to know that sellers have stopped selling is going to be on either your daily or your 4-hour candlestick. After you see a candlestick make an abrupt stop on your daily and 4-hour, pay attention to the next candlesticks. If you're looking for a long trade, if price action decides to randomly stop in the bottom, and then you start seeing multiple green candlesticks going in upwards direction, then you know buyers are going to be buying. And ideally, you're going to be looking for around 2 to 6 daily or 4-hour candlesticks after an area of support was created.
If you see 2 to 6 daily or 4-hour candlesticks going in an upwards direction after it makes an area of support, then that's how you know it's going to be true. Okay, and you want to be looking on your daily or your 4-hour. And you're going to be looking for 2 to 6. So even take this low right here, for example. Price decided to make this super low right here. Okay, and so here's the super cool thing. Market does all the work for you. You don't got to do too much. You just got to chill. Be patient. Okay. Pray to God and just live your life. So boom. Market made the left side of the V for us right here. Market came down. Sellers were selling. Boom. Made an abrupt stop. Okay. And here's how you know if it's true. The candlesticks afterward were multiple green candlesticks. So after that abrupt stop, I have 1, 2, 3, 4. Okay. So that went 4 green candlesticks on my 4-hour here. Okay. And then even on my daily, I would have had 2 green candlesticks at the bottom, and then I had 1, and then I could have entered on this candlestick here and caught the rest of the resistance fill. So let market make the left side of the V. Let market make the bottom of the V. And you could see if the bottom of the V is real, knowing and seeing what candlestick come afterward. Okay, take this example. You see price trending in a higher low scenario here. You see this low right here. Okay, price bottomed out. I'm on my daily candlestick right here. Okay, I'm on my daily. After it bottomed out right here, I'm looking for 2 to 6 candlesticks, either on my daily or my 4-hour. So I can see price made the left side of the V up here. It's about patience. It's really about patience. Market decided to come up, top out right here, and then fell all the way down right here. This is how I know that the bottom is real. Okay, I paid attention to the candlesticks afterward. Okay, so after this bottom got created here and sellers were done selling, you could see 1, 2, 3, 4. Okay, 4 candlesticks. And as soon as we got to like this upwards direction, I would have liked that. So I probably would have entered around like right here. Stop loss below the daily candlestick supports. And then take profit at previous resistance from where price decided to fall down from. Okay. Because I could see price already made the ultimate support, and all I did was catch the higher low entry. So let's go and let's do a fresh example here and see if I could find the setup. So I'm going to pull up the micro Bitcoin. Let me analyze from start to finish. So I'm going to get on my weekly time frame here. Okay, great looking thing I'm looking at here, because we're not at all-time highs. So that's why it's a great looking thing. If you're at all-time highs, you can't long. Okay, you cannot long at all-time highs. Don't do it. Okay, because price always wants to be chasing an area of resistance above current price. That's going to give a reason for buyers to step in. If there's no resistance above current price, there's no reasons for buyers to step in. So only play pullbacks, okay, because then you're going to be buying when buyers step in. It's going to be extremely, extremely simple. So buy after sellers have sold. So I can see here from all-time highs, heavy aggressive selling has been coming into place these last couple of weeks. Okay, extreme selling to the downside. We met up near this area of support here. Okay, met up near this area of support here, and we're gonna go ahead and see what this is gonna entail. So on my weekly here, we have a red candlestick. Get on my daily here. So on my daily here, start seeing price try to curl up, but it's a lot of mixed match candlesticks. A lot of green, red, green, red, green, red, not the same color. Okay, if these were just straight green candlesticks for the most part, heading in upwards direction, then it'd be a lot more definitive. But in this case here, it's very, very spotty, not direct big candles. Right after like this low, for example, okay, heavy green candles, 1, 2, 3, 4 heavy green candles. Even after this one, kind of, we had a heavy green candle here, had to run one. But then after this higher low, straight green candles. This one here, we hit this low, and then a green candle, then a red candle.
a green candle, and then kind of a doji, and then a red candle. So this one, I don't believe is fully ready yet. We could see this could be a higher low in the formation. And then we could see if maybe this low wants to hold or something. This low right here. Price seems to be trying to find itself some support here. Okay. So this is why we scale down to our smaller time frames, just to see things a little closer. So we're going to go ahead and have this. We have this super low here. We got a higher low than that. So as you can see from this higher low, the V did get filled in from right here. So that's really good. So we'll see about this V. All right, because we're looking for a setup right now. So on the 4 hour here, I see price. I actually like this a lot, honestly. Even if I don't take it to all the way up there, this area of resistance will be fine. Same thing with this area here. Okay. Even if I wanted to just take it to this one up here, that'd be fine. So I like this a lot, actually. This is what I've analyzed. Is price making higher lows recently? Yes. Bottom, up, pause, down. Okay, and the pause that it made down is higher than the previous pause. So this high is higher than this low. Higher lows mean staircase trending in upwards direction. Okay, and we're buying after sellers sold. We're buying after all-time highs dump. So I like this a lot. Okay, I see higher lows being in place, and I think this is a new low being in place. Why? Because I have one area of support here. And guess what? I also have a whole nother candlestick. It has me so excited right now. Boom. Whole nother candlestick. Boom. And I'm on my 4 hour here. Here we have 1, 2, 3, 4. 4 green candles headed in an upwards direction. So get on my daily here. I could wait for one more daily candlestick to be green. Like if this daily candlestick closes green, then I would feel comfortable for sure taking it up to maybe like at least this resistance up here. Honestly, I won't be scary. Play big, take profits. I would at least take it up to this resistance up here for sure. So I need at least one more. I'm gonna be patient though. Patience is everything. Don't just get in and be like, oh, higher lows, because sometimes your lower time frames could be your worst enemy. So on my 4 hour, do I like it? Yes, but we don't tunnel vision. You know what I'm saying? We need the real thing in life. So boom, have this super low being made, higher low being made, and then another higher low being made. Okay, so I have 4 green candlesticks on the 4 hour. I like it a lot. Okay, I'm gonna decide I'm gonna close all the way up here at these 2 areas of resistances. Right here. This is where I want to close. Okay, this is the strong area of resistance. You see how price marked it and hit it twice? Definitely not for no reason. So strong area of resistance, price has beef with. So what I'm gonna go ahead and do is, you can either do this too, but yeah, you can analyze your higher lows, and I can get on my 15-minute here. Four hour. Okay, so either going to be looking for like a tiny little 4 hour wick. Okay, because right now the 4 hour candlestick is red. So right now selling is in place. Okay, so I only want to buy when it's buying. Okay, so right now it's making a little mini V. So I believe this is the top of the V right here that it's making with these 2 resistances. Let's get on to the 15-minute. You see these 2? Okay. So you want to remember, you do not want to buy when price is selling. So you would not buy right now on the 15-minute and the 4 hour. Price is heading in a downwards direction. But overall, we're in an uptrend. Okay, but you want to be buying at the right time, though, is the thing. You want to be buying at the right time. So right now, sellers are in place, but overall, buyers are in place. Okay, so to get that specific entry, you can scale down to your 15-minute, be like, okay, I could see these 2 areas of resistances. That's why price is falling down. Once you start seeing green candlesticks, or once you start seeing a green candlestick on your 4 hour or your 15-minute, then a lot of times that's how you know buying will be ready. But right now it's falling down from an area of resistance. I need to wait for these, this candlestick to go from red to green to show me that buying is real again. Okay, I do not want to buy when selling is occurring if I'm trying to buy a pullback. That's just not what I want to do. It's not what you're going to be looking for. It's called a pullback for a reason, because you're expecting it to go back up and it's just pulling down for a second. So right here, sellers are in place. Red candlestick, price is heading down even on the 15-minute. Okay, now if I'm on my 4-hour and I get a red to green candlestick, then I would feel a lot more comfortable with going ahead and to enter. Because price might want to honestly fall down a little bit lower. I could get a little bit lower entry and save myself on some drawdown. But if this red candlestick were to go from red to green, that means buyers were to go ahead and be in place. And then from there, I should be able to go ahead and you can have your target all the way up there, for example. And then, you could do your stop loss under here. And this would be, give me about a 1 to 3. Okay. So this would be about a 1 to 3 here. Extremely profitable trade. Really nice trade. So catching your setups is about taking your time, really. It's about just seeing what you need to see. So I'll do one more setup here. So I hit on my weekly. Not mark at all-time highs, because this is going to be the most obvious place that we've recently fell from. So I'm on my weekly. Okay, not quite all-time highs. It's going to be over here. It's exactly what we get on the weekly. You want to zoom all the way out, see all the price action you can. That's going to be all-time highs. Then from there, I'm going to go ahead and put a line down at this new area of resistance here. Okay, the area of resistance where we're recently falling down from. I could see price making higher lows. Price has a super low here. And I could see higher lows being put in over time, which means that we are headed in a upwards direction. Okay, we're trying to get up here to all-time highs. So this is what I analyze here on my weekly. So on my weekly right here, the current candlestick is red. So we would not be buying right now. Okay, we would not be buying right now because we're currently selling at the moment. So we want to see if there's any reason why. Yep, I can see exactly why we are selling. So try and analyze why price is doing it, what it's doing. It's the price doesn't just do stuff randomly a lot of the times. As you can see on the weekly, I have this area of resistance here. You'll be able to see it a little clearly on the daily. This area of resistance is linked to this new area of resistance that just got created. So that's why price is falling in a downwards direction, logically. Now let me head over to my daily here. You're going to be able to see the curl a little bit closer here on the daily. Okay, price at the area of resistance that it matched with over here. Okay, price did some break and retest. Price came down and then wicked back up to the specific black line and then tanked down. Okay, so this is a very nice area of resistance that price likes. So we need to get back to this area though. So now this is so simple. It's the easiest way to play pullbacks. Just wait for sellers to sell first. So you can see that's why sellers are selling. Price at an area of resistance. So right now sellers are selling straight red candlesticks on my daily time frame with it right now. I'm waiting for price to bottom out. Okay, and this is the easiest way to not get faked out. So people got faked out on this candlestick, for example. And let me head over my 4-hour. Okay, so this candlestick right here, people bought this. The price decided to wake up and people probably thought they caught the ultimate bottom. You never want to try and catch the ultimate. Okay, you want to catch the higher low entry. So check it out by staircase. You see how this low is here? And then you have this low. Then you have this low. If I zoom in, I have this low. This low. This low. This one. Okay. So we could see price dumping in and making each of the higher lows. We'll go ahead and start it from all the way over here. Got price all the way down here. Support. Higher low. Another higher low. Price continues to just go in an upwards direction. Okay, we got these areas of support here. Mixed with this one. Mixed with this. Trending. All we're doing is buying the bottom higher low entry. Exactly, yes sir. That's all we got to do. Just buy the bottom entry. You see how these two supports over here are correlated with each other? Very, very cool. Let's check this out. Check out this higher low right here with the recent higher low that we just did. And then we're still trending in the upwards direction here. I'm on my 4 hour right now with it. You can see we came down a little bit. Still, this low is higher than this low. And then we decided to trend up again and continue the higher lows. As you can see, we're filling in multiple of these. Each one of these pullbacks are a trade. Each one of these pullbacks are a trade. Boom. Pullback. Pullback. And it's the same parameters every time too. No. So boom, pullback. So now we just need price to bottom out at an area, and we need 2 to 6 green candlesticks. And once I start seeing that and price filling in the right side with some green candlesticks going up, I'll catch the right bottom. Okay. But right now I'm gonna wait. People probably got burned right here with these candlesticks. Yep. But if you get on your daily here, we only have 1 candlestick. So this is why you need your daily. This is why I say 2 to 6. So that's why your daily and your 4 hour is really important. You can't just tunnel vision on your 4 hour. You need 2 to 6 candlesticks on your daily and or your 4 hour. Okay, so right here, it was only what, 1 green candlestick on the daily probably, and then another one open red. So if we have 1 green candlestick on the daily and another one open green and we're heading in an upwards direction, I'm taking that. Stop loss below the lows, taking it to the highs. Gotcha. So a lot of the times I'm overnighting. So I'm always overnighting actually. So each one of the setups I'm overnighting because I can just focus on my higher time frames, which is the real bread and butter. And yeah, and that makes it really, really easy. And that's going to be how you can play pullbacks.
All my day traders out there, there's going to be a completely different world to trading, and that's going to be long-term investing. Take some of your profits and siphon that back into shares, certain stocks that you believe in, into certain cryptocurrency plays, into ETFs that pay out dividends, so that you can generate passive income. Use your money as a tool, and that way you're always going to be using your money to generate some more money. Okay, so trading, it's really going to be more of a career, more of a wealth generating tool, as far as day trading, weekly trading, options trading, and just swing trading, closing a position from between 1 day to a couple of months, 2 weeks. And the other one is going to be holding positions for year after year. There's also going to be some long-term tax benefits that come into play as well too. So you actually get some benefits for holding trades for over a year. So I recommend you guys have 2 portfolios, 1 portfolio for your day trading portfolio and another portfolio for your long-term investing portfolio. It's really going to help you break everything down. And when it's time to do taxes, you're going to be able to calculate and differentiate everything pretty quickly and easily. So let's jump into it. So class, even if you start making 3 figures a day, 4 figures a day, 5 figures a day off of day trading, don't lose yourself. Okay, it's really easy to be reset back to zero, especially after a season of like a long wing streak and market, say, for example, swaps the trend. Okay, you might get into some kind of ego horizons certain time, not being able to accept certain losses, especially after you just streak like that. So you had a really good month, you just won pretty much every single day of the one. And then when you take your loss, you might end up taking 2 or 3 trades, okay, losing 3 times in that day because of the fact you just won so many times. So your brain can kind of get skewed. This is why it's really important to be with God and really just be humble at all times. Focus on the discipline and just forget about P&L. Update your contract size as your P&L grows, of course, but you can't just think money, 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 money. Okay, focus on the consistency in the process and the infrastructure around the type of trades that you're taking in the first place. So once you start making your day trading income as well too, take 50% of that away. Okay, say you make $100 in a day, for example. Take that $50, okay, and then you're going to take that $50, whatever the withdrawal amount is, okay, or say you make $1,000 in a day, okay, then you're going to go ahead and withdraw 500. Okay, So that $500, you're then going to take 30% of that $500 and you're going to go ahead and put that away. Okay, that 30% of $500 is going to be for taxes. Okay, and then whatever you have left over of whatever your withdrawal amount is, okay, take 30% of that, put it away for taxes. And then whatever you have left over, or you can honestly just split it 50-50 if you want. You could go ahead and do 50% of your initial withdrawal profit and then break that down into half as well too. Split that into 2 separate accounts, and that way when you pay your taxes, you're gonna have some overhead money. So you can go do whatever you want, either reinvest it or ball out, do whatever you want to do, because your stuff is gonna be together. Taxes are paid, and anything that's overhead, you can either use to get further ahead or just spend on it if you want. Okay, and that's kind of going to be your reward account, especially when you have overhead after paying your taxes. It's okay to go ahead and ball out. You know, we're still only here for one life, so do that, especially in your tax account. You can use that as a reward for being on top of your finances. So when it comes to long-term investing, and that really means holding position for over 1 year, because remember, there's going to be long-term tax benefits for holding positions over 1 year. And the goal of that is really going to be to just build wealth, security, and you're not going to be trading your time for money at this point. Okay. In hindsight, you are, because you're going to be waiting for things to go up, but you're not going to be wasting physical human exertion in order to gain income. So at this point, your account's going to be built up. Let's say you have around 50K. Okay. Let's say you have $50,000, right? Inside of a ETF paying you dividends. Let's say that dividend pays you $2,000 or $1,500 a month. So if you have $50,000 invested, right? So that's a pretty average income, right? $50,000. If you have that invested into a dividend, say that dividend is paying you $1,500 quarterly. That's all of your rent, your expenses, etc. paid just because you invested. Okay. So you can actually get $2,000 a month for just being invested. So start working on your dividend portfolio, keep siphoning money into that. And once you have enough investment, the shareholders will pay you out what's called dividends, and you can make like $1,500 a month, $2,000 a month, and have your money put up securely and safely. So forget 401k, Roth IRAs, all this slow type of wealth. There's a lot of wealth you can really be building now. So stay down for a couple of years. You know, don't do anything, just work, grind. You know, get closer to God, work on your spirituality, and it's really going to take you on a long-winded journey, especially once you start touching the 6-7 figures. Your mind can really go aloof. Okay, so it's really important to just stay humble and keep reinvesting that profit into cycles. This way, you're not even going to get the chance to blow up your account in the first place. Okay, when you're taking that profit and constantly reinvesting it, and you have the mindset, you've trained yourself to understand, like, okay, money's just a tool. Like, I'm not just going to use this to go splurge and do X, Y, and Z. I could just get wealthier and then let everything pay for itself. Because when you get to a certain point of investments, you can pretty much live completely for free. And living for free is just no stress. You don't have to physically exert to pay your bills. As long as you have a certain amount of investments, you can live stress-free. You'll have money coming in at all times. You'll be making money every single second. So if you just stay down for a couple of years, couple of months, keep your head down, stay focused. Okay, all those friends telling you to go out, etc., that's not doing anything for you. Okay, if you want to end up broke in the future, that's fine. But if you don't want to progress, if you don't want to put your family in a better position, then go ahead and slack off. But for the people who do want to actually achieve their goals, get somewhere and provide for their family, stay down for a couple of years. Okay, no buying clothes, no buying jewelry. Okay, if you have a super nice car, like a premium, for example, okay? I used to pay premium gas. I used to be an idiot when I was around 18, 19. I had an Audi A4 and was paying premium gas during the height of it. It was around $6 a gallon, and I lived in Georgia. So I couldn't even imagine what gas was for people on the West Coast at that time, probably like $10 a gallon. So spending around like $190 or around $80 per fill up, it's really just wasting money, okay? Just driving around doing absolutely nothing instead of investing. Okay, and Bitcoin example, I made a mistake where I had tons of Bitcoin. Okay, I had around like 30 grand worth of Bitcoin and would just constantly spend it every single cycle. Would just spend it. So me not staying down, me not stacking up really resulted into me realizing, like, okay, you can set yourself back years if you don't plant your seeds. Okay, you got to think of investing like a garden. You got to really plant your seeds in the ground and let everything sprout and grow over time. Okay, But if you plant your seeds and say the tree gets big overnight and you instantly just chop the tree, how do you expect to keep getting fruit? How do you expect to keep growing from that? Okay. So even when you touch that big bag, you can't just chop down your tree. Don't just withdraw all of it and stop trading. No, you got to stay down. Don't get overzealous, reinvest it. And then you're going to be able to get to the point where you can pretty much live for free. Okay. And once again, living for free is going to be just being able to pay your bills, feed your family, and go on trips, etc., without any physical exertion involved. Okay. So work hard now. Okay. You don't have to physically exert yourself forever. If you do the hard work for around like 1 to 5 years, okay, hard investing, hard work, growing your business, growing whatever niche that you want to execute in, then you're going to be able to achieve the goals that you want to achieve. Okay. It's going to be easy to jump into real estate from there, especially with all that capital from there. Okay. And say you were to generate a large income, okay, and have a large savings amount. Say you were to chop down that savings and buy a house, for example. Say you wanted to buy a house or buy a duplex or a triplex, right? And rent it out to a family, okay, or a couple families. Let's say you bought a multifamily, okay? If you use that profit and bought a multifamily, okay, let's say the multifamily costed you like $300,000, $250,000, right? Okay, if you buy that and you use a good chunk of your savings and you still have money within your dividend investments, you're going to be fine. You're still going to be getting paid around $1,500, $2,000 a month from the money that you already have initially invested in, which is also stacked up on top of that. So just from your dividends alone, you're pretty much going to be able to live. So while your multifamily income is generating, while your real estate profit is generating, whether you do Airbnb, get a multifamily, whatever route that you go, okay, you're going to be able to survive based off of just the investments that you made in the first place. Okay, so it's really important how you spend your money, even just $1,000, right? Instead of buying the newest computer, the newest phone, okay, go invest, okay? Because when you're dead broke, when you end up flat, you're going to be wishing that you could sell those items and restart over again. So don't do that, okay? Make the smart decision, invest. The reason why a lot of people are behind when it comes to bills and stuff like that, living paycheck to paycheck, is because they don't invest. Okay, when you invest, not only do you have your stash, okay, you have money that you can pull out and execute back into your bank account at any time. You have money that's generating you money at all times, pretty much. Okay, especially when you put down good trades, whether it be at options, futures, forex, whatever. Your money is going to always be generating you money. Okay, and then when you take that day trading profit, put it into shares, which are definitely going to be always generating you money, inshallah, especially when you invest in good companies. Take Build-A-Bear, for example. Build-A-Bear, it does nothing but go up in a straight line. For example, the company just a couple of years ago, as of 2025, when this video is coming out, was around like $2 a share. Okay. And it's had no dramatic pullbacks. It's a really low key stock, but Build-A-Bear is a good company. Okay. It's now at like $72 a share after this video. So it's just a good investment. And once you find really good companies to go ahead and invest in that provide future value to human beings, go ahead and invest in that. Put your money into that. You're not going to regret it. Okay. A large percentage of millionaires come from the stock market. Okay. So after your business goes up, after you start getting a nice paying job, whatever, after your income increases, invest. And this way you're going to be able to sit down and really just sit on your butt whenever you want. Okay. You're not going to have to physically exert yourself constantly for income. That's not going to be reasonable, especially as you get older. Okay. There's going to be certain mental things. Your mental is not going to be as sharp. Your body is not going to be as strong. Okay, so it's really important to invest. So this way you guys aren't going to have to rely on other people, you know, trying to rely on certain things like family and things like that. It's not always going to be the smartest and wisest thing. So you always want to just try and put yourself in a position to where you can provide. Okay, so if anyone falls short, you got them. Okay, so invest. So you be the one to stay down. You be the one to stay in the stack mode. So instead of you falling short, okay, and having to beg, okay, you be the one that's going to take the sacrifice, okay, not go buy all the flashy things, really stay down, okay, get groceries, not be eating out, and not be doing things you shouldn't be doing. So this way, whenever things do get hard, you're going to be the one to be able to take care of the things that need to be taken care of. So this way people don't struggle, okay? So just stay down, get into stack mode, and whenever anything goes down, you're going to have the financial security, and it's not going to break your bank, because things happen in life. Hospital bills, Okay, car crashes. There's a lot of things that just happen randomly in life, and you can't have rent coming up on the 30th, and then you have a $600 car repair bill. That's going to throw off all your calculations, and then you're stressing about that. Okay, but when you're investing, you have your money making you money at all times. If something like that happens, you're going to be fine. You're going to go dig in the stash, pull out some money out the stash. You're not going to be tripping. Okay, but when you're reliant on that calculated paycheck only, okay, you're not going to be able to grow within an exponential way. So this is why it's important to start your own business, because this way your income is going to be pretty much unlimited. When you start your own business, your income is based off of how much effort you put in. So however much a business makes, it's based off of how much effort they're putting in and how much they're helping society. And then B, invested portfolio income too. Okay, so when you invest income constantly, especially into certain things that are almost guaranteed to generate you a positive equity curve year after year after year, you're going to go ahead and subsede your constant income. And then you're just going to be way ahead of things. Okay, so if anything dramatic does happen in life, because life definitely does life, you're going to be cool then. Okay, you're going to be able to dig in the stash. You're not going to be tripping. So long-term investing, it's definitely lower risk for sure. Okay, I'm glad I went through all the day trading struggles at first. Okay, going through all the emotional highs and lows, making $1,000 one day, losing $900 the next day. You know, going through the emotional high and lows really teaches you emotional control. But as far as long-term investing, once again, there's people who are millionaires who barely look at the chart and just invest into just certain things. So certain ways, effort, especially when it comes to the market, effort is not going to always guarantee profit. Okay, someone who makes 10 trades a day is not going to be as profitable as somebody who just bought and hold something for 5 years. Okay, a lot of people who just buy and hold actually outperform a significant amount of day traders. That's because day trading is not something that's going to be inherently easy to get down. So I've been trading for around 2 or 3 years now, and I'll say April 2025 had one of my most successful day trade months. I took 30 trades, won 25. Okay, and the 5 trades I lost was just not looking due to news. Okay, so those were my fault. So that month really taught me, like, okay, if you day trade, you can win pretty much every single day if you wanted to. As long as you're taking the right type of setups, you're waiting for confirmation. I personally trade break and retest, and you're waiting for key levels to be broken, then yeah, you could almost win every single day when it comes to the day trading aspect. Now, how long your day trades will be, that's also going to be an inherent question. You might be closing like in a couple of minutes. But if you're going to be trading between like hours and days, that swing trading area, that's still going to be kind of within the day trading space too. So I'd say anything that you're closing less than a year would be like considered within that same environment. Okay, so be careful with that too. It can come with extreme risk, because especially with futures and Forex, you have a lot of power. You can just instantly click buy and sell constantly, and your money's going to fluctuate. Okay, well, depending on the amount of leverage and ticks amount that you have on, your money is going to go ahead and fluctuate. So the risk is extremely high. Do your research. If you're struggling with trading, head over to stackmode.net. Okay, the risk is going to be extremely high when it comes to day trading. Okay, so be aware of that. Okay, if you just lose your whole check in a minute, you probably did something wrong. Okay, you got to really analyze how much size you're putting down. There's calculations, entry criteria, time frames, and you have to really understand the overall direction of the market before you just start getting in and doing anything. And day trading is really going to require some advanced market knowledge, technical expertise, and your TA needs to be on point. Okay, so if your technical analysis is not as structured as it needs to be, you're not going to get to the type of profits that you want to be seeing when it comes to day trading. Okay, you have to really live on the charts. There was at least 2 years of me staying on the charts 16 hours a day. Okay, and I still look at the charts at least 2 to 8 hours a day, every single day. So if you want to be a day trader, you have to know how each and every single time frame correlates. You have to know how to read the higher time frame trends, and you have to really understand break and retest. That's really going to be a big thing that's going to help you keep your account safe. I'd say break and retest. Understand that price going in upwards direction is based off of resistances being broken, which you can logically put into hindsight. of the market, also known as all-time highs, is always going to be being chased to be broken. So say the Bitcoin height is going to be 100K, even if price dumps down to 50K, it's still going to try and get back up to that 100K one day and break it. That's just how trading is. Okay. So you have to really know the logistics of the market, understand it's a left to right chart, and do your information before you just start day trading. But as far as just putting some shares into a certain company, just know how to read support and resistance on like your daily time frame, and you can be a pretty decent investor. You don't even have to day trade in order to reach the type of income that you want to receive. But I understand that some people might be day trading due to FOMO too. I have a lot of day trade recaps too. You guys can see it's pretty easy to make hundreds, thousands of dollars within a day, but that's after you've struggled. That's after you've really humbled yourself. And that's after you've studied hundreds and hundreds and hundreds and hundreds of hours. Okay. So it's not something you're just going to jump into fresh and be successful in. Okay. A lot of times it's going to take information and knowledge. Okay. Because with day trading too, your emotional control has to be a lot higher. When it comes to long-term investing, you could really just hold for years and forget about it. Once again, there's a lot of people who are wealthy who don't even look at the chart. A lot of people who just had Bitcoin in their Coinbase account, on their USB drive, whatever, in their Phantom wallet, and just came back to it 10 years later and they were a millionaire. Okay. So you don't have to be the best trader of all time or the smartest person of all time to be a millionaire. You just have to really just invest and make the right decisions. So, but if you're going to be a day trader, make sure that you're at least ending the months positive. Okay. And you shouldn't be taking money from your business, money from your savings, and hauling that into your day trading account. Really have some discipline. Okay. And you should need to be earning your position size. So take the account from $1,000 to $2,500. Okay. Then take it to $5,000. Then take it to 10K. Then take it to 15K. Okay. Start it at $100. Take it to $500. Then take it to $750. Take your time. Okay. Grow your account, earn your position size. Don't take, even if you have M stashed, don't go take all of that and throw it into the market, especially when you're new. Because if you lose that, you're going to be distraught and you might do some emotional things. Okay. You might put down more size after a loss, trying to make it all back, thinking it's about to be the one play that's going to save your account. But that's the wrong mindset. That's why risk management is important. Okay. So instead of trading with 50% of your account in one trade and then taking another 50% of your account, so you lose that too, then your account is going on 2 trades. Okay. And that's completely your fault. But you could lose 5% at a time. Okay. 5%, 5%, 5%, 5%. Okay. And then say you take a win for 40%. You don't care about that 20% that you just lost. Okay. Because now you just won 40%. Now that 20% is canceled out and you're up 20%. Okay. So the math is in the risk. Okay. Whether being a day trader or long-term investor, understand that math is always going to be within how much risk that you have calculated, and as well as when you buy and when you exit. So taxes and transaction costs. So long-term investing, like we talked about a couple of slides ago, it's going to go ahead and give you lower taxes and lower fees. There's going to be long-term tax benefits for holding a trade for at least 1 year. And you only pay tax when you sell. Okay. And that's going to be realized gains. And if you hold an asset for over 1 year, you pay the lower long-term capital gain tax rate, which saves you money. Okay. So fewer trades equals lower taxes and fees, which can definitely eat out your profit. So future traders, don't just be spamming buy and sell instantly, because a lot of the time the fees are going to go ahead and cancel out the profit that you're scalping. And you shouldn't be trading like that. Trading's not a game. Okay. If you want to just give your money away to profitable people, it is called trading. That's fine. But all the market is people getting rewarded for being disciplined and patient. That's strictly all it is. And if you're getting your money robbed, or if you're not being consistent, that just shows you who you are as a person. So you could either change or continue to be the same. So day trading can be a little tax inefficient. You can still make some great income though. And profits are taxed as short-term capital gains. And these are trades that are held for less than 1 year. And they're equivalent to much higher ordinary income tax rates. So high volume of trades per month, per year, per day, you're going to be subject to just higher taxes and commission friction. Okay. So for almost everyone, both, okay, can be a strong option. But if you're just someone who has a family, has a lot going on, has a big business, you can't really stress about the charts. I really recommend just long-term investing. Okay, you could still make millions of dollars, achieve your goals, and get to where you want to be by just buying shares. Okay, you can buy shares, not have to worry about it. No time decay like options and futures, no leverage or margin you have to really worry about, especially if you're on a cash account. And you can really just stress-free, just invest, let your money sit, let it grow over time, put it in a company that you believe in, and yeah, just let your money work as a tool. Now, day trading. If you have time to study the market for, I'll say at least 6 months, like every single day, constantly, at least 16, 18 hours a day, then yeah, you can go ahead and definitely day trade. Okay, but if you don't have that type of time commitment to put into the charts, then it's not worth it. So your screen time has to be consistent. You have to know how every single candlestick moves on every single time frame. Understand how the market structure is going to correlate as well too. And you got to be really quick when it comes to closing your trades. So day trades are going to be different. If you don't close at your certain levels when it's time to close and you get reversed on, you get emotional, that can turn into a spiral in itself. Okay, so you got to be really strong to day trade. Okay, and swing trade as well too. So take your time. Make sure you guys have tons of screen time on. Test it out in paper trading before you start putting any real money into the market, and make sure that your strategy works. Okay. Make sure that you guys are able to afford to lose the capital too. Don't trade with no rent money. Don't trade with no grocery money. Don't trade with no bill money. Don't do that. Okay, stay down until it's time. Put some income to the side. Once you have some income ready, okay, then it's time to start trading. Take care of yourself first. Okay, clear your debt. Okay, pay your credit cards off. Okay, make sure everything's good and structured, and then we trade. We don't come onto the markets desperate for income. Okay, get your life together first, and then you come onto the markets. The markets are for people who have their life together. Okay, so that's why you get rewarded for one, holding your trades for over a year, because you're not fiending to withdraw your money. When you have a business that's making you income that you can survive off of, you're not worried about the money that you have invested in your brokerage account. Okay, it's a lot of benefits for holding plays for over a year for a reason. Okay, they want to reward people for being financially structured. You can get rich if you're just financially structured. They make it really easy in this world. All the credit you guys can get. Okay, all, whether it be a business credit and or personal credit. Okay, all the loans you can get with certain things when it comes to real estate loans, and you could flip that into certain things. Okay, all the approvals you'll get. Okay, getting any truck that you want. Let's say you have a construction business. Okay, once you're a put together, financially stable individual, the world will treat you as such. Okay. So investing, it's really going to be the long game, and you're going to be the owner of your shares. You can sell them whenever you want. You're going to be in control of your portfolio. And day trading, it's going to be, I wouldn't say a short sprint. You could day trade until the end of time if you want, but understand that that mental exertion might get to you. So having money in ETFs, having money just put into something that's going to be making your money, so you can step away from day trading if you ever wanted to. All right. Stay prayed up to God. Keep grinding. Head over to stackmode.net for all trading education. Peace.
Okay, this is going to be the lesson on buying dips within the stock market and the crypto markets. So buying dips is going to be pretty simple, and buying a dip is pretty much just going to consist of buying a low whenever the market dips down. Okay, so we know the goal of the stock market and the cryptocurrency market. Okay, if I go ahead and pull up a profitable stock, for example, okay, I can go ahead and see from left to right how chart starts small. Okay, NVIDIA stock started at $2 a share, let's say around 6 years ago. Now we're trading at $177 a share. Okay, large percentage increase on our funds. Okay, if you were to go ahead and hold shares for a couple of years. Okay, and same thing with the cryptocurrency markets. Okay, the goal of it is to just hold, and for the company or crypto token creators to keep innovating with the future. That way, it's going to go ahead and bring value to whatever it is, and value is going to equal more people investing, and more people investing is going to equal more money, and more money is going to equal a higher share price, inshallah. Okay, so buying dips at the right time is going to go ahead and be an ample way for us to make money. So let's talk about it. So one, in order for us to buy dips at the right time, we need to be using our higher time frames. So the time frames we're going to need to be using
in order to analyze everything is going to be our daily time frame. The daily time frame is going to be our eyeballs. We're going to be able to see everything we need to see on the chart. Okay. And one screen, you could see 6 years, 10 years with the price action on one screen. Versus if I get caught up on the 5-minute time frame, I can only see a month worth of price action on one screen. Okay. So it's not nearly as much price action. And the reason why we're using our higher time frames as our guidance is because this is where the whales, okay, and whales are going to be players with large amounts of funds, okay, hedge funds, okay, people collectively putting money together in order to trade in the markets, and banks and institutions, okay. So people who are pooling large amounts of money together, we want to be trading when they're trading, and they're going to be trading at dips that are visible on the higher time frames, okay. So this is why we're going to be using our daily time frame. When you're under higher time frames, let's say I'm on the daily, each one of these candlesticks will represent 1 day. If I'm on the 4-hour, each one of these candlesticks will represent 4 hours. So, and also, like we know, just like we talked about, the goal of the stock market and cryptocurrency market is to go in an upwards direction. And only way price can go in an upwards direction is if it breaks what's called an area of resistance. Okay, resistance is an area where sellers come in, causing price to go in a downwards direction. Okay, so once again, resistance logically makes sense because this is a left to right chart. So if someone got in from way over here at $2 a share, of course they would go ahead and take profit at this resistance up here at $32 a share. Okay, they're going to go ahead and sell some shares. Okay, go take a nice trip, do what they want to do, reinvest their profits, pay off their house, rebuild their kitchen, do whatever you want to do with your profits. Okay, but eventually people are going to take profit. Okay, because they got in way back here. Some people. Okay. So this is why we are understanding why resistances gets created. Okay, people are selling because they're in from way over there to the left. So when you see resistance get created, all it is people selling. Okay, so resistance equals selling. And we know that price cannot continue within an upwards direction until price breaks resistance. Okay. If price is trying to go up and break out and future innovate and be one of the biggest stocks of all time, areas of resistances have to be broken out of. Or an area above, an area of support above current price can also be broken too. Okay. For price to go ahead and progress in an upward direction. And sometimes support, prices underneath it, it can turn support into resistance. And then it could potentially try and break through it. Meet up with other areas of resistance. So this is implying that this opposite end bounce is going to be called support. Okay. So support is when buyers step in. Okay. Unlike resistance where they're sellers, support is going to indicate when buyers are stepping in. Okay. So when buyers are stepping in, price is trying to go in an upwards price. People are trying to invest. They're trying to make some money. So buyers are stepping in whenever support gets created. So resistance here gets created whenever sellers are stepping in place. And support can be broken and turn into resistance potentially. And just like the opposite end, resistance can be broken, turn into support potentially. Okay, it doesn't happen every time, but it has a chance to happen. Okay. And price has to break resistances in order to progress in an upwards direction anyways. Okay, price has to break resistances in order to go in an upwards direction. Okay, so price is either going to try and reverse at certain resistances or is going to try and bounce at certain support points. Okay, or resistance can be broken, turn into support for a continuation to the upside, or support can be broken, turn into resistance and push to the downside. Okay, for a downside continuation. All right, so that's going to go ahead and be those put into perspective. Now let's hop onto the charts. So understanding everything here on the charts, we know that price is always trying to hunt and chase and break areas of resistances above current price. Okay, it's trying to chase, break areas of resistances above current price. Okay, so say NVIDIA, for example, I could see here that price wants to meet up with this all-time highs. Okay, all the way up here. Okay, this is the highest point of resistance on the chart. Okay. And this is when I'm going to be really paying attention to my higher time frames. Okay. So we had a pullback area here. I can already see it. Okay. So I'm going to go to my 4-hour here, and I can go ahead and see something here. Okay. This is what's going to be called a support mirror. Okay. Support mirror. Let me go ahead and do this. Okay. Support mirror. Check it. So we're going to see price mirrored the areas of support, just like we talked about. So if price bounces in an area of support, you're going to know that it's a good time to buy that dip. Okay, so we can see this support get created right here. And I don't ever like to buy the first candlestick. This is when I'll come to my 4-hour candlestick and wait for a close. What a close is I'm not going to buy at the candlestick that touches the blue line. If I'm going to buy a dip and wait for it to sweep back up in an upwards direction, I'm going to wait for a second candlestick above the blue line. It's not going to be later because it's going to be safer to trade that. Instead of buying it as soon as it wakes up on the blue line, price could easily dump right through that. But if a lot of the times if price wants to give you a close above the blue line, give you a second candle and show you it doesn't want to go up all the way just yet, but it wants to maintain above the blue line, that could indicate an entry area for a reversal without getting burned. Okay, so I'm trying to just give you guys the safest way to trade. So I would never enter on that first wick where price bounced directly off the blue line. But if price went 4 hours and then still stayed above the blue line, I would go ahead and enter. And that's what you're waiting for a close for. Each one of these previous candlesticks are called closes. Okay. And I can see that this area is strong. It's because one, I have this area of support right here where people are buying in an upwards direction right here. Okay. People are also buying right here. Okay. So price decided to break and then come back down, test this level, and shoot back up to this area of resistance up here. Okay. So we got R up here for resistance, and then we got S for support. Okay. And even right here, I'm going to go put this tiny area of support right here too. Let me zoom in all the way. Okay. Even this area of support right here on the blue line. Okay. There we go. Okay, area of support right here, area of support right here, area of support right here. 3 different bounces that I can see on my 4-hour time frame. So I can assume that this area of support wants to go ahead and be decent, especially after getting a close. Okay. And I can see price decided to just fall at this area of resistance right here. Okay, so price is falling from an area of resistance. You're gonna have one area of resistance here on my 30-minute now, and another area that was created off of that. Okay. So as soon as you start seeing price decide to curl in an upwards direction, especially on your 4-hour time frame, you can go ahead and take that for the most part and take it up to the next area of resistance, inshallah. So let me go ahead and cover another example here. So I have some stuff here. Okay, let's go over KOP. Okay, even with KOP here, I can check out here. I can start off on my daily time frame. Always going to be starting off on my daily time frame. Okay, always start off on your daily time frame. It's going to be your bread and butter. Okay, it's going to be your bread and butter. So if you want to eat, let's grind. All right, so we know that on the stock market and the cryptocurrency market, people are putting in work at these companies, working their real life, trying to innovate new technology for the company. So once again, the company can make more money, and this way their valuation can be higher on the stock market. Okay, so then people can be called billionaires, etc. And that's due to stocks. Okay, so price once again is always trying to break resistances or supports above current price to progress in an upwards direction. Okay, it's not trying to stay stagnant. So your take profit a lot of the times and take profit means where you close your trade. Okay, and you close your trade at take profit no matter what. If you tell yourself you're going to close this trade here, you close that trade there. Okay, take profit is where you get your money. So I can go ahead and see here that price wants to chase this area of resistance. And realistically, this could be the trade. I don't really have to do anything else. I can get my ruler here. I can put my ruler down. I can see that there's around 3 points left. Okay. I could also do the trend line if I wanted to too. Okay, but that might give you a little later entry. But personally, once I see like my daily time frame with support curls at a heavy area, so say price is supporting at this area, heavy area of support down here. Okay, even down here, one area of support into another area of support. Okay, and then I can easily see price deciding to bounce within an upwards spiral direction. Okay, and then we also another area of support right here. Okay, so all these areas of support lined up let me know that okay, price is doing the same thing in the same area and it's doing it again. I get on my daily time frame and I have closes, and I get on my 4-hour time frame, I for sure have closes. Okay, and I can see that price wants to go up to the next area of resistance. Okay, it's about making it easy, making it simple. Okay, not making it hard. Okay, buy a good expiration date for these contracts, buy a good strike price that's relevant, and you'll have the keys to financial freedom and show up. So check it out here. Even Amazon here. If I wanted to, I could wait till Amazon goes down to the support. Okay, I could see if it wants to. Go to my 4-hour here. Yep, so I can see if price wants to come down to this area of support. And if it does, then we'll see if it wants to go ahead and bounce in an upwards direction. But as far as this is already pretty bearish. And yeah, price decided to break the trend line. So we had 1 bounce off the trend line, 2 bounces off of it, but then we had a push down below it. Looks like price wants to go ahead and fill this area of support right here. Okay. Also mixed with this area of support here too. So let me go ahead and grab this line, drag it all to the right, and you can go ahead and see this here. Okay. So it's about just taking our time, identifying the right setups. Let me go ahead and show you a crypto example here. So going over the crypto example here, let's go ahead and let's click on Ethereum. Okay. So going over Ethereum here, looks like price wanted to bounce at this area of support and break below it. Okay, let's break it down. Okay. Here we have an area of support. Being broken and turned into support. Okay. So once again, we have an area of support being broken. Okay. And if I get on my 30-minute here, I can see that support got broken all the way over here. Support broken, turned into resistance. Okay, if I zoom in extremely hard here, I can see the resistance was created right here. Okay, price broke underneath it, first 30-minute candle, then ran back up to the black line and decided to short downward. Okay, this is going to be an example of some downwards break and retest. Okay, downwards break and retest. So say I still wanted to buy some Ethereum, for example. Okay, this is why I'm getting on my daily time frame now. I don't want to tunnel vision. So I know price could either A, reverse near this area of resistance here, potentially, or I can assume that price might potentially want to reverse at the area of support down here. Okay. Let me get on my 4-hour. It can also be this area of support. There we go. Okay. And you go and see the area of support right here being formed and formulated, and then the next step down below that in case the previous level above doesn't hold. Okay. It's just about marking the levels, making sure we got it until we are clean and crispy with how we're looking at the charts. So even XRP here, okay, I can see 4-hour time frame price potentially might want to hold this point. Okay, potentially. So XRP decided to go ahead and dump down. Supports are holding. Okay, and it looks like price might want to sweep back up, but it did fall back down, and we'll see if there will be a new low or something. Okay, but either way, this will be buying the dip. Resistances are up here. Okay, and if price starts giving you 4-hour daily closes, okay, and you get to think coherently, then you can go ahead and feel the setup. Be like, you know what, this is going to go ahead and sweep here. Okay, it's lining up with this area of support. It's lining up with this area of resistance. X, Y, and Z are lining up. Let me go ahead and take this. Okay, check right here. So even right here, with Doge, for example, right? So we got some break and retest right here. I have this area of support right here on Doge, mixed with this area of support right here. Okay, and get on my daily time frame, we have the second candlestick being formed. Okay, 4-hour candlestick, second candlestick being formed. Okay, and it looks like price wants to go ahead and go up in an upward direction. Okay, close at resistance, close at resistance, close at resistance, close at resistance. Okay, so you can go ahead and mirror your trades like that, and really just see like, okay, I know what type of trades I want to. I know what I'm going to be looking for within the market. Okay, and buying dips should just be relatively easy. It's just about not overthinking the trades, really taking our time. Okay, and then just seeing, inshallah, I can go ahead and do this. Okay, so just wait for either break and retest or wait for an area of support to go ahead and line up with each other. And a lot of the times, especially with you get a daily or 4-hour close supporting it, you can be like, oh yeah, you know what, that's it. Like that's the one. Okay, so be confident in your trades. Head over to Stackmode.net for all trading education. So pray up to God. Keep grinding.
It's 2026. What's going on? We're back in the Stack Mode community, and first week, I just wanted to go ahead and recap and let you guys know what the business is. So we're up about 6% so far in the first week of 2026. I'm going to start doing a recap kind of once a month, just updating you guys on my P&L. Sometimes twice a month, showing you guys like the first week what my plan is, and then showing you guys like the end of the month result and showing you guys progression on how to start an account from nothing and grow it into something. So here, focusing a lot on AI stocks, tech stocks, and stocks that really have stuff to do with the future is really what I'm going to be going forward with this year. So a lot of people like to invest in stocks that have been around for decades and years and stuff like that. Me personally, I like to invest aggressively. This year, I'm going to be really focused on shares as well too, pretty heavily compared to options and futures like I have in the past. I'm really going to be just trying to go hard on shares this year, scouting out good companies, finding good buys, purchasing them, and just holding and sitting on my trades. That's noticing it's been working out for me really well. Been able to grow my account at a relatively fast pace. Been really happy with the profit. And one thing I really like about swing trading shares compared to options trading or futures trading is whenever you're swing trading shares, you can just sit back and chill on your trades. You don't have to worry about time, no expirations, no getting margin called. You could just buy your shares, sit and hold, and that's it. That's all you absolutely have to do. And taking your time on shares, trades, and scouting out the companies that are going to be making the most ample progression within our societies, getting rewarded for that, getting rewarded for your research, for your knowledge, for knowing to not buy at all-time highs and to buy at certain low areas. The reward that you get from shares compiled with the risk factor that's pretty much taken off because say options, for example, I've changed my whole mental mindset. When it comes to options, people can pretty much sign a death contract. Your contract is pretty much locked in. It has to hit or it's going to miss. Okay, that's 100% just what it is with options. With shares, as soon as you buy, your money will fluctuate over time. But one thing about it is that you 100% do own. If your options is not going towards your directions, you're going to be losing. Okay, even with shares, if it's sideways or moving slowly towards your direction, you're still going to have all your capital. If you put down an options trade with not enough time and it's moving slowly towards your price direction, but it's still moving, okay, either A, your price is going to go negative on the contract due to theta and time decay, or your profit's going to be moving extremely slow and not how you want it. Also, another reason why I'm focusing on shares instead of options this year too is that at a certain point when you get too rich, you can buy all the options contracts for most stocks that you're looking at. Okay, so that's why billionaires have to play shares. So I'm trying to get to the financial point to where I'm one of the best traders. Okay, so personally this year, I'm going to be focusing really heavily on shares. Got Bitcoin, of course, and in order to generate income, maybe later down the line towards this year, first couple months within the year, I look forward to playing some futures as well too. Okay, so I look forward to playing some futures within that. And I'm just going to be fully transparent with you guys at all times.
I want to just show you guys stats, show you guys what I'm holding, and show you guys how I plan to continue to go forward. So let's go and let's jump into some performance, inshallah. So jumping into the stats here. So compiling an account, guys. Okay, I want to show you guys what it looks like starting an account from 0 to 4 to 5, 6, 7 figures. I want to just be fully transparent with you guys and show you guys how it's done. So starting here, you could see just have this account here, kind of restarted it July 2025-ish. Okay, started growing it throughout this time, just reinvesting income from business, winning trades, adding over a single time. Okay, and as you can see, P&L is just heading in an upwards direction month after month after month after month. Okay, so your work income, your business income, or even your options and futures income should be funneled back into your account. Funnel it back into your account. Say your business, for example, if you're doing 5K a month in your business, okay, try and take 4K a month of that, okay, and invest it. Okay, you could put maybe 2K in the crypto, 2K in the stocks. Just try and break it down and invest what you're making. So your P&L is always going in an upwards curve. Okay, every time you guys get some money, try and invest. And then as you win trades, okay, there's going to be times where you may lose, okay, but then you're going to win more trades, get in different seasons, and continue to uptrend. Okay, if you feel like you have to invest every single time you get some money, then do that. Do that. Okay, I'm absolutely addicted to investing. I'm going to keep it 100%. Okay, shares is not something that I played past 2-3 years. Yeah, shares is not something that I've played or really looked at. It's really just been a lot of options in futures. I played options on Robinhood, TradeStation as well too. So I have some stats just spread across everywhere. But as far as Webull, I want to just use it for my shares portfolio. And I just want to be just fully transparent with my portfolio and how I plan to upscale it. Okay. So when you guys are growing your account, right, patience is going to be the number one thing. Okay. It's going to take time for you to know how to identify the setups you need to take. I recommend you guys go to Stackmode.net so you guys can get with my trading mentorship, so it doesn't have to take you a long time in order for you to understand what a decent setup looks like. But I went through a lot of unnecessary losses early on within my trading career due to the fact that I was just being uneducated and being impatient and being stubborn. Okay. So completely my fault while I was struggling in the beginning, but once I started getting my foot, I was able to go ahead and progressively increase my P&L year after year after year after year. Okay. So all your business income, all your work income, okay, after your bills are paid, of course, and make sure you guys are reinvesting the profits from the trades that you win. So your income vehicle generating skills are going to either be your options or your futures. Personally, I'm going to go with futures this year. I've played options for a few years and I like just the stability of futures and how you can just turn dirt into diamonds. Same thing on options too, but the time decay factor and stuff. But I don't know. I'll see even this year if I'll even touch futures or options at all, honestly. I might just stick 100% on shares, find little small caps, and just really try and turn up like that. And just continuously do my research on these stocks and these companies and try and catch some stuff at the lows. I'm really having fun doing that, finding the best companies and playing shares. Just really been having a blast. Options, it's really funky with options. Options has a lot of derivatives built into it. Price could be going in your direction and you could still be down due to multiple factors, due to like how much volume a contract has, etc. And all that stuff is just really ghetto, especially when I'm trying to protect and provide for my family. I don't really want little random factors determining whether or not I'm going to get paid. So I like shares a lot, even when if I, inshallah, if God wills, if I cross into like the 10 million plus range, 50 million plus range, I can comfortably trade I can comfortably trade shares even as a 100 millionaire into billions of dollars. Okay, due to the fact that shares are going to be pretty much always available for the most part. So shares are really just my favorite instrument This year, I'm focusing completely on shares. 2023, I played a lot of futures. 2024 was a lot of options. Um, Same with 2025 was a lot of options as well too. 2026, let's swap up the game. Going to be focusing on shares. I've been finding some success recently in just investing in little tech stocks and stuff like that. And just I want to just break down and give you guys full guides on what I do to find the stock that I want to play, why I'm getting in said stock, and what I see in said stock within their future, right? So is this stock even going to be half decent in the first place? And as you guys can see, this is completely live. P&L, you can see it moving up here. Market is closed right now though. So yeah, that's going to go ahead and be that. So keep all of that in mind. And let me head over to the positions here. So this is what I'm currently holding. Okay. We got some Path right here. Path is a stock that is been in the works in the limelight recently. I bought some more at like 16, but I sold some a couple of days ago. So we got Path. That's one thing that I am holding. Once again, bought it at around 17.75. Let me get on my higher time frames here. So on my higher time frame, I could see we IPO'd all the way up here at around 90. So I liked that a lot. So I can see a lot of upside room, at least to this 30 area here. They've been getting a lot of funding. I see higher lows being put in. So Path, really, 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 really happy there. Excited to go ahead and take that up as well. Let me go ahead and open up NVTS. So we got NVTS here as well too. NVTS, this is one I'm really, really excited for. So we're currently at 10.31 right now. We got price trying to head up. I bought around 9.89 right here. Okay, and once again, we got price heading in upwards direction. We IPO'd. IPO stands for initial public offering, which is where the stock decided to open at. So we IPO'd at around 22.19, and it looks like price just made this high resistance at around 17.82. So yeah, we're gonna go ahead and wait here, and wait for price to go ahead and catch up, do its thing, and then we should be able to make some good profit on this as well too. So I like this a lot. Big fan of NVTS here. They collabed with NVIDIA, and that NVIDIA collaboration, of course, helped it a whole bunch. Whenever we're collabing with NVIDIA on certain things, of course, that's going to be, pretty successful for us to be looking forward for the most part. So NVIDIA is going to be one of the biggest stocks, and I personally sometimes like to look at stocks that NVIDIA is collaborating with, or say Apple or something like that. Any big world-leading stock, if they're making collaborations with other stocks, I like to look into those too, and then I like to see if profit can be made. So EOS as well too. This is an energy enterprise stock, about around 14.22. Price is trying to push up here. Let me get on my monthly time frame here. So I could see price decided to IPO at this 31 area up here, 0.95. And we just recently created this area of resistance here at this 19.91 area up there. Yeah. So just waiting for price to go ahead and go up. Feeling this area here. And I could see here, even on the weekly, I could see higher lows being put in constantly. Okay, constantly. We got constant higher lows being put in. Okay. And it's really just taking heed, noticing price how it goes up, goes down, goes up, goes down, and continues to just spam that. Goes up, goes down, comes up, comes down, and it'll just continue to spam that over and over and over again. Inshallah, especially since this seems like a half decent stock that people will care about. And once again, this is an energy enterprise stock, so I like this one a lot too. Price looking to swoop up. Let me head over to IONQ. big dog right here. So IONQ, one of the leading quantum stocks. We just had a burst to this area of resistance at this 84 here. So as soon as I saw this higher low get put in, I was like, oh yeah, let me go ahead and hop in those. So that higher low, I loved it a lot. Was a big fan that it put in right here at this area. So as soon as I saw that, I was like, okay, price is looking to progress. And even after that, it came up, made new resistance, came down, and then made some new support. So I like that a lot. Even if I head over to my 4-hour here, let me turn up the poo-poo time frames. Get on my 4-hour here. So even if I hop on the 4-hour here, boom, could see price decided to come all the way up here, fall all the way down here, bounce up, create a new resistance wall here. As you guys can see, we have one push down here, another push down here, and then we got price falling down, making a higher low here. So this low is higher than this low. I like that a lot. Super big fan. And then from there, we can go ahead and wait for price to come up, smash past this area of resistance, and then after that, inshallah, we should be able to go ahead and catch price upwards right after that. Okay. So it's really just about taking your time, being patient, and waiting for the setup. Okay. Remember, you want your gap to be filled to the right. You want market to make the left side of the V, let it fall down, let market make the bottom of the V, and then we catch the right side of the V. Okay. We catch the empty right side of the V. Okay. That's what I want you guys to be doing. Catching the empty right side of the V. Okay. Like this. Okay. This is what we're catching. All of this whole empty space between this resistance and this area of support, right? This whole area is nothing but profit. Right? Nothing but profit. All up here. Okay. So 40 plus 40 points left between this area of support and this area of resistance up here. So a very, 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 very long way to go. Intel, check this out. Up crazy on this one here. All right, Intel, I got it at around this 35 area. I'm going to go ahead and hop up on my higher time frame here just to show you guys why I got in here on Intel. So Intel, I decided to get in this area. Kind of the same reason, even if I'm on a monthly here. I could still see price making upwards progression for the most part. Yes, we did fall down and make this low here. Although after this low, I put that into combination with some fundamentals. Since all the tariff stuff was going on, the United States needed their own AI chip making company to make AI chips for them, and Intel decided to partner up with other companies. I believe NVIDIA is included. And as you can see, we're starting to get a lot of bullish reaction looking to fill in this V. So we first had price falling down from this resistance here on the weekly. And then we could see price deciding to come up and fill in this gap area up here. Okay, so just go ahead and let price do its thing. Let it fill up. Okay, and just give it its space, give it its time. Okay, let market do its thing. So that's going to go ahead and be that as far as Intel. This trade was super duper simple here, and I bought after this little higher low area here too. After I analyzed this higher low area, I was like, okay, cool. Yeah, super duper bullish after this. Check on the daily here too. Even after this resistance, we came down, made another higher low. After this higher low here, saw 1, 2, 3, 4 green candlesticks, bought in. So you can see you're getting a nice V fill here. And on my monthly time frame, we can go ahead and head up to this resistance up here and head up to this 40 area up here to all-time highs. I'm praying. Okay. So that's going to go ahead and be a flip from, let's see, I opened here. So it's about 28 points here. Very great flip. And then Webull here. You know what I'm saying? Webull, they're hating on Webull. We're waiting on this. I'm not going to lie. Waiting on some Webull here. I just keep adding into this. This is going to be a huge play. Webull is my favorite broker. I'm using this right now. If you guys are wondering what I'm looking at to look at the charts and do all this at once and see the price right here.
Webull. Webull is going to be my favorite thing to analyze my stocks on. Well, I use TradingView, but honestly, I might just use Webull itself from now on, because I think it's a cooler interface and you guys can actually see some specifics of everything too, which I really like. So yeah, that's going to go ahead and be that. I pray it helped. That's how I'm opening this year. All the stocks I'm watching, that's the profit I'm up. And yeah, I'm just going to be fully transparent going forward. Just want to show you guys absolutely everything. Not going to be one of these mentors being cringe, making things uncomfortable, and just not trying to be truthful. I always want to show you guys the truth. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace. Discipline, discipline, discipline. I know you guys have heard of it, and it's time to stop struggling with it. Let's improve our discipline, okay? Let's stay humble. That's going to be the number one rule in order to stay disciplined. Stay humble. Even when you achieve your goals, when you start making the amount of money that you want, when you get the house that you want, when you get the car that you want, okay? When you start doing what you want to do, you still stay humble, okay? You still wake up every day. You pray to God. You work out. You stick to your trading plan. You stick to your budget. You keep putting money in the stash and you stay in stack mode. Don't lose yourself. And discipline in trading just refers to the ability to follow your predefined set of rules. If you're a break and retest trader, then you're going to be waiting for an area of resistance to be broken and turn into resistance, or an area of resistance to be broken and turn into support. Okay. Or if you're a short trader, you're going to wait for an area of support to be broken and turn into resistance. And if you don't see what you want, then you don't take your trade. Discipline ensures that traders stick to their plans, avoid impulsive decisions that lead to losses. So losses can come from a quick emotional stint within you. Okay, you might see a candle stoop up really fast, especially if you're on your 1 minute or smaller time frames. That can make you extremely emotional. I highly recommend you guys get off of your smaller time frames, such as the 1 minute and stuff like that, as far as planning out your whole trades. Make sure you guys are doing your high time frame research first, okay, such as your daily 4-hour. Plot out your trades there first. Then if you're going to enter in after seeing your levels and seeing where the market wants to go on a higher time frame scale, then feel free to go down to your 1 minute time frame. Okay, because 1 minute candlesticks can be extremely fast, spiking up and down, might making you do emotional things that's not even the trend whole time. So check your higher time frames first to avoid making emotional decisions. So discipline also involves psychological control, risk management. Okay, psychological control just ensures that you're not crashing out. Okay, even if you take a loss, you know to hop off the trades. Okay, you're gonna hop off the charts. You're not gonna destroy your P&L that you've been grinding hard for. Okay, and you're gonna come back stronger. Okay, you're gonna be like, okay, what could I have done to make sure that loss into a win? Was that setup clean? Was that entry clean? Talk to yourself, journal. Profitable traders treat trading like a business. When you sign up to trade, you are a business. You are no longer an individual, okay? You're a business. And a business is trying to use money to make more money. Okay, that's pretty much what a business is doing, okay? And providing value to people, okay? So you're gonna be trading. So when you're making money, somebody's losing. When you're losing, somebody's winning, okay? It's a very strategical system, okay? It's not gambling, okay? And you can definitely make some money if you stick to your rules. Stick to things like your stop loss, where your trade is gonna automatically close. And continuously learn, okay? Always learn, see how you can get better, see what you can change, okay? And if you're on a hot streak, if you notice you're profitable, stick to it, okay? The only thing that should change is your contract size, okay? Stick to your setup, don't lose your discipline, okay? And just don't trade for P&L, trade from areas of take profits from your entries, and set your stop losses if you are trading like Forex or futures, for examples. Keep it simple. And we'll explore why discipline is crucial, common pitfalls, and how to build it step by step. Step number 1 is going to be just waking up, praying to God every single day, being grateful. Okay, gratitude is going to help you be disciplined. Okay, it's going to help you stay focused. You're not going to lose yourself. You're not going to get emotional, whether you're winning or losing. Okay, you're going to be fine. And consider a day trader who sets a daily loss limit. Discipline means stopping when that limit is hit, no exceptions. Okay, and why discipline matters. Studies show that over 90% of retail traders lose money in the long run. Okay, so say someone puts in 5 bands, even if they make 2K their next trade, if you check in at the end of the year, they might be down like 8K. Okay, and that's because primarily their lack of discipline comes in. So even if you start making money within the market, you have to know how to control it. Okay, withdraw, especially if I'm a on my day trade account and I win a day trade, let's say I make $500, I'm going to keep 50% in my account. I'm going to go ahead and put 50% back in my bank account. Okay. So if I make 500, for example, I'm going to keep 250 in the trading account. This way my account's going to keep growing. My contract sizes can increase. Okay. And I'm going to go ahead and give myself 250. With that 250, what I'm going to go ahead and do is take 30% of that off, put that away for taxes. That's going to go ahead and give me the ample opportunity in order to keep stacking up, keep growing my portfolio over time. And discipline turns your real life from a game to really just a skill-based profession. And you're going to be able to stack up, take yourself serious, make certain power plays, and start building some long-term investments for your family. Okay, leaving some growth, leaving some wealth, and leaving some assets that are going to be important for people to potentially turn money into more money. Okay, so it's living an easier time. The more disciplined you are, the more of an easier time you'll have for yourself and loved ones around you. So it's worth it, trust me. And according to a report by the Financial Conduit Authority, disciplined traders have a 40 to 50% higher success rate. So trust me, wake up, pray to God, work out, okay? Create your routine, hop on the charts before market opens, okay? Or even plot your trades on higher time frames before they come. Utilize things like alerts so you're not sitting there staring at the charts all day, and keep grinding more income. Grind your business, do whatever you need to do, get more income, set your alerts by the time your trade's ready. You're gonna have bread ready, put it back into the market and come dominate, inshallah. So long-term profitability is going to require patience too. Don't expect things to happen overnight. Sometimes you got to hold trades for a long time, especially if it's shares or crypto. Okay, don't expect to see profit instantly. It's going to take time. Keep your portfolio separate. Try not to touch it, and try not to overtrade as well too. Overtrading is going to be when you're taking multiple trades over and over and over and over and over again, not learning your lesson. Okay, if you want to stop that, okay, one, think about your future. Okay. Is your family gonna eat like this? Are you gonna eat like this? Are you about to pay rent if you keep losing money because you want to be emotional? Okay, you can't afford to lose money like that. Okay, take it serious. Okay, so you can go ahead and use discipline within your real life, and how you do one thing is how you do all. When you wake up, you work out Monday through Friday. Okay, your brain muscles are gonna get trained over time. And you're gonna realize, okay, I can do this, I can stay consistent. And your brain's gonna pretty much be disgusted if you're not being disciplined. Okay, and once your brain makes that switch, it's gonna be a lot easier to go ahead and just dominate. You're gonna know what your setup criteria is, and you're gonna refuse to take anything else that's not it. Okay, if it's not your setup criteria, you just don't take it. Okay, and that happens by being disciplined. So I promise you guys, be as disciplined as possible for 90 days. Okay, and watch how all of these things turn into habits. Okay, it might be hard at first. Okay, waking up. Okay, pray to God every day. Have a gratitude mindset. Okay, work out every day, even when your muscles are sore, when you feel like you can't do it. Okay, Monday through Friday. Okay, or at least just 5 days a week. Choose a schedule that works for you. Okay, and flow with the market, preferably Monday through Friday, because that's when the stock market's open. Okay, do your research. Make sure you guys have some hours in order to study the market. Okay, have some study chart time. You got to be checking the chart every single day. It's about discipline. You guys have to understand the type of individuals that you're playing against. If you want to call yourself a trader, you got to change it all. I've had to really look at myself internally and change everything. I had to improve in every single way possible. I realized where my faults were. I realized I need to be more patient. I realized I need to have more of a long-term mindset. Okay, and this is helping me improve, becoming a better trader, have more of a positive portfolio, lose less money, and increase my portfolio over time. Okay. So some common pitfalls from lack of discipline. Without discipline, traders and human beings just fall into traps that erode your capital, your soul. And let's go and let's dive deep into these issues. So overtrading, okay, this is going to come from greed. Okay, God talks about this. Don't be greedy. Okay, this is something I used to be. I used to be extremely greedy when it came to my trading. I would make some good money, especially when it came to prop firms, for example. Okay, let's say I made $1,000 on my prop firm 50K account. Okay, I would try and go ahead and trade again. Okay, try to make like 1.5, then I would go down to 600, right? Trying to make it back up, and then, you know, I might end up break even. Okay, destroying everything. Because why? Because I wanted some more profit. Okay, once you take your trade, you be grateful. Okay, you be grateful. Okay, have a gratitude mindset. Okay, be grateful for every loss or W that you take on the charts. It just is what it is. You're making bread on the screen. Okay. And I'm disgusted at myself for even not taking advantage of that, but it's okay. I learned. And this is why I come on the charts and come on here to tell you guys not to make the same mistakes I did, because it hurt emotionally. Okay. Times where I was like, oh man, I could have used those bands. I could have used that money to do X, Y, and Z. I could have just reinvested that profit to make some more profit. Okay. But it didn't happen at the time. Okay. So don't overtrade, especially if you're a futures or Forex trader and you can just spam buy and sell. Be careful with that. Okay. Options, you got to be a little bit more strategic. You got to know what contract you want. You got to know what strike you want. Okay. It's a little bit different when it comes to options. It's harder to overtrade. But when it comes to futures and Forex traders, make sure you guys are just, please humble yourself. Okay. Humble yourself. Don't let that buy and sell button, don't let that instantaneous impulsiveness destroy your whole portfolio. Take logical trades. Okay. Take your time too. Market's not going anywhere. Take your time. And trading too frequently can lead to high commissions and emotional burnout. You might feel like trading is not for you. Okay, take your time. You got to keep going. You got to keep grinding. Okay. For example, let's say a novice trader buys and sells 20 times a day. You'll be losing money on fees alone, depending on the certain brokers. Okay. The more trades that you take in a day, you're going to be subject to fees, bro. And that fees is going to be hitting at your P&L. So you're not even going to be making as much money as you think you are, even if you are hitting some profitable trades. Okay, so try and do 1 to 2 trades a day, max. No more than 1 to 2 trades a day. Okay, I like to trade a couple times a month, a couple times a week. Okay, personally. Revenge trading, don't do this, man. This is gonna be one of the worst things you can do. When you take your L, you gotta be grateful. You gotta be grateful, because if not, you're gonna get mad. And you're going to think that you're right. You're going to think that the charts are doing something wrong. And it's absolutely not true. If the trade's not happening, it's just not happening. You can't chase losses with bigger bets. You can't take a L, put on double your size, and be like, you know what, I'm going to make up that loss, and I'm going to go ahead and make some money. Putting on double size, next thing you know, you lose again. Next thing you know, you're super down. And then you're emotional. You're upset at yourself. You're angry. Okay, you're like, trading, you know what, I don't know if this is for me, all because you got emotional. Blame yourself, don't blame the markets. You got to wait for the cleanest setup that you can possible. Okay, and if it doesn't work out, it's fine. This is why you manage your risk. You shouldn't even be tripping if you lose. If you're tripping when you lose, you're oversized. You're not trading within good risk parameters. You're way oversized if you're tripping if you lose. So chasing loss over bigger bets is not going to be the play. And this stems from ego. Okay, whenever your ego gets hit, you got to understand, okay, you know what, I'm not going to win everything. It is what it is. I took a loss today. Don't double down and try and get back at the market. That's just going to lead to wipeouts, destroying your account, destroying your P&L. There's been times on prop firms, I've been day 4 out of 5, okay, about to get a withdrawal. And I blew day 4 out of 5. I blew it, okay? Up like 3 bands on a 50K account, boom, destroyed it all in pretty much a day or two, okay? Hit the daily drawdown, and then day afterward, boom, destroyed it again. Okay, all because of ego, all because I was trading for P&L, not trading out of discipline, not trading out of consistency. Okay, ignoring my stop loss, thinking I was more right than the market because I just had a little hot streak. Okay, I had to humble myself. I had to realize, you know what, I can't keep taking losses like this. I want to get better. I want to improve. I don't want to keep being the same type of person that I've been. I'm not going to keep holding positions and hoping for a turnaround. I'm going to play logically according to my plan. This violates your risk rules. This violates your soul rules. Whatever you're trying to do for yourself and your family, you can't do it when you're losing more money than you expected. You got to stay down. Stay in stack mode. If you took a loss, come back stronger. Try again. But don't destroy it all in one setup. Take your time. Play an even cleaner setup and win that one. Start over again. Get in stack mode. Restart. Okay, you're good. God got you. Even if it's your last dollars, God got you. You're trim. Okay. Restart. Run it back up again. Try again. Plenty of times I've had to do that. Okay. FOMO. Don't let FOMO get to you too. If you just see candlesticks bursting, you just took a win, for example, don't be like, oh, it's a good opportunity to make some more bread. Relax. That's not the mentality. That's very greedy, extremely greedy, very ungrateful. And take your time. Discipline counters this with rules-based trading. And relying on rumors instead of analysis, okay, can be bad. Don't be social media trading. Do your research. Check out the TA, the technical analysis, and make sure everything just lines up together. Okay, don't be going off of what he and she says. Do your research, put it all together. Make sure it makes sense with your trading plan. Your trading plan is not going to be the next person's trading plan. Okay, figure out what works for you, and then you go ahead and you dominate with your plan. Okay, figure out what works for you and dominate with your plan. That's all you can do. Figure out what works for you and dominate with your plan. Okay, that's gonna be the best advice I can give you. Okay, and just don't give up. Okay, stay prayed to God. Keep grinding, even when you think it's hard, even when you think it's not for you. I promise you, just keep going. Keep going. If you feel like that loss is frustrating you, keep going. Keep going. You have to. You want to call yourself a boss, you have to be ready to take every single loss in the chest. Take it as a lesson. Let it power you up. Market even cleaner setup the next time. You got it. So discipline, it starts in your brain. Okay. So in your brain is where it's going to start first. Okay. Not in your body. You can pretty much almost ignore your body. Okay. But your brain is going to be the thing that controls your body in the first place. So treat trading, everything that you do is a marathon. Even working out. Okay. You can't get a six pack. Okay. And then be like, all right, I'm done working out. Like, no, you can't do that, man. You got to keep working out. You got to keep grinding, keep eating clean, keep eating healthy. Okay. Keep taking your herbs and doing what you need to do. Keep praying, keep getting your sun. Okay. You can't just get your six pack and then start eating junk food again every single day, not working out, not being disciplined. You'll lose it. Okay. And just like that bag too, when you touch that big bag, okay, if you're not putting it away, if you're not in stack mode, if you're not being disciplined, if you're not reinvesting smartly, okay, if you're not taking your time, you'll blow it. Okay, just like the six pack, you'll lose if you're not keeping it up, being healthy, continuously working out, you'll lose it. Okay, anything that you don't consistently keep up, you'll lose. Okay, God puts it in front of us every single day, even in plants, for example. Okay, plants, they need constant sun, constant water, okay, rain and sun constantly, okay, decent soil, okay, and that constant rain and sun has to constantly hit the plant in order for it to grow. Okay, it could grow into a giant bush, giant tree, okay, whatever it is. Okay, and that's how your account and your body works too. You need constant work, okay, constant protein, constant water, constant cardio, constant weight training. Okay, that's how you get a six pack. Okay, when I was getting my six pack, I was grinding. Still do Monday through Friday, not giving up. Okay, pushing myself harder every workout, being consistent, watching my carb intake. Okay, certain things like that. It's really gonna help you. You can head over to stackmode.net. Okay, I do have my free trading education ebook too. Okay, there's a couple other ones you can check out, but you guys can check out stackmode.net. Key Steps to Profitability ebook. Take accountability too. Okay, trade with some buddies if they're solid. Okay, trade with your wife or your partner if you guys are investment partners. Okay, have someone to keep you accountable. Okay, you can't be doing anything on the block and hiding it. Okay, post your trades even. Okay, journal your trades. Do what you need to do, and balance life. You can avoid burnout by scheduling breaks. Okay, if you're about to get angry on the charts and crash out, get off, go pray, be grateful. Okay, work out before the charts. This way, you're gonna be too tired to even be angry. You're gonna come on the charts with a logical mind. Okay, think of this from a survival perspective. We're supposed to wake up, hunt for the food, hunt for the berries, and then we eat food. Okay, not wake up and then just eat food. Okay, your body's supposed to be tired before we sit down. Okay, so before we sit down, we gotta be tired. So wake up and work out. It's really gonna help you guys calm your nerves. Okay, and really just put you in a clear headspace whenever you come onto the markets and show up. So the core of discipline. Risk management is discipline in action. Protecting capital is priority number one. Never risk more than 1 to 2% per trade if you're a new trader. My more extensive traders, you guys can do 1 to 10%. Position sizing is extremely important. You can calculate it based on your account size and your stop loss distance. Okay. So for example, 100K account, okay, your risk is gonna be 1%, that'd be 1K. Okay, stop loss 5% away, position size would be 20K. Okay. Stop losses and take profits. Stop losses when your trade's gonna close by itself, and you can set your take profit too to make it close by itself. And always set them deep explanation. Stop losses are limit losses, and it pretty much closes your trade if it goes down or up to a certain point. So then you don't lose more than you want. And take profit's going to close at an area and exit you, so you give your money. And diversification. Okay, be careful putting all your eggs in one basket. Okay, try and be invested in like 1 to 3 things. Okay, depending on what you play, because that way you're not going to be panicking, just hoping and praying that one thing goes up the whole time. Diversify. Okay, play geology and spread out your growth. And you could simulate certain scenarios too using paper trading and see how your strategies work out. Follow your trading plan too. Okay, put your Discord together, put your Notion together, your journal together. Write what you're going to do. Write when you're going to get in. Write when you're going to get out. Figure out what session you want to trade. If you're a forex trader, options trader, okay, figure out when you want to trade. Your performance, track it. Figure out how much you're winning, how much you're losing, how much money you're making. Okay, what's your year and returns? Okay, are you profitable? Okay, that's really going to be the main thing. Are you profitable at the end of the year? Okay, are you making money at the end of the year? Okay, forget the money you're making right now. Are you profitable year after year? That's really what's going to determine who's profitable and who's not for the most part. And avoid deviations. Okay, don't destroy your account being tempted to do anything that's fried or just not logical. Okay, if you see if it's a super bullish candle coming in and you're in a short, cut your trade. Don't hold past your stop loss with ego. Cut your trade. Okay, follow your plans. Whatever plan it is, you can write it wherever you need to, your phone, wherever. Just follow it, stick to it. Day after day, year after year, watch where you'll be. So, emotions, they can be the enemy, but you can transmute that into discipline. Okay, discipline is going to tame them. And you can use some certain key strategies in order to improve your emotional control. Okay, if you're feeling angry, okay, once again, have a gratitude mindset. Okay, wake up, pray to God, just be thankful that you have the opportunity to come onto the market. Okay, be mindful. Be mindful of how much bread that you're playing with and what you're about to do to your account. Especially if you start making more money, you gotta have your emotional control intact. Okay, because it's gonna hurt you. It'd be a lot more traumatic to lose 7 figures than it is to lose a band. Okay, so keep yourself grounded, keep yourself humble, keep yourself hungry. Step away after losses too. Okay, go outside, go ground, go give someone a hug. Okay, don't go mute, don't go shutting everybody out or being drawn. Okay, just because you're angry that you lost some money on the market. Okay, you're good. Okay, relax. Don't let it destroy your entire life or your whole day. Okay, that used to be me. You can't do that. Okay, be grateful. Okay, be grateful for the people around you. Okay, don't start treating anyone bad. And don't be frustrated all day just because you lost some money. Okay, come back onto the markets again, plan a better trade, plan a cleaner trade, and you'll be good. So, disciplined traders use stops to exit early and then re-enter on certain signals. Okay, undisciplined traders like to panic sell at bottoms. Okay, so have your stop loss set. You can't just sell when you see market just start dumping exponentially. Okay, have a plan. Be like, okay, you know, if market ever crosses under here, I'm going to sell my position. Okay, have a plan. You're a business person. Okay, be structured. Don't chase hype without plans. No meme coins, no meme stocks. Do your research. Do your fundamental research. Do your TA. And make sure it all makes sense. And play with the trend too. Playing with the trend is going to be a really good way, inshallah, in order to make some money. Okay, trading against the trend or trying to catch reversals, especially to the downtrend and like stocks or crypto, might not always work out. Okay, trying to predict perfect tops and bottoms, it's going to be a lot harder than just trading with the trend in general. Okay, so you can either wait for resistance to be broken and turn into support, or support be broken and turn into resistance if you're in downtrend. Okay, either one. So, what challenges do you face with discipline? You can go ahead and comment below. Head over to Stackmode.net. You guys can get my free trading education, free ebook, free course, book a free call. I'll catch you in the next one. So I pray to God. Keep grinding. Peace.
When the dollar starts becoming worth less, people start running to assets such as real estate, gold, and silver Today, we're going to talk about how to invest into gold and silver, why you should invest in the gold and silver, and what inflation is, and why people run to asset classes in the first place because the dollar starts failing. Let's jump into it, inshallah. So gold and silver are going to be hard assets that are going to be pretty safe to invest in, especially in an inflationary world where things just get more expensive over time due to the fact that more currency just gets generated over time. So the problem, the currency devaluation. So purchasing power is melting over time. So inflation isn't just about prices going up over time. It's about the value of the currency going down. So prices go up to correlate with that. So governments print money to service debt, which dilutes your savings over time. This is why I tell you guys all the time about the asset river. Okay. You want to always try and have your assets and your money flowing in your river. If things logically get more expensive year after year after year after year, then you have to have your assets flowing in a way that your money is always making you more money. Okay. So once again, I'm going to repeat. Your money should always be making you more money. Okay. Don't get outplayed by the certain calculations that just debase in the world normally. If things get more expensive over time, then logically, in order to counteract that, in order to feed yourself and your family, your money should always be making you more money. So we'll talk about the 1971 shift. So that's when Nixon ended the gold standard. And since then, the US dollar has lost over 85% of its purchasing power. And the hidden tax. Inflation helps debtors, which is pretty much just the governments, but it hurts savers. Anybody just stacking up cash in your bank account. If you have just a whole bunch of cash stacked up in your bank account, it's actually doing nothing but hurting you. Okay, even if you've worked overtime for a job before. Okay, you might have seen that you've actually had to pay more in taxes. Okay, the more cash that you have just stacked up stationary, the more that it hurts you. And it transfers wealth from you to the state, which goes back to the government. So in 1920, 1 ounce of gold bought a high-end suite. And today, 1 ounce of gold would be about $2,600. Okay, so it still buys a high-end suite. And the gold stayed constant and the dollar collapsed. Okay, so keep that in mind. The gold stayed constant while the dollar collapsed. So that means that having your money parked in an asset class like real estate, people are always going to need houses. Gold, people are always going to be wearing jewelry. And other asset classes that stay constant and only rise up while the dollar collapses are going to be the asset classes that you want to focus on for the most part. So gold, people call it the ultimate hedge. A lot of the times, if you pull up the chart, you'll see gold year after year after year after year heading in an upwards direction. Okay, it's not stopping. And due to the fact that something has to counteract the dollar. So gold is going to be the human standard that people just use whenever the dollar is crashing or the economy isn't in a good place. So here's why central banks buy it. And central banks are going to be the banks where me and you bank at. Okay, the banks that hold our fiat currency, where we can go pull out our money to pay our bills, go to the ATM, etc. And the fear trade. So gold performs best when real interest rates are negative. And that's when inflation is higher than bond yields. Okay, and central bank demand. So in recent years, China, Russia, and India have been buying record amounts of gold to de-dollarize their reserves. Okay, so they're trying to de-dollarize their reserves in a significant manner. Okay, buying less time storage for their fiat currency